Good morning, friends. Good morning, friends. Okay, so today we are starting with your exam oriented batch, or you call it as practice batch, or you call it as fast track batch. First 5-10 minutes I'll spend on little bit about the subject, and then we directly get into what we need to do, how to ace this subject. As I have told earlier also, 20 days and you will become an expert as far as the subject is concerned. And in these 20 days, you have to spend time with me in the class. As well, you have to go back home and spend time. Today you have India match. After class, still you will do AFM. After class, you will still do AFM by watching the match also, but you will have to spend time at home. So today in class, we will spend around 8 hours. Outside the class, I need around 2 hours to be spent. Whether you spend it after the class or the next day before the class, that's up to you, but you need to spend that time. Ideally, these 20 days, only one subject, AFM. If you're planning for other subject, that I leave a choice to you, but ideally is to do my subject alone at this point of time. Writing pads. Anyone's vehicle 5595, you have to repark 5595. Just read. Okay, so 2049 vehicle, these two vehicles need to be reparked. 2049. Okay, so what we are going to do is we are going to cover entire AFM in 20 days in the class, and outside the class what you need to do is spend 2 hours a day. That's the amount of time I want you to spend. Once you spend that 2 hours of time at home, we are almost there. What I cover in a regular batch, almost same amount of coverage you're going to have in this batch with some plus and minus. What are those plus and minus? You'll understand. In my regular batch, it goes on for around 200 to 220 hours. This batch, we are going to keep it around 130 hours, but covering almost fully, applicable for first time learners as well as you are a new you have already learned AFM. Only thing is, if you have already learned AFM from some other faculty, some of the points I'll tell you to forget and then learn the way I teach you, you will get expertise. So only point is, if you are a fresher, no problem. If you have already learned from me, no problem. You have learned from someone else also, no problem, provided you're ready to unlearn and relearn some of the points. You have to unlearn and do relearn. That is the point which you need to take care. Whatever I say you, please blindly follow for 20 days. 20 days. Why we want students to come in face to face or live online is, when students do it in the recorded mode, sometimes lethargy kicks in. You're not able to do your preparation. So these 20 days is difficult for you as well as equally difficult for me, because I'll also have to sit along with you. If a student is taking recorded batch, we are very happy because I'm not there in front of you at that point of time, but still the learning process continues. So people take in both the modes. Recorded is also fine, provided you are consistent, because good number of students are going to watch this in recorded mode. Only thing is consistency. Consistency is, would you be doing AFM today from 10 a.m. or 9:30 a.m. till 6 p.m.? I have my own doubts. If you are at home, after 2 hours, let me take rest for 10 minutes. The 10-minute rest become how much? 30 minutes, 1 hour. So that is the only problem. When I am in front of you, you are left with no choice. This guy is sitting in front of me, no option. I have to sit with him and then learn. So that is the only benefit you are getting by coming to this batch. And I want consistency, because most of you, I think, would be post articleship period, so wouldn't have that problem. You cannot say you have other commitments, some festivals are there, some extreme urgency, no issue, but otherwise it is very difficult. Today at my home, there is some small function there. I'm not going there because I've already committed to these dates. Today there is something at my home, but I've already told them I'll not be coming. So the point is, these 20 days, I want undivided attention of yours. Full 20 days. Even if a student is watching this in recorded mode later also, 20 days time you have to give to this subject. With 20 days time, we will become an expert as far as this subject is concerned. Some of you would have written your earlier exams. Sometime back, when I used to tell student AFM can become a tricky paper, people were not believing it. You already seen what happened in the January exam. So by now, people will realize, okay, this paper also needs some attention. Earlier, students were thinking, this guy is teaching so many things. Exam only easy questions are coming. Why is he teaching us so many things? Let's not learn. So now that seriousness will start coming in, saying that, okay, This subject also deserves its attention, because when September attempt happened, when mark sheets came to me, invariably students were scoring exemption in AFM. Unfortunately, some of you would have written January first time and you would have faced a challenge, or September you would have been very close to a good score and you would have missed it. All that is fine. We are going to cover entire AFM in 20 days in a manner that you learn everything. How am I going to cut down on the hours also? I'll tell you now itself. There are few questions, approximately 50% of the question we will do it together. Together means you have to write along with me. 20% of the question or 25% of the question, I will only solve it. You will only be in listen mode for some question. If I feel it is a repetition, or I feel at this point of time you have to be only in listen mode, I'll tell you to be in listen mode. There is some set of question which you will do at home, and I will discuss them after 2 days or 1 day, which is where that extra 2 hours I'm asking you. I'm asking you 2 hours on a daily basis to do the extra questions which I tell you at home. So this is how we are going to cut down on the hours, but not cut down on concepts, not cut down on question. None of them. Questions may some cut down happen, but concepts to no cut down. Concepts is 100% there. Questions are almost going to be there. 300, 350 questions, we may solve it together. 100 questions, I may say, no, you don't solve, you relax. I will only do it. You be in relaxed mode at that time, understand what we are doing. And maybe another 100 question, I'll not be in front of you. You'll be doing at home. And next day I'll ask you, what did you do? When I say you have to do, means you have to do. That's all. You have to do means you have to do. Don't tell me, sir, I became very tired. You are already torturing us for 10 hours. After that, you tell us to study for 2 hours. What happens is students somewhere create saying that, oh, I'm studying so much, I'm doing hard work, now I have to take rest. Don't create that mode for yourself. You're doing something, continue, because I cannot sit with you for 18 hours. Else I am okay. I'll say after 12 hours also you sit in the class, you do homework, I'll sit next to you. But I also need to go back home. Otherwise, I would have been okay to sitting here and you doing homework with me also. But that extra work alone, you have to do on a daily basis. On a daily basis. Either you do after class or the next day before class by waking up early. That's I leave a choice to you. Some of you are early, you may find it good to learn it early. That is, you wake up early, or you want to study late night. That's up to you. Again, I'm saying other commitments you have, you do anything you want to do with the AFM book in it. With the AFM book, you want to watch cricket match today, you will watch it with AFM book only. Nothing without that. Nothing without that. You have to learn. You have to learn. Only me explaining in the class, will it give you the full learning? No. If that was to give full learning, then all my students should score same marks. All my students should score same marks. Some student is scoring more, some student is scoring less, which indirectly means I only play a small part. The bigger part has to be played by you, and you will play that bigger part only by doing consistent preparation. Consistent preparation is very critical. 20 days we will learn extra time at home. At home, spend around 2 hours. I feel around 2 hours if you spend, you should be in a position to complete it. Okay, this is basic start I want to give. Few requests. I think some of you would know about my style of teaching. 9:30 means it will start at 9:30. Coming at 9:35, 9:40, 9:45 will not serve any purpose. You have to be in the class by 9:30. You come late, you will not miss, you will miss out on certain important. Every day, what is my ideal thing is the toughest area I want to do at 9:30. That is the ideal approach I'll follow. Toughest area, because you are fresh, I'm also fresh. At some point, I'll also get tired during the day. So that time, maybe slightly relaxed topic we will do, or I will do the question, you be in relaxed mode, because some areas I'll have to balance it. It is little difficult for a person to have that attention from the morning till. And in my case, I've already taken a class from 6 to 9, and now I'm coming for 9:30 to till. So it is difficult. But still, as long as you are attentive, you are able to focus, great. 2, 3 things. At any point of time, you want any extra explanation, you want me to cut down speed, increase, though nobody will tell, but cut down speed at any point of time you want, you let me know then and there. After 10 classes, sir, that class you went faster, I can't correct it now, I can't correct that now. Any point of time, be open to feedback. You don't want to tell it in the group, tell me one to one. You don't want to tell one to one, send me a message in WhatsApp. We also float a form, Google form, but that will come after 3-4 classes, 4-5 classes. Already 4-5 classes will be over. So at any point of time, you need something from me. Please tell me then and there. If you tell me that this has to be corrected, I'll correct. The live online students, any point of time you have a doubt, you can type it in the chat box. You can unmute and say, but unmute without any disturbance, because some of you may have some net connectivity disturbance. So if you are unmuting, please unmute properly and say, otherwise type it in the chat box. I'll clarify your doubts. Some student may watch it in the recorded mode later. For them, any point of time, I'm okay to answer any doubts of any student. I think some of you would have already experienced it. And any point of time, any doubts is there, send a message to me. You will get your doubts clarified. Most important part is, you have come here for two reasons. One is, you are not consistent in your preparation. Let's believe, let's accept it. You are not consistent, so that is why you have come here. You have to sit next to me and then learn. That is one reason. Second, at some places you want extra guidance, which is what I'm going to give. Otherwise, I'm not trying to do something extraordinary for you. These are the two reasons people come for classes. One, consistency is not there, because when you do on your own, not at your end. I have tried recording some batch without student. I also delayed saying that I'll do it tomorrow, I'll do it tomorrow, I'll do it tomorrow. This batch which I'm recording now, easily 100% will get over in 20 days, because you are there. I'm also under pressure to come on that time, take the class. So it is two-way. I am also lethargic in case you are not there, and you to 100% will become lethargic if I am not there. So you have to come to the class, be it live online mode, be it face-to-face mode, or be it recorded mode. All the three, you have to do consistency. Consistency is the most critical part. These are certain ground rules. Now I get to subject. As you are aware, this is a 30-mark MCQ paper and a 70-mark descriptive paper. I'll quickly discuss the format. 30 marks will be completely practical in nature. Practical in nature is problem solving, most of the question. MCQs don't need a separate preparation. You don't need any separate preparation for MCQ. Take the concept book. You have taken two question bank. Concept book. Okay. So what will happen is, you will have to, MCQs doesn't need a separate preparation. What happens in MCQ, you'll understand as we proceed. 70 marks descriptive paper. What ICI does is, they'll ask 6 questions, 14 marks. Question 1 is mandatory. 5 questions are there. You have to choose 4 out of 5. Problem is, every 14-mark question may have a theory component in it. Every 14-mark question, mandatory question could have a 4-mark theory. Question number 2 could have a 6-mark theory. Question number 3 could have a 2-mark theory. Question number 4 could have a 4-mark theory. 5 may not have. 6 may again have. Most of the question, theory will be there. At least 4 out of 6 theory will be there, or 5 out of 6 theory will be there. Indirectly, what will happen is, you'll be forced to answer theory for 12 to 16 marks in exam. 12 to 16 marks of theory is mandatory for you to write in exams. So then what do I do for theory? All that later discussion. But important part is, theory cannot be ignored in the subject. Theory cannot be ignored in the subject. 12 marks to 16 marks of theory you will answer. How you prepare and all, we'll see later. That and all I'll tell you as we proceed. But keep a mindset that it is not fully practical paper. There is a theory component as well. Many students ignore theory and proceed to the exam. Moment you ignore theory, you are now fighting with ICI only for 80 marks. And this paper, I feel, needs an exemption. Exemption is bare minimum I expect from student in my subject. Reason is, auditing will pull down your score irrespective of whatever you try to do. You could be a good student, theory is confident, but still it pulls down the mark. FR depends, sometimes difficult, sometimes easy. AFM generally is the exemption paper in group 1. Or if you're writing both the group, it can in fact take care of your group 2 score also, because group 2 also has papers where scoring is becoming difficult for students. So this paper, we are working with a mindset of 60 plus. Even in a difficult paper, we have seen students scoring exemptions. So it's not that exemptions are difficult in this paper. Mindset is only exemption. First class itself, I'm telling you. Don't try to predict the paper. Student are now asking me, sir, will it be a tough paper, will it be a easy paper in the next attempt? You also don't know, I also don't know. I can tell you anything. I'll tell 100 students easy paper, 100 students tough paper. 100 students will say, okay, sir has predicted correctly, next time also he will predict properly. Doesn't matter. Point is, don't try to get into these prediction techniques. Nobody would have predicted that in the January exam a area came called a Sharpe's optimal portfolio. Nobody would have predicted that question is going to come in exam, or very rarely somebody would have predicted that. Maybe next attempt a Black-Scholes model question comes, which is considered to be one of the area which is not tested for a very long period. Don't focus on what I'm saying as of now. Black-Scholes or all that I'll discuss later, but only thing is prediction is difficult. Prediction is difficult. If prediction was possible, I will complete AFM in 3 days, exactly predicting and tell you that only learn this much. Why are you learning everything? Student problem is, when we teach, you want me to teach everything. When you learn on your own, you want to learn only half of that. That I don't understand. When you want from me, if I tell today that I'm not going to teach Forex, then you'll say, sir, we are not joining your class. You're not teaching Forex. And when I ask you, will you prepare Forex and go? You say, no, sir, I don't want to prepare Forex. I'll go to the exam without Forex. That I don't understand. From me, you want everything. But from you, when I'm asking, you're saying, no, I will not do Forex. I'll not do derivatives. These two, I want to skip and go to the exam. Can I skip it? If I skip it, my AFM will become half. Forex derivatives, you tell me to remove. In my regular class, I take around 35 sessions for Forex and derivatives put together. And other areas around 45 sessions. So if I remove these two, indirectly I can complete this in 10 days now, the entire AFM, ignoring these two chapters. So point is, no prediction, no selective preparation, none of them are going to work. This is the sequence I'll mostly follow in the class. I'll be starting with mutual funds and then I'll keep going on. Nothing doesn't really matter, but this is broad sequence. I'm going to start today with mutual funds and then keep proceeding forward. This is broad introduction from my side. I don't have much to say on the intro side. Paper pattern we have discussed. One first day itself, I say theory is important. Theory is important. We cannot ignore theory. Participation I want in the class as much as possible and give feedback whenever needed. Our class will start sharp at 9:30, end at whatever time I have mentioned. I may not deviate much on the timelines. We will try to cover all days classes are there, no break in between. Don't say, sir, I have become extremely tired now, sir. You are taking classes for so many days. I'm also tired. You are also tired. I'm also tired. So still, we'll have to go ahead with this over the next 20 days, continuous preparation, steady preparation. I'll keep giving some break in between, but continuously we will focus on this. Clear? Now we will go to mutual funds chapter. I have given you two books. One, there is a concept book, which is the most important material for your later discussion. That is whenever you do revision. And there is a question bank which covers all the question. Whoever has not taken the material, whoever opted for hard copy, please take one concept book, one question bank. If you have not taken, take it from there. If you have opted for hard copy of the material, okay, one concept bank and one question bank will be read. Concept book is very simple. It is going to cover all the concepts at one place, and by reading this, I can cover entire AFM in 1 day, 1.5 days. Question bank is extra practice which I do. Some students read concept, they want to practice also. Practice is also part of my concept book only. You will see some MCQs for practice. It is already part of the concept book only. Still, you want to practice a proper question, then you have to go to the other book. In class, I'll do concept, question. Sometimes I'll do question and then concept. I'll do mix and match. Depends on whatever is comfortable for me to teach, depending on the reaction. Sometimes concepts first, question later. Many times question first, concept later. But I don't expect you to come with any knowledge of AFM. I'm making it very, very clear. You have knowledge of AFM, great. No knowledge also fine for me, because I have now devised in such a manner that it is perfectly okay for the first time learner. I've just added 2 more days extra. That ensures that even the first time learner will not find it difficult. You already know, you may have to relearn at some places. Unlearn and relearn, that alone you will have to take care. Let's start with mutual funds chapter now. Okay, let's first understand what is mutual fund. This is page 89 of the concept book. Page 89 of the concept book. You'll have to keep the concept book open. Our concept book no need to open also. Concept book you refer in the screen. Question bank alone you keep opening whenever I say. Concept book mostly you can refer the screen unless you want to note down something. Okay. So we're going to start with this. If you have not opted for hard copy of the material, you can open your mobile phone and see also, or you can refer the screen. That I leave it to you. Okay. Let's start with this now first. First thing we are going to learn is what is mutual fund. Now, this is a very important instrument in the practical world. What does this instrument does? All of you believe that I am a good fund manager. Who is a fund manager is I will collect money from all of you. I'll collect money from all of you. You are giving me 10,000 rupees. Every student is giving me 10,000 rupees. And I create a mutual fund called Dinesh Jain Mutual Fund. I create this mutual fund today. In this mutual fund, you give all the money. You give all money. You are the unit holders of the mutual fund. The name is called unit holder. What is happening is every student says we want to invest in gold. You are not directly investing, you are giving the money to me, and I create a mutual fund called gold mutual fund. You want to invest in equity, I create a mutual fund called equity mutual fund. You want to invest in silver, I create a mutual fund called silver mutual fund. There is a objective which I'll give. My objective will say Dinesh Jain Mutual Fund will invest in cryptos. If you like the crypto investment, give the money to me. I'll take all your money together and make investment in cryptos. Make investment in cryptos if you are okay with that. India doesn't have a crypto mutual fund, but there will be an objective. The scheme will tell what is the objective. What can be the objective? Investment in equity is possible. In equity, there can be small cap, there can be mid cap, there can be large cap, there can be flexi cap. Don't worry about these names and all. Different. There can be Indian equity, US equity, China equity. Whatever is my objective, I will tell you the objective. You like the objective, please give money to me. You don't like the objective, you need not give money. After giving the money, you cannot tell me do this, do that. All that is my role. All that is my take. Your only role is to give money to me, and I will tell you what I am going to do. I will say I'll invest in Nifty 50 companies. Which company you cannot ask me. I will tell I'll invest in these companies. You are okay, give me the money. Not okay, don't give me the money. So what is mutual fund? It pools money from so many people. Mutual fund is a financial instrument for long-term wealth creation as well as short-term investment. What do I do? Large number of investors. There are some mutual fund which have collected 1 lakh plus crores from the people. 1 lakh plus, more than 1 lakh crores have been collected. An example is Parag Parikh Flexi Cap Fund. They have collected around 1 lakh 40,000 CR from people, and they are investing as per the objective of the scheme. Invest them as per the investment objective. I will invest it as per my objective. Create returns for you. Create returns for you. In what form and all we'll discuss later. This is what a mutual fund does. What do? I collect money from all of you. You are the owner of the mutual fund. You are the owner of the mutual fund. I am the manager. I'm like the board of director. I'm the board of director. Board of director will decide what to do. You are the shareholder. I am the board of director. I'm the director. You cannot tell me what to be done and all. You can pass a resolution. You can change the fund manager if needed. All that you can try. But you are not liking me, please move out your money outside. You can enter into mutual fund, you can exit out of the mutual fund, all that is fine, but you can never tell me what should I do. So I am a financial doctor. When health is a problem, you go to a doctor. You want to manage wealth, come to me. I am a financial doctor who will manage your money, who will manage your money. I know where to invest, where not to invest, when not to invest, all that call I will take. If you are liking my performance, you continue with me. Not liking my performance, you can exit. So a mutual fund will have all of this. There is a sponsor. A sponsor is an entity who tells that Dinesh Jain Mutual Fund is a good mutual fund, or let's take an example, ICICI Mutual Fund. Who can be the sponsor? ICICI Bank. ICICI Bank is the sponsor. Moment you hear the word ICICI Bank, you get confidence. Okay, ICICI Bank is there. It's a good fund. They are putting some money. We are also putting some money. We don't have any problem with ICICI Bank being there as the sponsor. Sponsor will give the initial capital. Will give the initial capital. Trustee. Who's a trustee? Trustee will ensure that I perform properly. When I perform properly means not whether I buy or sell and all. They will ensure I'm not doing any fraud activity. I should not do any fraud activity. That is the only purpose of the trustee. Trustee will ensure that I operate in the best interest of the investor. What can be a fraud activity? You gave me the money, I invested in a useless company by taking some money from their promoter, by taking some money as a bribe, some money as a bribe I took and put it in some useless company, put it in some useless company. Who will lose the money? You will lose the money. Do I lose? No, I only gained money, bribe, I got bribe. So trustee will ensure, trustee will check whether there are some signs of any fraud activity or not. Trustee is there, SEBI is there, AMFI is there. So many people will ensure because it's public money. Public money, when you are handling public money, you will have to be extremely cautious. AMC is called Asset Management Company. This is the exact company where you give the money. ICICI Asset Management Company. I manage the fund. I am an employee of ICICI AMC. I manage your money. For managing this money, I incur a lot of expenses. No, I need an office, I need employees, I need to incur some documentation cost, I need to incur some SEBI compliance cost. So all of this expenses I will recover from your returns. I'll recover from your returns. I incur a lot of expenses. I have to now, I may incur employees. I'll have a 50-member employee team. I'll have an office. I will have some marketing team. I will do some advertising. You will see some advertisement coming in the market from SBI AMC, ICICI AMC. All these advertisement, I incur expenses. I will recover all these money from the unit holder. How do I recover? You gave me 100. 100 became 120. But I'll give you back only 118. I'll give you back only 118. What is that? 2? 2 is the expenses. 2 is the expenses. 100 became 90. I'll give you only 88. I lost. On top of that expenses, I'll recover. On top of that expenses, I will recover and give you the balance money. Give you the balance money. That is technically called NAV. What are those and all? We'll see later. And investor or unit holder. Investor or unit holder. The investor or unit holder are the people who are ultimately giving us the money, and indirectly we are working for the unit holder. We are working for the unit holder. At some point of time, post your qualification, you may work in a mutual fund as part of research team, and as you grow up the ladder, you may become a fund manager. That's a very lucrative position in the practical world. Very few fund managers are there in India. So you may become a fund manager. A chartered accountant or an MBA normally becomes a fund manager. So if you are having good understanding of research, you will work in an AMC first, and later as you become good, as you learn more, you can ultimately become a fund manager in a mutual fund. This is broad role. Okay, what does a mutual fund do? Is collect money, invest money, earn money, incur expense, pass on the net money, pass on the net money to the people. Clear? In this context, I have my first concept, MF return versus individual return. Now, what is this concept? Let's understand this first. I will tell you to nothing to note down. You want to make running notes, you make. When I problem solving, you have to do it along with me. Running notes, if at all you want, otherwise everything will be crystal clear. Okay. MF return versus individual return. I am investing on my own. I earn 20%. I invest on my own. I earn what? 20%. MF is also earning 20. I will not get 20 from MF. If MF earns 20, I'll get only 18% or 17%. So first concept is my 20 is equal to 22, 23 of MF. My 20 is equal to what of MF? I want 10% return. How much should the mutual fund earn? How much should the mutual fund earn so that I get my 10%? So that I get my 10%. There is a formula, all that I'll discuss later. Okay. First concept is I can invest and earn 10% on my own. Can the fund give me 10%? Yes, if it earns 12, 13%. If it earns 12, 13%, it can give me how much? 10%. This is the first concept. What should the mutual fund earn so that I get my whatever number? The question will give you the number. Clear? Any doubts on this? In this, it can be with opportunity cost, without opportunity cost. What is with and without opportunity cost? You will understand in the question. But first concept is, how do I equate the MF return with the own return? MF return with the own return. Let's now get into question. I'll discuss the formula and all with the question only. Formula, everything we will go there. Come to page 179. Page 179. 180 of the question bank. 180 of the question bank. Mutual funds chapter. Mutual funds chapter. Okay. Every question I have written something for my clarity. I'll give you this later. Okay. Question 1 we are not going to do. I have written a note saying that can be ignored. Exact adjustment is covered in the next question. So you also can ignore it. I will also ignore it. You can also ignore it. I'll give you all these notes later on. Okay. Can be ignored because exact thing I'm covering it in next question. Let's now come to 2A. Question 2. Question 2. I will read the question. We will read it together. You will ask me questions if needed. I'll also ask you a question. That's how we will go. Mr. Alex, a practicing chartered accountant, can earn a return of 15%. Can earn a return of 15% by investing in equity shares on his own. I am a chartered accountant. I can earn how much return? I want participation. I'll keep asking. 15% if I make own investment. He is considering a recently announced equity based mutual fund in which initial expenses are how much? And recurring expenses are 2%. I am going to put it in a mutual fund. The mutual fund has some expenses. What are those and all? We'll understand. Initial expenses there, recurring expenses there, 6% and 2%. Part 1 very simple. How much should the mutual fund earn to give a return of how much? 15% per annum. I am earning how much on my own? 15%. Can the mutual fund earn 15 and give me 15? No, it has to earn 16, 17, 18. Let's understand how much it has to earn. Clear? Any doubts on the concept? Now, right. MF return is equal to, will do along with me. Question 2A. My request is please solve along with me. Question 2, sorry, question 2. Solve it along with me. There are questions where I'll tell you to be in listen mode. This is a practice batch, means you have to do together. We have to do together. Don't get into lethargy mode saying that no, I will not do, let him do alone. That does not work. I want you to do it along with me. Question 2, right. I'll first give you the formula and then I'll give you the logic of the formula. Most of the places I don't want you to remember the formula. Maybe 10, 15 formula I'll tell you to remember the entire AFM. 10 is also on the higher side. Very limited you have to remember. Write the formula, I'll give the logic in some time. MF return is equal to own return divided by 1 minus initial expense ratio plus annual expense ratio. 1 minus initial expense ratio annual expense ratio. Let me apply the formula, then I'll explain the logic of the formula. Few places I need to apply and then explain, because without numbers some students will find it difficult to grasp. Tell me how much is the own return here? 15%, write it as 0.15. I prefer to work in decimal. 0.15. Sometimes percentage you may make a mistake. 0.15. 15%, 0.15. Some initial expense ratio is given. What is that? 0.06. 0.06. Logic of the formula will come to you in some time. 0.06. Initial expense ratio 6%. What is the annual expense ratio? 2% is 0.02. You divide the first one, give me a 4 decimal answer. 0.15. Live online guys, you please type it in the chat box. 0.1596. %17.96% is what I'm getting. Any doubts on this? First the calculation, okay? Logic I'm yet to explain. Logic is something I'm yet to explain. Any doubts first on the calculation? Now coming to the logic. I give 100 rupees to the mutual fund. I hope you're done with the calculation. Anybody has any doubts on the calculation? Formula logic I'm explaining now. I am giving 100 to the mutual fund. Whenever you give me money, it is called new fund offer. Like we have IPO, here it's called new fund offer. You gave me 100. What was the initial expense ratio they've given? 6%. Initial expense ratio is 6%. You gave me 100 rupees. I got only 94 rupees. I got only 94 from you. Why? Initial expenses. What are initial expenses? Prospectus, some underwriting charges, all these expenses I will incur whenever I'm doing an IPO. Like IPO, here it's called new fund offer. I got only 94. How much return you wanted? You want 15% of 100. Just because I got 94, you will not say give me 15% of 94. You want 15 rupees. Earlier on 100, but I am seeing it as not 15 on 100. I am seeing this as 15 on 94. I am seeing this as what? 15 on 94. I have to give you what? 15 rupees by investing how much? 94. Can you tell me what is this percentage? 15 by 94. 0.1596. I have to give you what? 15. 15 on what? 94. 15 on 94. Okay, I thought to give you this second surprise for me. Whatever I earn, I have to incur some expenses. What are the expenses I incur? Recurring expense. 2%. I earned this. When I was giving you, 2% got deducted and you got only 13.96. If I'm giving you, 2% will get deducted in this. So I have to earn extra 2% to meet the expenses. Extra 2% to meet the expenses. I'll explain the logic of the formula one more time. I have to earn 15 rupees on 100 if I had got 100. Unfortunately, I got only how much? 94. So I'll have to earn what? 15 on 94. I have to earn 15 on 94. Along with that, another what? 2% for expenses. 2% for expenses. I will earn 17.96. 2% got deducted. 15.96. I say 15.96. You are saying no, it is only 15%. You are saying it is only 15. Why? Because 15.96 on 94 is 15 on 100. Is 15 on 100. This is the logic of the formula. This is the logic of the formula. Clear? No formula remembering. What is the logic? I can earn 15. I wanted 15 on 100. When it comes to me, I'll have to give you 15 on 94. I have to give you 15 on 94 along with that extra 2%. Extra 2%. Clear? Any doubts on the formula? This is one scenario. Let's look at what is the second scenario then, which is where with opportunity cost and without opportunity cost will come into picture. Any doubts first on the formula? Same thing is question 1. Question 1 is the same thing, just applying formula. I said ignore. You can also write in your notebook ignore. I'll give you this note later on, okay? I'll give you this note later on. Technically, question 1 can be ignored. I don't even want you to do at home, also not needed. Class also not needed. Faculty discussion also not needed. Nothing is needed for question 1. Coming to 2. Mr. Alex current professional income is 40 lakh. His portfolio value is 50 lakh. Now he is spending 10% of his time to manage his portfolio. If he spends this time on profession, his professional income will go up in the same proportion. Professional income will go up in the same proportion. I am Mr. Alex. My current professional income is what? I want participation. I'll keep asking. I'm made to read the full question. Current professional income is 40 lakh. Portfolio value is what? 50 lakh. And I'm spending what? 10% of the time to manage my portfolio. So I have 10 hours in a day. 1 hour I spend for portfolio tracking. 9 hours I take classes here in Bharadwaj Institute. With the 9 hours classes I take, I earn 40 lakh rupees on my profession. I earn 40 lakh rupees on my profession by taking classes or by working somewhere. Or as a practicing chartered accountant, I earn 40 lakh by spending what? 90% of my time. I have a portfolio of how much? 50 lakh rupees. I'm spending 10% of the time to manage. What is the management? I have to read equity research report. I have to read annual report. I have to read quarterly report. I have to look at the announcements which are happening. All this is taking some time of mine. Because I spend time there, can I take that class also for the 10% of the time? Can I come to the class and manage portfolio one side and take class? Not possible. Okay. If he spends this time on profession, his professional income will go up in the same proportion. Instead of taking this managing the portfolio, what I can do? I can take extra classes. If I take extra classes, what will happen? I will earn more money. Okay. He is thinking of investing into a multi-cap fund. Fund NAV will grow at what? NAV means after all expenses. Okay. You will understand this later. What is NAV and all? Fund will give you what return? 13%. How much can you earn on your own? How much can you earn on your own? First line, 15%. I can earn 15%. If I give to mutual fund, he'll give me how much? 13%. Obviously, managing on own is better. But there is one issue. When you manage on own, I had to cancel one batch of AFM. I had to cancel one batch of AFM. I lose some money out of that. I lose some money. That is called opportunity cost. That is called opportunity cost. Some of the top CEOs, of many companies are top CFOs of many companies who know a lot of good things about it. They don't manage their own funds. Reason is they have to take care of their company or manage funds. Not possible. No, I have to take care of the company. CEO will be there with the company almost all the time. He has to, outside the office hours also, he has to keep thinking about the company only. Mukesh Ambani is not going to manage his own funds. Even if he has knowledge also, he is not going to manage his own funds because his work is to do something else. So here, the chartered accountant can do two things. Either invest on his own and earn income only for 90% of the time, or give the money to mutual fund. If you give the money to mutual fund, your income can go up, but your investment income can go down. That is okay or not okay, I don't know. I'll have to do the analysis. In this scenario, we will do cost benefit analysis. Formula and all will not work. We will do cost benefit analysis and decide whether MF is better or own investing is better. I don't know. Any of them can be better. Own investing can be better. When can own investing be better? It's not 50 lakh, it is 50 crores. Maybe that 2% makes a lot of sense in 50 crore. On 50 lakh, maybe 2% doesn't make any sense. I don't know. I'll have to do the calculation. Understood the question? I'll focus a lot of time on reading the question. Solving is the easier part. Reading the question is the most important part. Any doubts on the question? Any doubts? I'll repeat again. My income is how much? 40 lakh. How much time I'm spending on profession? 90% on profession, 10% outside the profession. Can I put that 10% on the profession, increase the income and lose 2%? Which is better? I don't know. I will see. Clear? Any doubts on this? Now, right. Cost benefit analysis of own investing. Cost benefit analysis of own investing. Particulars calculation amount. Of own investing. Particulars calculation amount. Benefits. See, only one benefit. If you do investment on your own, income will go up. Income will go up. Earlier I was spending what time on my profession? 90%. With 90% I earned 40 lakh. Extra time, extra earning. Extra time, extra earning. If you do, sorry, not own investing. Okay, okay, we are doing own investing analysis. Okay. Benefit is increase in investment income. Increase in investment income. I can do own investing benefit analysis or MF investing benefit analysis, whichever way you do. Increase in investment income. If you do investment on your own, how much you will earn? I want participation. How much you will earn? 10%. If you give to the mutual fund, how much you will earn? So by doing own investing, I earn extra 2%. I earn extra 2%, but there's an opportunity cost. What is that? We'll see in some time. Own investing, what? Extra 2%. On what portfolio value? 50 lakh. This 50 lakh 2% could be low. 500 lakh or 5 crore 2% could be good. I don't know. We are just doing the analysis. So increase in investment income is 50 lakh, 15% minus 13%. 1 lakh extra you will earn. This is the benefit of doing own investing. Or you can say this is the disadvantage of doing mutual fund investing. In the mutual fund, this is a disadvantage. Own investing, this is an advantage. Any doubts in this? Only one advantage we have. Cost. Loss in professional income. Loss in professional income. Loss in professional income. What is the loss in professional income? I am spending 90% time. Can I increase it to 100? If I increase, income will go up. That what is not going up is my loss. What is not going up? Ideally, it can go up. When will it go up? If you spend the time on profession. What are you doing? Spending the time on investment. What are you getting out of that? Extra 2%. Now, loss in professional income, right? 90% equal to 40 lakh. I spend 90% time and I earn how much? 40 lakh. 100% equal to question mark. Do cross multiplication. 40 lakh into 100 by 90, cross multiplication. 44 lakh, 44,000 for 44. I am losing that extra 4 lakh 44, 444 because of my stupidity of managing money on my own. I feel I can manage my money on own. Good, I have no problem. By doing that, you're earning extra 1 lakh. But you're losing 4 lakh 44,444. This is the disadvantage of own investing. In the other ways, it would become advantage of the MF investing, advantage of the mutual fund investing. You're losing how much? 4 lakh 44,444. Assuming question says, if he manages this time on profession, he will not earn anything extra. Then what is the point of doing spending time on profession? I'll not spend time on profession. If I don't have opportunity cost, no need to do this, do own investing. For example, I am taking classes here. After classes, I'm free. I cannot take any extra batch of classes and all. I'm not working anywhere. I can manage my portfolio. I don't have any opportunity cost. If I have an opportunity cost, don't incur that opportunity cost. Don't incur that opportunity cost. What is the opportunity cost here? 4 lakh 44,444. This opportunity cost is for own investing. And if you go through MF investing, this is an advantage of MF. This is a advantage of mutual fund and disadvantage of own investing. Able to understand this? Any doubts on this? Clear? Net loss in own investing. Net loss in own investing. You can give two names to this: net loss in own investing, net benefit in MF investing. For MF, it is benefit. For own investing, this is loss. Put it very simple, you should put money in mutual fund here. You should put money in mutual fund here. There is a loss in what? Own investing, and there is a benefit in mutual fund investing. How much is the value? 3,44,444. Now, many students say, sir, this is not there in study material and all. This adjustment, don't worry about it. This has come sometime in exam. My role is to explain what can frequently come. Whether it comes, not comes, don't worry about it. Because students think that, why are we learning extra and all? I've tried to cut down the concepts to the extent possible. Cutting down further will not serve purpose. Okay. 3,44,444. So, question asked, you are requested to advise whether he could invest in multi-cap fund. Yes, he should invest. Write the conclusion. Yes, he should invest, and net benefit is 344,444. He should invest. He should invest in multi-cap fund. Multi-cap fund, and net benefit is 344,444. 3,44,444. Clear? Any doubts on this? Okay. Initial set of question till you get used to my way of teaching. I'll keep giving you some time. So I'm giving you 1 or 2 minutes to go through the solution. Any place you have any doubts, you let me know. 1 or 2 minutes for you, and then I proceed ahead. So this is just to recap what you have done in 1 or 2 minutes. Okay. Now, later on, whenever student sees this, even in a recorded mode, whatever gap time I'm giving you, if you are confident, you can keep watching the video. You want a gap time, you take this gap time. In the gap time, what is also needed is, come here. Please do a marking, easy, moderate, difficult, your wish. Easy, moderate, difficult, your wish. I will not tell you the marking. It's easy for you, mark easy. Moderate for you, mark moderate. Difficult for you, mark difficult. Why is this needed? Later on, you are not going to see easy questions. Easy question totally ignored. Easy question totally ignored. Moderate, you may see it once. Difficult, you may see day before exam. So please mark. Also, there's a space given here. This space is that extra 2 hours no after the class. In the class, I find it difficult. After the class at home, you will go through this, and if you find any key adjustment which you want to note down, please note it there. You don't want to note down, don't note it. If you note down, it will become very easy for you to revise day before exam. It will become very easy for you to revise day before exam. I have given you space there to note down key adjustment. Don't ask me, give me key adjustment. I can't give you. You write. I will say easy for everything. Then you will say not easy. It's not easy. So you do your marking. Marking is 100%. During the class itself, you do the marking. Key adjustment depends. If you are very fast in writing, you may write your key adjustment during the class itself. But writing key adjustment, you don't miss out on the next question discussion. So that I leave it to you. But marking to 100%, just one tick you have to do. If you miss out on this tick, then later you will say, sir, can you give me priority question? Can you give important question? Can you do this? The important question should be customized for every student. Some student will say, this is very easy question. I don't want to see it again. I'm okay with you. Somebody will say, this is a moderate difficulty for me. Don't mark everything difficult. You have to be realistic. Don't say, I will mark everything difficult also. And don't say, I'll mark everything easy also. You do your marking. As you do marking, you will sometimes reassess saying that, no, I've been marking a lot of easy. Maybe I have to change that and all later. But do the marking during the revision. This is, I think some of you would have done regular class, some of you first time learning. This is my first revision if you are doing. Second revision is moderate and difficult at your end. Third revision, day before exam, only difficult. But this marking you have to do. You have to do the marking. Don't come back. I have a priority material, but that is Dinesh Jain's priority material, not your priority material. Your own priority material will come if you do the marking with the key adjustment. Why is this key adjustment needed? I could have discussed this question, no, 2 minutes. I can do this question in 2 minutes, only discussing the key adjustment. So that you have to write down. You have to write down. Clear? Done. I go back now to the concept book. MF return versus individual return. Now I'll discuss from the concept book. Return to be earned by MF to give same return which an investor would get on his own. Now you'll understand everything what I'm reading here. Without opportunity cost, individual return 1 minus initial expense ratio plus annual expense ratio. Initial expense ratio, one time expense to start a mutual fund. Annual expense ratio incurred every year to meet the regular expenses of the mutual fund such as salaries, rent, commission with the opportunity cost. Do cost benefit analysis. Do cost benefit analysis to check which is better. A person is required to spend the time while investing on his own. Investing through mutual fund will save this time. Will save this time. Hence, the same can give extra income. Same can give extra income to the investor. If a question gives data on this cost benefit analysis, if I read this, you will understand what is to be done. But if I read this without doing the problem, sometimes you will not understand. Sometimes I prefer problem and then reading. Sometimes I prefer reading and then problem. Should I solve that question? Not needed. You should have ideally solved example 1 and example 2. This you will do at home. Same examples. At home, what and all you have to do, I'll tell you. MCQ. MCQ you have to do. I'll not do MCQ in the class. If you see, Mr. X can earn 12% on his own. Initial expense ratio 5%. Annual expense ratio 2%. How much should the MF earn to earn investor return of 12%? Which is this question? Question 2A. Question 2A. Mr. X can earn 15% on own. MF will give 13%. He has a portfolio value of 100 lakh. Which question? Question 2B. Question 2B. You can solve this MCQ and not solve that question. You can solve the MCQ and not solve the question. All this you decide which one you want to solve. MCQs at home for you. MCQs at home. Somebody says, I don't want to do MCQ, then revising the concept will be difficult. Two things, that 2 hours is for only two things. One is writing down important adjustment. Second is MCQ solving. This MCQ solving, if I do in class, will take me 2 minutes. At home also will take you only 2 minutes because you know the concept now. Without knowing the concept, it will take a lot of time. So your revision will happen by doing MCQs at home. By doing MCQs at home today, whatever you're doing something extra also. Solve MCQ with that. Solve MCQ with that. Other subject, I find it, I am not sure you'll be able to do any other subject during these 20 days. I'm making it very, very clear to you. If you have a plan to do other subject, you may find it little difficult. I want you to give me that 20 days for my subject. After 20 days, you can keep, or maybe extra 1 or 2 days, and then you can keep AFM aside and see day before exam. See day before exam, that is sufficient. But this 20 days, you have to give me. Other subject could be difficult. Some student may have to spend 2 hours at home, some maybe 3 hours, some maybe 4 hours also. It all depends on your ability. I am not going to say, and some may do it even in 1 hour. It all depends on that. So you will do these MCQs at home. Some question, very limited question I'll be giving, very limited question. Any descriptive question I give, you may solve it now or you may solve it later. I'll tell about what is to be done for descriptive. Clear? Any doubts on first concept? Clear? During revision phase, I spent around 1 hour now. This 1 hour will become 5 minutes for you. This 1 hour should have become 5 minutes. How will it become 5 minutes? Just read this, do the MCQ below that. Do the MCQ below that. Can we proceed? I go to second concept. There's a second concept called holding period return versus annual return. Again, I'm going to explain with the example only. I'll explain with the example. Let's come to question 3. A mutual fund has, question 3, has a net asset value of 20 at the beginning of the month, made income and capital gain distribution of 0.0375 and 0.03 per unit respectively during the month, ended the month with a NAV of 20.06, compute the monthly return and annual return. Very simple basic question, nothing tricky. This is easy only, but I will start explaining it again. What is the NAV at the beginning of the month? What is NAV? Explanation will come to you later, okay? NAV is 20 at the beginning of the month. Made income and capital distribution of how much? 0375 and 03 per unit. 0375 and 03 per unit. And ended the month with an NAV of how much? 20.06. Compute monthly return and annual return. I will see what is required in some time. I have a different term. I'll come to this in some time. Now write first. Holding period return. Holding period return is equal to. Holding period return is equal to. Question 3. I'll come to formula in some time, okay? Holding period return is equal to what I get back minus what I give divided by what I give into 100. What I get back minus what I give divided by what I give into 100. What I get back minus what I give divided by what I give into 100. What is this? Let's understand. I told my parents to invest 1 lakh. Their only question is how much will come back? How much will come back? You gave 1 lakh, no? I said it will become 2 lakh. So they're saying, okay, 2 lakh minus 1 lakh is our profit on an investment of 1 lakh. What I get back minus what I give is the only thing in my mind. What do I get back and what do I give? Whether you call it as NAV, whether you call it as dividend, whether you call it as capital gain, whether you call it as capital appreciation, all that they don't understand. Only thing they understand is what I get back minus what I give. What I get back minus what I give is the return we are earning. That is without division, it is in rupees. Once you divide, it is in percentage. It is in percentage. What do I understand? What I get back minus what I give. I buy this property. Today I give 2 CR. After a year, I'll sell it for 2.5 CR and earn a rental income of 20 lakh. Earn a rental income of 20 lakh. What I get back? 2.5 crores, 20 lakh rent. What I give? 2 CR. Divide by 2 CR into 100 is the return. I don't understand anything else. I don't understand anything else. I understand only one thing. What I get back minus what I give. What I get back in a mutual fund is called closing NAV. Closing NAV or NAV at the end of the month or NAV. NAV is basically the price you pay for a mutual fund. What is NAV? Discussion little later. Now write again the formula. Holding period return. What I get back? NAV 1. I get back NAV 1. NAV 1. I get back D1. What is D1 and all? I'll explain. I get back NAV 1, D1, CG1. CG1 and what I give is called NAV 0. NAV 0 means today, 1 means after 1 month, after 1 year, after whatever time period. NAV 1 means future, NAV 0 means today. NAV 1 plus D1 plus CG1 minus NAV 0 divided by NAV 0. Divided by NAV 0. So some of you have already done AFM. You need not wait for me to write and all. You can write on your own also. Whoever is first time learner, do it along with me. You already know the concept. You can try writing answer and all. No need to wait for me always. Okay. You can try writing on your own also. No need to wait for my answer. NAV1. What is NAV1? Is ending NAV. D1 means dividend paid by the mutual fund. Dividend paid by the mutual fund out of the dividend earned by the mutual fund. Dividend paid by the mutual fund out of the dividend earned by the mutual fund. Then what is CG1? Dividend paid by the mutual fund out of the capital gain earned by the mutual fund. Dividend paid by the mutual fund out of what? Capital gain. A mutual fund can earn dividend income, can also earn capital gain income. Technically, for us, both are dividends. For us, both are dividend. Whether you call it as D1, practical world, there's no D1, CG1. They just say dividends. They just say dividend. What is D1? Dividend paid out of the dividend earned by the mutual fund. What is CG1? Dividend paid by the mutual fund out of the capital gain earned by the mutual fund. Out of the capital gain. Why is this difference? ICI does it, practical world doesn't do it. If you see the question, saying increase the NAV at the beginning of the month. This 20 is called what? NAV 0, today's NAV. Made income and capital gain distribution. Income distribution is called D1. Capital gain distribution is called CG1. Somebody says, no, I don't want to write it separately. I want to club it together. Do it. Both are same only. Dividend paid out of the dividend is called D1. Dividend paid out of the capital gain is called CG1. And NAV1 minus NAV0 is my capital appreciation. That is different. Okay. NAV1 minus the NAV 0 is my capital appreciation, capital appreciation. Able to understand this? Now write the values. What is NAV 1? 20.06. Dividend 0.0375. CG 1 0.03. NAV 0, today's NAV divided by 20 into 100. 6375%. I'm yet to come to what is the requirement of the question and all. I'll explain that in some time. 6375%. 6375%. Their formula is NAV1, NAV0, D1, CG1. What you get back is NAV1, D1, CG1. What you pay is NAV0. In exam, don't write what I get back and all. That's just for your understanding. In exam, you write the proper formula. What is proper formula? NAV1, D1, CG1 minus NAV0 divided by NAV0 into 100. Annual return, annual return, annual return, annual return. Same formula, just do 12 by M in the formula. 12 by M in the formula. What is 12 by M? To annualize the return. 12 by M will calculate the annual return. Without 12 by M, you get the return for the holding period. What can be holding period? Month, quarter, 10 years, 1 year, 2 year, it can be anything. Without 12 by M is called holding period return. With the 12 by M is called annual return. What people generally understand is annual return. You cannot say I earned a return of 500%. I said great. Then he says 500% in 20 years. That may mean very less per year. So returns are normally understood as the per year level. Returns are normally understood at a per year level. Clear? Any doubts on this? Apply the same values, but just do into 12 by M. Just do into 12 by M. Should I apply the formula again? In first problem I'm doing. If I'm doing some other problem, you have the holding period, no? Just do 12 by M on top of it. Just do 12 by M on top of that 6375%. What is 12 by M? 12 divided by how many months is my investment? Can be 1 month, can be 3 months. If the holding period is 1 year, holding period, annual return both are same. Holding period and annual return both are same. Please apply the formula again. Apply the formula again. Annual return. Annual return into what should I do? Into 12 by M. 12 by 1. 12 by 1. 1 month investing. Could be 1 quarter investing also. 12 by 1. How much? Per annum. 7.65% per annum. Any doubts on this? Very simple concept only. 7.65% per annum. Any doubts on this? You go up and write here. What was the holding period? How many months did we invest? Per month. This is per month. If you have invested for 1 month, it is per month. If you invested for a quarter, per quarter. If you invested for 6 months, per half year. If you invested for 2 years, per 2 years. If you invested for 10 years, per 10 years. So this is the monthly return. The first one is monthly return. Second one is annual return. Second one is annual return. I did not use the term monthly return. Monthly return means no into 12 by M. Annual return means into 12 by M in this question. Because our period of investment was 1 month here. Any doubts on this? Very simple. Any doubts on this? Clear? Quickly do the marking there. Easy, moderate, difficult. Just do marking alone. Just do your marking. Extra things and all later, okay? As of now, just do the marking. Easy, moderate, difficult. Clear? Can you proceed? Now I go back to the concept book. Return is a function of dividend and capital appreciation of an investor. Return equal to what I get back minus what I give divided by what I give. NAV1 minus NAV0 D1 CG1 by NAV 0 obviously into 100. Into 100 may not be there in many formulae. If you want holding period, same formula. You want annual return, do 12 by M. Do 12 by M. Do 12 by M. Some question will give you annual return, will give you holding period return. Balancing figure is the period of my investment. Balancing figure is the period of investment. How is it balancing figure? Annual return is equal to holding period return into 12 by M. Holding period return into 12 by M. Annual 20%, holding period 5% equal to into 12 by M. M is the balancing figure. All that you do at home. I'm not doing those things. MCQ examples are there to test this. But concept is very simple. They may give you annual return, they may give you holding period return, and they may reverse work the amount of period you have invested. Any doubts on this? Which is what I was saying. Annual return is equal to holding period return into 12 by M. Example 3 is there. Example 4 is there for you to do at home. Example 3 and example 4 for you to do at home. Concept is simple. Many areas I will do a question and then come to concept. Okay. That doesn't mean we are not doing concept, because students think then we are not doing concept. I know where I have to do concept first, where I have to do question first. Because if I just do concept, no, sometimes clarity doesn't come. Doing a question and coming back to concept enhances the learning for many students. Exceptions can be there. Any doubts on the concept here? Any doubts on the concept? What is the formula for return? Tell me, what is the formula for return? What I get back minus what I give divided by what I give into 100 is called holding period return, into 12 by M into 100 is called annual return. Into 12 by M into 100 is called annual return. What is the formula for MF return? MF return is equal to, if you have own return, MF return is equal to own return divided by 1 minus initial expense ratio plus annual expense ratio, students in live online as well as if you're seeing in recorded mode, whenever I ask you something, like you participate here, later students you participate there. Obviously don't unmute, but you keep participating whenever I ask. Later on, if at all you see something of this again at home, whenever I ask you something, you'll have to tell, you will have to keep telling, then only you will learn it better. Any doubts on this? Can we proceed? Now, what does exactly ICI do? Like you have question 3, which is called forward working. Same is question 4, but that is called reverse working. You will see in question 4 where they do something called as reverse working. I have written a note there. Reverse working question of question 3. All this notes I'll give it to you. Later you can just see that note and understand what you need to do with that question. I have marked a note for every question. This is a reverse working question. We will read the question first and then start solving it. But it is same as question 3. Question 3, I gave you all numbers. You calculated the return. What will happen in question 4 is return will be given and you may reverse work NAV 1 or NAV 0 or D1 or CG1. One of them could be missing. One of them could be missing. And unfortunately, reverse working is somewhere some challenges come to the student. So we will try to do good number of reverse working question in the class. Let's come to 4. Following is extracted from steady mutual fund scheme. Asset value at the beginning of the month. Asset value at the beginning of the month, NAV 0. Asset value at the beginning of the month. Asset value means NAV. NAV 0. What is the meaning of NAV and all? Later. I will come to that in some point of time. Annualized return is given. How much is the annualized return? 15%. Distribution in the form of CG and income. What is distribution in the form of CG called? CG1. And income is called D1. Calculate the month end NAV of the MF scheme. Month end NAV of the MF scheme. This got tested in May 24 exam as well. Month end NAV needs to be calculated. I'm going to use the same formula, but little caution in reverse working will be needed. What is that caution and all? I'll explain. What return they have given in the question? Annual return, holding period return. Annual return. Let's write the formula for annual return. Annual return is equal to, write along with me. At any point of time, you need extra explanation, you have to tell me. I know which question may need extra explanation, but still, If you need something more, let me know. Write the formula. Annual return is equal to what's the formula? NAV1 minus or plus D1 plus CG1 minus NAV 0 divided by NAV 0 into L by M into 100. L by M into 100. Okay. Whenever you do reverse working, understand this very clearly. What is the annualized return given in the question? 15%. Mathematically, listen, this is very critical. You make a mistake otherwise. To write 15, you should do into 100 in the other side. If you write 0.15, into 100 will not come in the other side. Because mathematically, when you do into 100, your calculator will give you 15. Many students in a hurry end up writing 15% this side and do into 100 in the other side, you will end up getting it wrong. Into 100 also you do and you write 15%, you are wrong. Either write 15 and into 100 or write 0.15, don't write into 100. Don't write into 100. I leave the choice to you. If you end up doing the other way around, you will end up getting a wrong answer. Reverse working, this problem. Forward working, this will not strike you. Because into 100 means final answer percentage and go, which is right. But the calculator did not give percentage. You added a percentage on top of it. You only added the percentage in the answer. So calculator will give you only 15. So I leave the choice to you. In a class, I'm doing 15 and into 100. Or you can write 0.15. Don't do into 100 in the other side. Don't do into 100 in the other side. This caution is very critical. Reverse working, mistakes will be made here. Whenever they are working with percentage, our best thing, okay, let's do the best thing, 0.15. I'll work in decimal itself. 0.15, no into 100 in the other side. No into 100 in the other side. We will write 0.15. We will write 0.15. Other side, move into 100. Other side, remove into 100. Even last question, you would have got into 100, you would have done, you would have got proper number, but added a percentage in the answer. Added a percentage in the answer. Reverse working, be very clear on this. Okay. This I'm explaining one more time. Later, I'll not explain this because reverse working we will keep doing. If you are working with percentages, you have to do into 100. If you do into 100, this side don't write 15%, write 15 only, right? 15. You don't want to do into 100, write 0.15, right? 0.15. Any doubts in this? After this is done, I'll tell you to do one more thing later. First, any doubts on this? All right. What is the NAV1? Do we have the NAV1? Sorry? Okay, NAV1 is balancing. NAV1 is balancing. D1 point. Okay, 0.50, 0.32, whichever order you write doesn't matter to me. 0.50 is there, 0.32 is there. Whichever order, I'm not bothered about it, okay? CG1 and 32 is dividend. What is NAV 0? 0.7 divided by 1. L by 1. Any doubts on this? Very simple. Now let's take the numbers to the other side. 0.15 into 65.78 into 1 by 12. 0.5, 0.32, 65.78. 64.96 in the other side. 64.96. Can you tell me this side number? 2 decimal as per the question. 2 decimal as per the question. Give me a 2 decimal number for this. 0.82. 0.82. Live online guys, keep typing so that you also will keep doing it. 0.82. 0.82. 0.82 equal to NAV1 minus 64.96. Tell me the NAV1. Okay, we got the same NAV. That is more of a coincidence. That's more of a coincidence. 65.78. 65.78. That's more of a coincidence. 65.78. They've asked for a comment. Comment is there is no change in NAV. That is the comment I say I will pass because there's no change which has happened. In case there is an increase happening, how much is the increase? Decrease happening, how much is the decrease is the comment. Comment, I don't see any major utility. Provide a brief comment. Comment is no change in NAV. No change in NAV. There can be an increase in NAV. There can be a decrease in NAV. NAV did not change, but still we earned money because of capital gain and dividend distribution. Because of capital gain and dividend distribution. Any doubts on this? Now, what I want you to do is do this again in the calculator, but take 65.78 and this whenever you do reverse working after you are done. 65.78 plus 0.5 plus 0.32 minus 65.78 divided by 65.78 into 12 by 1 into 100 if you want to do, see whether you are getting 15%. If you don't get 15%, you made mistake in drafting this data correctly. You made somewhere the mistake. Any reverse working question after we are done in the calculator, do 65.78 plus 0.5 plus 0.32 minus 65.78 divided by 65.78 into 12 by 1 into 100. What percentage you got? 15%. 15%, which means we have done it correctly. When will you not get 15%? If you have that into 100 you did mistake, or by mistake you wrote 15 here, all that, or instead of doing 12 by 1 you did 1 by 12. Some mistakes can happen for the student. If you make mistake, it will get rectified here. It will get rectified at this stage. Any doubts on this? Can we proceed? This is reverse working, that was forward working. That was forward working, and this is a reverse working question. Any doubts on the question here? Any doubts on this? Clear? You please put a comment whatever you want to do. Again, I'm giving you 1 or 2 minutes. You can go through both the question. In case there are doubts, let me know. 1 or 2 minutes for you. Again, I've done 2 different questions because initial start. Ideally, 3 and 4 both were not needed. Only 4 is needed, 3 is not needed. 3 was forward working, 4 is reverse working. Whatever note you want to make, you make a note so that when you do your revision, you are clear what needs to be done. Okay. Concept 3 I've already discussed to you. Period of holding can be computed by linking to. How will you link it to? Don't look at the formula and all. Okay. Annual return is equal to holding period return into 12 by M. M is the holding period. M is the holding period which goes to the other side. HPR by AR into 12 if you have data in months into 365 if you have data in days. Days into 365, months into 12. No new formula. Don't try to see it as a new formula. Moment you see it as a new formula, you'll only unnecessarily complicate yourself. Any doubts on this? I'm just altering the formula and I get to the other formula. Again, some examples are there. You can see that later. Concept 4 I'll see later. Concept 5, dividend payout plan and dividend reinvestment plan. This I'll first discuss the concept and then I go to the question. In the practical world, the mutual fund has multiple schemes. In that, one of the scheme is called dividend scheme. One of the scheme is called dividend scheme. There are other schemes also. In a dividend scheme, the mutual fund will declare dividends, and this dividend can be given to me in the form of cash, RR. It is assumed I gave cash to you, you gave the cash back to me, and I give you extra units. I give you extra units. The dividend can come to you in the form of rupees, or it can come to you in the form of extra units. Both are your income only. But the problem is if I pay in cash, I can use the formula NAV1, NAV0, D1, CG1, all that I can do. But if I'm not paying it in cash, but I'm giving you extra units, then The dividend doesn't even come to me. What does come to me? Extra units. Extra units. So what do I do with the extra units? I will apply the formula called as what I get back minus what I give divided by what I give. What I get back? Closing units into closing NAV. The units can go up now for me. I invested 1 lakh, but by the end it has become 1 lakh 20. In the end it has become 1 lakh 20. Closing units into closing, no 1 unit calculation. NAV 1, NAV 0 will not work. Closing units into closing NAV minus opening units into opening NAV. Will the units be different? Yes, the units will be different. Divided by opening units into opening NAV into 12 by M is called annual return. Without 12 by M is called holding period return. Without 12 by M is called holding period return. What is the formula? What I get back minus what I give divided by what I give into 12 by M without 12 by M into 100. What I get back? Closing units into closing NAV. What I give? Opening units into opening NAV. Can I do for 1 unit calculation? Not possible. Not possible. 1 unit means unit should not change. 1 unit means NAV 1, NAV 0, D1, CG1 divided by NAV 0 into 12 by M into 100 without 12 by M, with 12 by M, that's up to us. Okay. Any doubts on the concept? Dividend payout. I'll repeat again. There are two schemes in the practical world. One scheme declares the dividend. Declares the dividend. The mutual fund is declaring the dividend. This dividend is given to you in form of cash. What will I do with that? I will do whatever I want to do. I may invest it somewhere else and all. Okay. I get that money. So what you get back is closing NAV you get back. When can you get back? By returning the units. You can return the units to the mutual fund. So closing NAV you get back, D1 you get back, CG1 you get back, and NAV 0 you give. In case of reinvestment plan, you don't get any dividend, but you get extra units. You get extra units, which is the in lieu of the dividend, which is in lieu of the dividend. Clear? Closing value minus opening value by opening value into 100, 12 by M. We will see whether needed or not. Clear? Any doubts on the concept? Again, I'm repeating. I repeat it one more time. There are two ways of giving you dividends. ICICI Bank declared, or let's take an example of FD. In FD, you earn interest. Two things you can do. When you create a FD, you can say interest is added back to principal or interest is given back to me in the form of cash. Two things you can do in a fixed deposit. Interest can come to you or interest can be added with FD and you earn interest on interest. You earn interest on interest. You can decide what you want to do. The bank will give you two options: interest payout plan, interest reinvestment plan. Interest payout, interest reinvestment. Same the mutual fund does. Dividend payout, dividend reinvestment. In the practical world, when reinvestment happens, it will not happen for the full amount because of tax deducted at source. There will be a TDS which will come, which is a practical angle. Doesn't matter from an exam point of view, because in the practical world, TDS will come and reinvestment will happen for the lower amount because they have to deduct TDS, and for balance they can give you units. Clear? Any doubts on the concept? Payout plan, same formula. NAV 1, NAV 0, D1. Both same formula. What is the same formula? What I get back minus what I give. What I get back minus what I give. What I get back is little different for payout plan, little different for reinvestment plan. Any doubts on the concept? Any doubts on the concept? Can we do the question now? Here I have explained the concept first. Now I'll go to the question. Let's come to 5. In ICI study material, I have given reference of ICI study material everywhere. I don't know, they have created this question 3 times. Question 4 is also this, 5 is also this, 14 is also this. All your ICI study mat questions will get covered. You can keep putting a tick at home if you want to. I have given reference to the ICI study mat exact question number. 4, 5 and 14, 3 different question. Somebody wants to practice. This could be question 4, 5 you try at home. Same, numbers will be different, that's all. Numbers will be different. Let's come to this. Mr. X, an investor, purchased 300 units of ABC mutual fund at rate of 12.25 per unit 1 year ago. Over the year, he received 1.25 as dividend, capital gain distribution of 1 rupee. 1.25 is dividend, capital gain distribution is 1. You are required to find out holding period return assuming no load fund has a NAV of 13. What is no load fund? Again, little explanation later. Some points I don't want to explain now. Everything will be explained to you, but at different points of time. NAV is 13. Holding period return assuming all dividend and capital gain distribution are reinvested into additional unit at a price of how much? 12.5 per unit. What is this reinvestment? What is 12.5 and all? We'll understand. First thing, holding period return, where they are talking about closing NAV, they're talking about dividend, they're talking about capital gain, all that. Let's put it in the formula and write it. You do in your notebook, I'm doing it in the screen. Holding period return, dividend payout plan. You don't have clarity, then write it along with me. If you can do on your own, else refer the screen. Try doing on your own. Not able to do, please refer the screen. After referring the screen also not able to understand, then you have to ask me. Give it a try to the extent possible. Not able to do, please see the note. Please see the screen. Live online guys, if you're done, you can type the answer. I've started getting the answers in live online. Holding period return without 12 by M. In this question, holding and annual return will be same, 1 year investment. Whether you call it as annual return or holding period return, it is going to be same here. 24.49%. Any doubts on this? Clear? Can you proceed? Any doubts on 24.49%? Done? Can we proceed? Anybody needs explanation? They gave an opening NAV, they gave dividend, they gave capital gain, and today, 1 year ago it was 12.25, today it is 13. 1 year ago 12.25, today it is 13. 1 year ago is NAV 0, what you gave, and today is called NAV 1. Any doubts on this? If you compare today with next year, today is NAV 0, next year is NAV 1. Any doubts on this? Next you can write along with me. If you know you can do, but otherwise write along with me. Dividend reinvestment plan. Dividend reinvestment plan. Dividend reinvestment plan. Particulars calculation amount. Particulars calculation amount. Calculation amount. Amount invested day 0. Amount invested. I make my investment on day 0. I make the investment on day 0 or a year ago. How many units did we buy? At what rate? 300 units into 12.25. This is technically what I gave. What I gave is this. 300 into 12.25. Can you tell me the amount? what I get back will be 13 rupees, but I don't know the units. Units can go up. Units can go up. Reason for going up is there is an income, and on that income, I'm doing reinvestment. Clear? Any doubts on this? Dividend and CG all put together. I'm not bothered about the CG. Dividend and CG per unit put together, how much per unit? 1 plus 2. This is what is given by the mutual fund. Mutual fund is giving what? 1 plus 1.25 put together how much? 2.25 put together it is 2.25. How many units did we invest? Dividend for 300 units. Dividend for 300 units. How much? 675. Dividend for 300 units, 675. We get a dividend income of 675. Clear? Any doubts on this? Dividend income is 675. This did not come to me in cash. It came to me as extra units. And I have purchased these extra units at a rate of 12.5 per unit, at an extra rate of 12.5 per unit. They said, we will not give you this. You please reinvest. You please reinvest at what rate? 12.50 per unit. 12.50 per unit. Any doubts in this? Next line. Dividend in units. Get extra units 675. I get extra units 675 at what rate? Divided by 12.5. 54 units. Instead of giving me cash, they are giving me extra 54 units. Extra 54 units. Any doubts on this? Any doubts on this? Clear? Amount received on maturity. Amount received on maturity. This is technically what I get back. What I give was 3675. What I get back now. What I get back. How many units did we invest? 300. Extra how many units allotted? Into what is the NAV? 354 into 13. 46 0 4602. 4602. Amount received on maturity. 4602. Same formula. What I get back minus what I give divided by what I give into 100. What I get back is 4602. What I give is 3675 divided by 3675 into 100. Till now, no formula we are remembering. I will tell you very few places where you have to remember the formula. Any doubts on this? Now, right. Return, holding period return. Holding period return. Closing value minus opening value divided by opening value into 100. Again, I don't even need the formula also. Without formula also you can do. What I get back minus what I give divided by what I give into 100. No 12 by m because we are calculating holding period. And even if I calculate annual return, it is same 1 year here. What I get back is how much? 4602. What I give is denominator. The return is 25.22. I've got the answer in live online. 25.22. Any doubts on the calculation here? Any doubts on 25.22%? Third part is saying which is better, whichever is giving higher return. Whichever is giving higher return, that scheme looks better. Not mandatory that reinvestment gives higher return or payout gives higher return. We don't know. Any of them can give higher return. As of now, looking at the data, I will give the advice because my reinvestment happened at 12.5. Sometime reinvestment can happen at 15, which means you'll get lesser units. Lesser units means lesser closing value. Lesser closing value means lower return than the earlier return also possible. You may end up getting a lower return or you may end up getting a higher return. I don't know. Any of them can work in the practical world. Any of them can work in the practical world. Any doubts on this? Write the conclusion. Company should go for, or the investor should go for dividend reinvestment plan. Should go for dividend reinvestment plan. Most of the question we will be doing it together only. I know places where you will not be doing it. Dividend reinvestment plan. Any doubts on this? Clear? Clear till this? Any doubts on this? Done? Okay. We take a 10 minutes break at this time. Exact 10 minutes. I'll not give more time. Okay. 10 minutes and then we resume again. Okay. I will back to the next concept now. Till now we have learned few basic concepts. The next concept we have is something called as different types of mutual fund schemes. In a mutual fund, we have multiple categories of schemes which are given. What are these multiple categories? How does it impact the calculation? Let's understand it. When I invest, let's assume I'm investing in a mutual fund called Parag Parikh Flexi Cap Fund. The MF will give me 4 options. Parag Parikh doesn't give those 4, but normally 4 options are possible. First option is growth plan. What does a growth plan do is, it does not declare any dividend. It does not declare any dividend, and the NAV of the growth plan is different. NAV of the bonus plan is different. NAV of the dividend plan is different. Under a growth plan, I start with 10,000 units. I have to end with 10,000 units. Start with 10,000, end with, if I have invested 10,000, I'll end only with 10,000 units. NAV will obviously be different. So a question may say, calculate the return of a growth plan. Formula, what I get back minus what I give divided by what I give into 12 by M into 100. In this calculation which I'm doing, there will not be any change in the number of units of a growth plan. For a growth plan, ideally I can even use the shortcut. What is shortcut? Is NAV1 minus NAV0. No D1, no CG1, none of them. But we normally do overall calculation. Second plan is a bonus plan. What is bonus plan is, I start with, I give 10,000, I get 10,000 units. Mutual fund may do 1:1 bonus. 10,000 will become 20,000. Again, it may do another bonus. 20,000 will become 40,000. Another bonus, 40,000 can become 50,000. In a bonus plan, units will keep changing. NAV also does change here. NAV is different for a growth plan, different for a bonus plan. Units will change. So if we are doing a bonus plan, we will do this. Date, units held. What is units held is how many units you are having. There will be a bonus ratio. The bonus ratio will tell how many extra units, like a bonus share. I will be given extra units. I'll be given extra units, and the closing units will be this. Next, again another date. This closing will become opening, again a bonus units, again closing. This closing will become opening, again a bonus units, closing. This will keep going on. This got tested in Jan 2026 exam as a reverse working question. As a reverse working, they ended up asking this in exam. I'll come to reverse working later. First, forward working. What we do? Units held, bonus ratio, participate. Units held, bonus ratio, bonus units, total units. Repeat the same again. Bonus ratio, bonus units, closing. repeat the same again, repeat the same again, repeat the same again. There's no end to this. You'll keep doing this again and again, again and again. Can be 1 bonus, can be 2 bonus, can be 3 bonus, can be 4, 5, 6, whatever it is. Then we have dividend reinvestment, which is the anyway you know. Date, units held, units held. Some dividend will be paid. Calculate dividend in rupees. Calculate dividend in rupees. Divide by the NAV. Dividend in units. Units will go up. Repeat the same units as the next opening. Again dividend. Again dividend in rupees. Again reinvestment in NAV. Again closing units, new units, and this becomes the closing. This story will keep going on. You will be keep on getting extra units. You will keep on getting extra units. You'll keeping on getting extra units. Able to understand the concept? One is dividend reinvestment. Dividend payout is there. Payout means NAV1, NAV0. Reinvestment means date, units, starting units, dividend rate, amount, reinvestment NAV, new units, total units. Repeat the same story. How many times? 2, 3 times, 4 times, 5 times, 6 times, 7 times. Question may give 2, 3 times. We will have to repeat the same thing and get the closing units. Get the closing units. Once you get the closing units, closing value minus opening value divided by opening value into 12 by M into 100. This is for reinvestment. This is also for bonus. This is also for growth, but growth units will not change. Growth units will not change. Who will opt for a growth plan? People like you or me can opt, because today I don't need any income from mutual fund. Reason? I am getting my regular salary income. I don't need any income from the mutual fund today. So I will opt for a growth plan because I don't need anything from the MF today. Post retirement, I may change the growth plan to a dividend payout plan. Dividend payout plan, which will regularly give me dividends. Which will regularly give me dividends. Bonus plan has no utility in the practical world. Theoretically, there is a utility. Practical world, very few schemes give a bonus plan. Zero utility in the practical world. Growth plan has a utility. Payout plan has a utility. Reinvestment also no utility. Why no utility? If you are reinvesting, you can as well go for a growth plan. What is reinvestment? You don't want the money. You don't want the money. If you don't want the money, go for growth plan. You want the money, go for payout plan. You don't want the money, go for what? Go for the payout or growth. These are the only two schemes which are there in the practical, which are very useful. Other schemes are only theoretical. I'll repeat the scheme. Growth plan, I start with 10,000 participate. I start with 10,000 units, end with 10,000 units. Formula, closing value minus opening value by opening value into 12 by M into 100. Second type of scheme, bonus plan. In the bonus plan, units will change. In the bonus plan, units will change. How does the units undergo a change? Units undergo a change because extra bonus units are allotted. Extra bonus units are allotted. So closing units into closing NAV, opening units into opening NAV, divided by opening units into opening NAV into 12 by M into 100. This is for which plan? Bonus plan. Reinvestment also same, but calculation higher. What is the higher calculation? Date, units held, percentage dividend. Percentage is on face value. Any dividend rate is always on face value. Dividend rate is on face value. Dividend rate is on face value. If they use the word dividend yield, then you directly apply on NAV. Dividend yield means on NAV. The difference between the two is in ratio analysis at Inter you would have learned. Dividend rate means dividend as a percentage of face value. Dividend yield means dividend as a percentage of market price. As a percentage of market price. So if they use the word dividend yield, for calculating dividend, that percentage is multiplied with NAV per unit. That percentage is multiplied with NAV per unit to get the dividend. Last question we saw 1 rupee 1.25. I can say 10%, 20%. 10% on what? On face value. On face value if silent. If they specifically use the word yield, if they specifically use the word yield, yield is on NAV. Yield is on NAV. I'll repeat again. There's a dividend rate, there's a dividend yield. Dividend rate is applied on face value, Dividend yield. You'll have to keep telling me dividend yield is applied on market price or NAV. On market price or NAV. Keep telling with me. Keep telling with me. That is how it is easier for me to proceed it. Dividend rate is on what? On face value. Yield. Yield is on market price or NAV. Market price or NAV. So we'll prepare a table like this. This table will give me the closing units. Okay, I got closing units. I got closing NAV. I multiply, but this amount may not come back to me fully. This amount may still not come back to me fully. Reason? Two reasons. Securities transaction tax could be there in some question. Securities transaction tax. Securities transaction tax. What I'm getting back is closing units into closing NAV. Full money doesn't come back because of securities transaction tax, STCG, LTCG. You will understand this in the question. When I do the question, STCG and LTCG could be there in the question. STCG and LTCG could be there in the question. This can pull down the value I am getting back. Pull down the value which I am getting back. Clear? Any doubts on the concept? There are 4 schemes. Growth plan. What happens in growth plan? Start with X units, end with X units. Bonus plan. Start with X units, end with 4X, 5X, 6X, 7X. I don't know. Any number can happen. Dividend reinvestment plan. Start with X units, end with something more. Something more. Dividend payout. Start with X, end with X. Also get dividend. Also get dividend. Growth, you don't get anything. All the 4 are all the 3. Dividend payout reinvestment will have same NAV. All the 3 will have different NAV. Will have different NAV in the practical. What is NAV? The price which you pay for buying the mutual fund. More discussion will happen as we proceed. Let's come to question 6. Sun Moon Mutual Fund sponsored. This is a very good question. Comprehensive, lengthy problem. We will try to do the full question. You'll get grip. Variants of this I'll explain later. Sun Moon Mutual Fund sponsored open-ended equity-oriented scheme. Another opportunity fund. Key plans: dividend reinvestment plan, bonus plan, growth plan. There are 3 plans which are there. At the time of new fund offer, NFO on which date? 1/4/1999. Mr. Anand, Mr. Bachchan and Mrs. Charu, 3 investors are there. They have invested how much? And chosen B, C and A plan respectively. Somebody has chosen B, somebody has chosen C, somebody has chosen A. That's okay. Different plan they have chosen. Totally 5 dividends are paid. Totally 5 dividends are paid, reinvested. 5 dividends are reinvested. I will do only 2 calculation. 3 I will show in the screen. That's how we will save time. Saving time is because of these small things. I will not do all the 5 calculation. I'll do only 2 calculation. If you have understood 2, it means you'll understand the other 3 also. Other 3 you will do at home if you want to. Don't want to, don't do it also. I'll tell you when it is needed, when it is not needed. So here 5 dividends have been paid. How many bonus are there? 3 bonus. NAV for plan A is different. Plan B is different. Plan C is different. NAV is different for plan A, plan B, plan C. What is plan A? This is dividend reinvestment. Plan B, bonus plan. Plan C, growth plan. When you do growth plan, take the growth NAV for calculation. When you do bonus plan, take the bonus NAV for calculation. And when you do reinvestment, dividend reinvestment, because for reinvestment, these individual in between NAVs are critical because I will be reinvesting at some NAV rate. For all these are of no use except the last rate for the other 2 plan. Other 2 plan, only the last rate is sufficient because I don't do any reinvestment in between. Dividend plan, I need every NAV. Dividend plan, I need every NAV. Then on 31st July 2009, on 31st July 2009, all 3 investors redeemed their units. Calculate rate of return assuming LTCG is exempt. Happy? LTCG exempt means lesser calculation. ICA wants to complicate, they can say LTCG is taxable. I don't see them getting into that because calculation will be very high for that. LTCG is exempt. STCG is subject to what? 10% income tax. STCG is for those units which are allotted. What is the STCG time period under income tax? Less than 1 year. So we redeemed on which date? 31st July 2009. If at all I got any units from 1st August 2008 to 31st July 2009. 1st August 2008 to 31st July 2009. If at all anything got allotted, STCG. LTCG taxable. Every allotment you have to calculate capital gain. Every allotment you have to calculate capital gain, which I don't think ICI will get into it. That will become time consuming. Why every allotment? Dividend plan. First original allotment, first dividend, second allotment, second dividend, third allotment, third dividend, fourth dividend, fifth dividend. 6 times you will get units. First original and then 5 times extra units. For every allotment, I have to calculate capital gain, means it will become time consuming. LTCG exempt. STCG, if at all anything got allotted between 1st August 2008 to 31st July 2009, I see something getting allotted there, that may have short-term capital gain. That may have short-term capital gain. Same for bonus plan. Growth plan, no headache at all. Day 0, 1 allotment, last day 1 maturity. Day 0, 1 allotment, last day 1 maturity, nothing in between. No STCG, no STCG. Securities transaction tax is applicable on sale or redemption. On redemption, STT. Buying also it can be applicable, but they have not mentioned anything on buying. Only on sale or redemption. Ignore education cess. Working note 1. Dividend reinvestment plan. Analysis of dividend reinvestment plan. Dividend reinvestment plan. Tell me which investor is taking dividend reinvestment plan? Mrs. Charu. Mrs. Charu. Plan A. Mrs. Charu. Plan A. I think I need 7, 8 columns. I don't remember the column, but I'll write date, opening units, date, opening units, dividend percentage, dividend percentage, dividend in rupees, dividend in rupees, reinvestment, NAV, reinvestment, NAV, units allotted, closing units. Have we done this earlier? Yes, we did this in a column. Now I have to do it as row because I have to repeat multiple times. I have to repeat this 5 times. Class we will repeat twice. That's all. Third, fourth, fifth, I'll say this is the answer and we proceed ahead. That's how some time saving is happening. It's not that I'm trying to cut down any concept. No concept cutting. We will save time because some areas I may not do and I'll say this is how it is. First, right, when did we invest? When did we invest? 1499. And when is the first dividend paid? 28/7/2003. Okay, listen. I started my investment on 14/1999. Have they given any NAV on 14/1999? 14/1999. Any NAV given on the date of investment? Participate. Any NAV given? No. Question 7, which I'll discuss later. Something like that is there. I invested some money they gave, but they gave a NAV on the date of investment. They gave a NAV on the date of investment. I'll be linking to this question little later, okay? Because question 7, no solving by students, only faculty to discuss. I know what is the linkage and all. So 7, they gave some NAV on the date of investment. 6, they have not given NAV on the date of investment. If nothing is given, face value is the NAV. Face value is the NAV on the date of investment. Whenever you are starting, we started on 1/4/1999, new fund offer. New fund offer. Practical world, new fund offer happens at 10 rupees. That's a practical angle. Some exam question they may give even for a new fund offer some NAV if they wish to. Okay. So here when I started, I don't see any NAV. So my opening units, right, 1 lakh divided by 10. This is my opening unit. I start with 1 lakh divided by 10. I invested how much? 1 lakh rupees at what NAV? 10. So opening units is 10,000. Yep. What is the dividend percentage on this date? 20. Very simple. I'll go very slow on these things. That is why I'll not do 5 scenario. If I do 5 scenario, I have to rush up. When I do 2 scenario, I know I can spend time on this. 20%. Have they mentioned dividend rate, dividend yield, anything mentioned? Anything mentioned? I want participation. Anything mentioned dividend rate, dividend yield? Nothing is mentioned means this is rate. Listen, 10,000 units. Listen, into 20%. Can you tell me what is the face value? Where is the face value given? Face value is given here, okay? Face value of 10. Face value of 10 in the table. If it is yield, you have to multiply with NAV. What is NAV? On the day NAV is there. If it is rate, you have to multiply with face value. Multiply and tell me the figure. 10,000 into 20% into 10. 20,000. Please tell me plan A, what is the NAV? Look at the table and tell me plan A NAV. 3.7. Extra units, 2 decimal answer. Practical world, units can be 4 decimal also. In class, we will do 2 decimal. 20,000 divided by 30.7. 20,000 divided by 30.7. Live online guys, you keep typing. 30.7. How much? 651.47. We get 651.47. This is extra allotment on which day? On 28/7/2003. We end with 10,000 plus how much? We end with 10,651.47. We are ending with 10,651.47. Ending with 10,651.47. Any doubts on this? Can we proceed? When is the next dividend declared? 31/3/2004. 31/3/2004. Very simple approach. Tell me. Yes, practical world, units are 4 decimals in fact. Practical world, units, what happens in mutual fund is you are getting fractional ownership. The fractional ownership can be in decimals. People don't buy, whenever a person is buying mutual fund, he doesn't say I want to buy 10 units. He says I want to buy for 1,000 rupees. That's how people buy in mutual fund. If you're buying for 1,000 rupees, 1,000 divided by 49 can happen, 48 can happen, 47 can happen. NAV 4 decimals in the practical world, units also 4 decimals in the practical world. Practical world, both will be 4 decimal. Your units also decimal, NAV also in decimal. Classroom discussion depends on the question, but we'll restrict to 2 decimal. Okay. What are the opening units now? 651.47. We'll only do the second scenario. Third, fourth, fifth, I'm not going to do. I'll tell you what is there. That's all. 10,651.47. What's the dividend percentage? Now, 10,651 into what percentage? 70% into 10 face value. Tell me the dividend. 70.29. 74,560.29. Keep participating with me. That will give you confidence to do the question. 74,560.29. Yeah, tell me. Yeah. If it's a dividend yield in the question, for this one, I'll multiply with 30.7. For the second one, I'll multiply with 58.42. Can be the other way around also. What is the other way around is, for the second one, you take the earlier NAV. That is an assumption based area. I'll discuss about yield later on. What is the reinvestment NAV? 58.42. 74,560.29 divided by 58.42. 12.28. 1276.28. There are certain points which I cannot explain all as of now. Later, small things I'll keep adding. Closing is how much? 10,651 plus whatever I'm writing bracket is not needed. Okay, this is because I directly write number. Some student will ask where did the number come. Whatever in brackets you need not write in exam also. This is just for classroom discussion. 11. Clear? Story ends here. I'm not doing beyond this. You want to do at home, leave 3 lines for you to do at home. You don't want to do at home, don't do it. I leave the choice to you. I'm not telling it's mandatory. This is how table will look. It will end with 14,906.16. The table will end with 14,906.16. I will work with this number now onwards. I'm not doing the third, fourth, and fifth one. Somebody wants to do, leave 3 lines gap. Anyway, you leave the gap. You want to fill at home, fill it. You don't want to fill, don't fill it. What is needed, I'll tell you, because you have only 2 hours available. In the 2 hours, what you can do, it's up to you. Not mandatory. Somebody still wants to do it. He can spend more time. You do it. You don't want to do it, don't do it. Any doubts on this? Next, return computation. Return computation. Return computation. Particulars calculation amount. Particulars calculation amount. Return computation. Particulars calculation amount. Assuming you complete this table, don't in the class, don't try to do the table because you are not going to get anything in the class. Okay, because student will think, oh, why should I leave 3 lines? Let me write it now itself. No, want to do it at home. Don't want to do, don't do it also. I'm making it very clear. But I will need this number. That's why I'm showing you the number. Okay, 14,906.16 is what I will end with. I will end with redemption value. Redemption value 14,906.16 into, tell me the plan A NAV on the last day. 53 point, multiply without decimal. Without decimal is fine. The number is huge. I don't need any decimal for this. 14,906.16 into 53.75. Anywhere you need extra explanation, let me know. Areas which I'm leaving for you to be done depends on how much time is available at your end. Some of you could be writing the current exam, it's of the coming exam. Some of you may be writing later. You have time. Do it later, do it now. It's all up to you. Okay. But you're not missing out on anything. Only thing I can tell you is you're not missing out on anything. If you're missing out, I'll tell you. Less securities transaction tax. I have to pay STT. I have to pay STT on this amount. On redemption, I have to pay STT. What is the STT percentage given in the question? 0.%. Again, round off and tell me the figure. 801 into 0.2%, I miss out. 1602. 1602. I have to pay securities transaction tax. I've made that payment. 1602 went for that. Any doubts in this? Less short-term capital gain tax, STCG tax. LTCG comes very difficult to do, time consuming. Difficult is not there, but time consuming. Now listen, when are we redeeming the units? 31st/7/2009. This table is not there for you. In this table, did we get any unit between 1st August 2008 to 31st July 2009? Did we get anything? On this, I have to pay short-term capital gain tax. On these units, I have to pay what? Short-term capital gain tax. Don't worry about this calculation and all. This is assuming you are doing it properly at home. You have to calculate now on this. On this, what? Short-term capital gain tax. What is short-term capital gain? Number of units into selling price minus purchase price. Under income tax, STT is not a tax deductible item. Under Income Tax Act, we are selling for 53.75, paying 0.2% as securities transaction tax. For capital gain computation, that 0.2 cannot be subtracted. This is as per income tax. Under income tax, you cannot subtract it. ICI study material has a wrong solution, okay? Has a wrong solution, and they have given a note saying that you can do it without deducting STT. STT is not a tax deductible item under your capital gain taxation, under the capital gain. What is the cost? Cost is basically the NAV on the date of reinvestment. Cost is basically the NAV on the date of reinvestment. Basically, you gave me dividend, I gave you back dividend, and you paid me the units. So, cost price is NAV on the date of allotment for reinvestment. Selling price is today's price. Selling price is today's price. Cost price is what? NAV on the date of allotment. What else can happen in the practical world is every dividend you will have to pay tax as per your slab rate. You have to pay tax as per your slab rate for every dividend paid out. Every dividend paid out or reinvested, doesn't matter. And TDS will also be there. All this is practical angle. For our purpose, dividend reinvestment means we went ahead and purchased. We went ahead and purchased. In the calculation column, 1144.43. This is the units. 1144.43. 1144.43. Don't worry about how 1144 came and all. You want to do, you do at home, okay? 1144.43. Why not earlier units? Earlier units do if it is long-term capital gain also taxable. LTCG taxable. Every time you have to do units into selling price minus purchase price. Units into selling price minus purchase price. Everything you have to do. This is easy. That is more time consuming. LTCG is more time consuming. Practical LTCG has come now, but I don't see exam question getting into that, okay? Into what is the selling price on the last day? 53.75. 53.7. Selling price is 53.75. I'll tell you the formula: number of units into selling price minus purchase price into STCG rate, whatever is the rate. 10%, 15%, 20% would be given on the question. The gain is units into the selling price minus the purchase price. On this gain, you have to pay 10, 15, 20, 25, whatever percentage. Whatever percentage could be in the practical world 20%. Class problem, something else could be there. Whatever percentage is there, we'll get into it. What is short-term capital gain? Units of last 1 year. Units of last 1 year. Again, I don't feel ICI will get into this testing itself, but still question has, I'm doing it. Study mat question. Okay. On the date of 24/3/2009, what is plan A NAV? 24/3/2009. 48.10. 48.10. 48.10. Listen, if LTCG is taxable, you have to repeat this 5 times. You have to repeat this 5 times. Day 0 allotment, first allotment, second allotment, third allotment, fourth allotment. Every allotment you have to repeat the same calculation. Selling price minus purchase price into number of units. Selling price minus purchase price into what? Number of units. Obviously time consuming. What is the STCG tax rate? Into 10%. Do this and give me rounded off number. Minus 48.1 into 10%. 647. After subtracting this is what I get back. What I get back is after, ideally what I should get back is redemption value. But here what I get back is redemption minus securities transaction tax minus the STCG tax, minus the STCG tax. Any doubts in this? Right. Net realization. For your understanding, what I get back. Please subtract and tell me. Net realization. 798 957. This is what I get back. This is what I get back. I get back how much? 798 957. Very simple calculation, nothing tricky here. Only thing is 5 times you have to do. 5 times you have to do. Class, I don't want to repeat those things. You want to do at home, you can do it. Clear? Any doubts on this? Less amount invested. Less amount invested. Or not less, just tell amount invested. Just tell amount invested. 1 lakh. Annual return. Question has asked for annual return. Question has asked for annual return. What is annual return? What I get back minus what I give divided by what I give into 12 by M into 100. 12 by M into 100. What I get back 798. What I give 1 lakh divided by what I give. How many months and all we will see, and then do the calculation. What I get back. What I get back minus what I give divided by what I give into 12 by M into 100. Why annual return? Question has asked for. Calculate annual rate of return. Calculate annual rate of return. What I get back minus what I give divided by what I give into 12 by M into 100. A little lengthy computation, but very logical computation. It's very logical computation. What do I get back? 957. What I give divided by into, when did we invest? 1/4. And when are we redeeming? This is 10 years and 4 months. This is 10 years and 99 till 2009 is 10 years and extra 4 months. So this is technically 124 months. We are investing for 124 months. We are investing for how many months? 124 months. 124 months. 124 months. Any doubts on this? 124 months. Let's put the numbers here. 12 by 124. And get me the answer. That's right. 67.64. 2 decimal is fine. 64. This ignore something called as time value of money. What is that? Later, next question I'll explain. This formula ignores something called as time value of money. Where is it ignored? 798 after 10 years compared with 1 lakh. 798 after 10 years, if you discount it, could be 3-4 lakh only. Could be 3-4 lakh or 2-3 lakh. We don't know. That will come in IRR, which I'll explain later. Here, time value of money is ignored. Exam question only this we will be doing. Unless they specifically ask IRR. What does that and all? I'll explain. Any doubts on this? Can we proceed? 67.64%. Any doubts on this? Can we proceed with the calculation? Working note 2. Analysis of plan B or analysis of bonus plan. Let me do analyze bonus plan then. Bonus plan. Can you tell me who invested in bonus plan? Mr. Anand. And bonus plan is which? Plan A, plan B. plan B. Plan B. Bonus plan B. Step by step we'll go, no hurry at all. Understand all the calculations properly. Bonus plan B. Note 1, units on maturity. How many times bonus have been declared? Okay, I'll do all the three because this takes lesser time. Reinvestment takes more time. That's why I did only two scenario. I think 5-6 columns. It opening units, bonus ratio, bonus units, closing units. It opening units, bonus ratio, bonus units, and closing units. When is the starting? 31st March 2004. This is easy. We'll do all the scenario. 31st March 2004. We are starting with how many units? Divided by 10. 10,000. 1 lakh by 10, 10,000. 1 lakh by 10, 10,000. There's some bonus declared. What is the rate? 5:4. 5:4. So this is 10,000 into 5 by 4. 5:4 is 5 by 4. 10,000 into 5 by 4. How much? Ending with 10 plus 12,500, 22,500. This is relatively faster to do, so I'm doing all situation. Because focus will not be on calculations, because your focus will shift to calculation if I do too much computation. 22,500. When is the next bonus declared? 31/3/2008. 22,500 is the starting. 22,500 is the starting. What is the bonus ratio? 1:3. 1 by 3 into 1 by 3. 1:3 means 1 by 3. Very simple approach. 1 by 3. How many units? 22 plus 7,500. 30,000 plus 7,500, 30,000. Any doubts on 30,000? Any doubts on 30,000? When is the next transaction happening? 24/3/2009. This will also have short-term capital gain. This 24/3/2009 will have short-term capital gain. Any units allotted in the last 1 year. Any units allotted in the last 1 year will have capital gain. Will have capital gain. What is the bonus ratio? 1:4. I think same 7,500. 30,000 into 1 by 4. 37,500. Any doubts on this? Can you proceed? 37,500. Any doubts on this? Note 2. Return computation. Return computation. Same story. Return computation. Return computation. Redemption value. You can first write this. Redemption value, STT, STCG tax, net realization, amount invested, annual return. Same story again. Redemption value, STT, redemption value, STT, STCG tax, net realization, amount invested, annual return. Everything is going to be very logical, but yeah, you may not get a break in between and all. So we'll keep doing it. You'll have to be fully attentive, full time attention only. No saying that I'll relax for a minute and two. If you relax for a minute or two, by the time I would have gone to the next concept. So no relaxation in between. How many units we are redeeming? 37. What the NAV of plan B? 22.98. In this plan, the in between NAV no use. They were of no use. 37,500 into 22.98. How much? 861,750 into 861,750. 1724. 3.5, we rounded off to 24. Now, any units got allotted in the last 1 year? Listen, units into selling price minus purchase price into STCG rate. No need to write this again. How many units got allotted in the last 1 year? Selling price is 22.98. Purchase price is 0 for bonus plan under income tax. Under income tax, bonus plan purchase price is 0. Bonus plan, because you did not pay anything. You did not pay anything. In reinvestment, I paid my dividend. I paid my dividend to them. Here, I have not paid anything. Here, I have not paid anything. So, 0, 0 purchase price. 0 purchase price into what is the STCG rate? 10%. 17, 235. In this case, we are not paying any cost. We are not paying any cost. Reinvestment also may look like that we are not paying, but indirectly I am getting a dividend and giving it back. Here I don't get anything and I don't give back anything. So 0 cost. 0 cost. Any doubts on this? Get the net realization. 842, 780, 791. Amount invested 1 lakh. Same story. Amount invested 1 lakh. 842 minus 1 lakh divided by 1 lakh, 12 by 124 into 100. 12 by 124 into 100. 71 point. 71.88%. Ideally, all the three returns should be very similar. Only problem in reinvestment is you could be lucky or unlucky. What is unlucky is reinvestment happening at a higher rate. And lucky is reinvestment happening at a lower rate. That could happen in case of reinvestment. You could be lucky or unlucky and that can impact the return. Otherwise, all the three ideally should give me very similar returns. Very similar return. Here I have earned 71%. There I have earned 67%. This gap is because of my bad luck or good luck, whatever way you want to call it. Any doubts on this? Any doubts in this? Can we proceed? Done? Any doubts on this? Working note 3. Analysis of growth plan. Analysis of growth plan. Who is investing in growth plan? Mr. Bachchan. Which is this plan? Plan C. This is the best one. Best one is because I'll directly do only this table. No extra calculation. Only this table. Only this table. Redemption value, right? Write the table first. Redemption value, STT, STCG tax, net realize. STCG tax also may not come, but ठीक है, write it. STCG tax, net realization, amount invested, annual return. Growth plan, no headache at all. Directly the table. Directly the table. The best part of growth plan is this. You need not worry about any extra calculation. Direct final answer. redemption value, STT, STCG tax, net realization, amount invested, annual return. Write the format. You can fill it if you wish to, or do it with me, that's up to you. But please solve, okay? My point of view is very clear. Here, exam oriented or fast track does not mean I will solve and you will know, you will only be in listen mode. No. I will tell you few questions where you have to be in listen mode. How many units we would have got on day 0? Same 10,000 is last day. Same 10,000 is last day. What is the NAV on the last day? 82.07. No extra calculation, nothing I'm going to do. 10,000 into 82.07. I'll get what? 8 lakh 20,700. 820,700. No extra calculation at all here. 820,700. STT is 16. No STCG tax. I did not get anything in the last 1 year. Only one time allotment. Only one time allotment and one time redemption. One time allotment, one time redemption. I didn't get into any headache in between. That is your bonus plan. One time entry, one time exit. One time entry and one time exit. Nothing in between. Nothing in between. What do I get back? 81059. 819059. Amount invested. Same story continues. 819,059 minus 1 lakh divided by 1 lakh 12 by 124 into 100. 69. Clear? Any doubts on this? This is forward working. We'll see a reverse working question in some time, which is tested sometimes in exam. Any doubts on the numbers here? Clear? Because it's a lengthy question, I'm giving you 2 minutes. Go through all the calculation. Don't try to fill those 3 lines and all now, okay? 2 minutes for you to go through, making those markings, making any key adjustments if you wish to. 2 minutes for you. Okay. Now, whatever formula we have applied, it ignores something called as time value of money. Where is the time value of money ignored? 10-year value minus the 1-year value is wrong. 10-year value has to be either discounted to day 0 or the day 0 value has to be compounded to the future, and then only you can do this comparison. Doing like this as it is, we are ignoring something called as time value of money in the analysis, which is where we have another question. You are going to be in listen mode only. This question, no solving by students, only faculty to discuss the IRR part. So you are not going to do anything here. Be in listen mode. 10 minutes or 5 minutes we will discuss this and we are done. A mutual fund introduces 2 schemes, dividend plan, bonus plan. Any question which says dividend plan, our first understanding will be dividend reinvestment. Dividend reinvestment. If you take it as dividend payout plan, the entire essence of the question is over, because there's nothing to be done in a dividend payout plan. It's normally dividend reinvestment plan. Face value of the unit is rupees 10. On 1/4/2005, Mr. K invested when the NAV is what? 38.2 and 35.6. On my entry, the NAV is 38.2 and 35.6. Both the plans matured on 31/3/2010. I invested on 1/4/2005. Maturity on 31/3/2010. How many years is the investment? 5 years. You need to analyze all of this. You'll have to analyze all computation of units on maturity, first reinvestment, second reinvestment, third reinvestment, fourth reinvestment, bonus plan, all that you have to do. What is the effective yield? Effective yield per annum. Till this, if you ask me, I will do the same formula only. But they have given something like this. This is to do IRR calculation. This is to do IRR calculation. This is to do IRR calculation. How is the IRR going to be done? For example, here, day 0, 1 lakh investment. Day 0, 1 lakh. Year 0, 1 lakh, negative. Assuming year 10, 10.4 you can't do in your notebook, okay? Year 0, negative 1 lakh. Year 10, positive 8 lakh 19,059. One positive NPV, one negative NPV, IRR calculation. I will not discuss IRR now. I'll discuss when I go to capital budgeting. But what you need to do, one positive NPV, one negative NPV, and what is your outflow? Day 0. What is your inflow? Last day. Last day is your inflow. For example, the question which we did, 10.4 years you can't handle in your calculator, okay? I can do it in Excel, but you can't do it. Year 0, year 10 it has to be exactly. That is why in this question, year 0 is my investment. Maturity is exactly year 5. Maturity is exactly year 5. So what will you do first? You will analyze the dividend payout plan, calculate the units on maturity, which is a time consuming exercise. You have to spend the entire time around there. I don't want you to do this, okay? I will tell you if needed. This question also I don't want you to do at home. Assuming you complete all of this. You complete all of this. This is the normal formula you follow. Normal formula says 3.9%. IRR will be closer to this. IRR will be closer to 3.9%. Exactly, it will not be not very close also. It can be very different. High difference can also be there. But it will be closer to 3.9%. I have been given 2%, 4%, 8%, 13%. 2 and 4 will help for plan 1. 2 and 4 will help for plan 1. Maybe 8 and 13 for the other plan. 8 and 13 for other plan. One positive NPV, one negative NPV. All this you know. How to calculate IRR also I will discuss, but not now. I will discuss in capital budgeting. But most of you should be aware from CA Inter. It's not that I'm teaching. It's not that you need AFM knowledge to know IRR. IRR is your CA Inter. So you did all this calculation. This is your outflow. This is your inflow. One positive, one negative IRR. Without time value of money, 3.9%. IRR exact is 3.64%. IRR exact is 3.64%. If you take 10 years, last question we did 60%. No, IRR would be only 40-50% for that. IRR will be very low there, because on a 60% 10-year period, when you go through IRR logic, you may end up getting even 35-40%. Anyway, you can't do that question under IRR approach. For IRR, you need exact number of years. Exact number of years. I can do in Excel and tell you, but that doesn't serve any purpose. Similarly, plan B, bonus and all you're doing, you got the value 13%. 13%. IRR, I'll try 8%, 13%, one positive NPV, one negative NPV, one positive, one negative. I am not getting into the calculation part and all, because I know when calculation is needed, when it is not needed. 8% and 13%. And I will share you one more PDF where exactly this will be mentioned. So you know where to focus on in every question. I'll share another PDF in the group where I have noted down all of this. This I'll give it to you. No solving. You also should not solve. You also should not solve this and waste your time. Solving is just waste of time if you try to do for this question. Okay. IRR is 10.78%. IRR is 10.78%. Without time value of money, if you consider 13%. With the time value of money, you consider 10.78%. 10.78%. How you do IRR, we will discuss later, but most of you should be aware. Most of you should be aware how IRR is calculated. If you are not aware, one positive, one negative, and there is a formula. I don't want to discuss all of this now, because this will be discussed in capital budgeting chapter. Any doubts on this? This is another approach. Effective yield. Return computed as annual return. Return computed as annual return through formula ignores time value of money. Ignores time value of money, and hence not fully accurate. What can you do? Return as IRR of the investor. Return as IRR of the investor. How will I do? Day 0 outflow, maturity inflow. Why is ICAI not doing IRR approach for every question? Reason is very simple. You are not allowed to use a financial calculator. You are using a normal calculator. If somebody, CFA and other places, they allow in scientific or the financial calculator, where you put the number, IRR will automatically come from the calculator. You are unnecessarily, we are unnecessarily doing this. Somebody does one positive NPV, one negative NPV, just waste of time. You are also wasting your time, because what are you going to get in the practical world? There are calculators available. ICA should have got upgraded to that, saying that please use financial calculator, and from the calculator you get your positive NPV and sorry, you get your direct IRR. No positive, no negative. Nobody is going to do positive NPV and negative NPV. So reason in exam is, only reason I feel is, doing IRR is time consuming. So maybe the solutions don't have IRR approach. Don't have IRR approach. 124 months. I don't use a financial calculator, but if you give me a financial calculator, 124 months IRR, I'll get it in the calculator itself. I'll get it in the calculator, 124 months IRR. Your calculator can't handle it. Your calculator can't handle that. So that is where we have to go through normal formula. We have to go through normal formula. Any doubts on the concept? This also you need not do. What you need to do? This. One extra thing which you will do at home is, whenever you revise, today you're going to anyway revise, that concept number you're seeing, no, along with that, if you can write a question number, if you can write a question number at home, that will make it more easier for you at later stage. For example, this, I think 7, 8, whatever number, not do it now. You'll not be able to do it now. But if you can write question number against the concept number, whenever you want more clarity on a concept, example itself is sufficient. Amount invested on day 0, 2 lakh. Amount received on maturity 239. 3.9% copy pasted from there only. 3.64% copy pasted from there only. I've copy pasted 3.9 and 3.64 from that place only. I've not done anything new here. I've just copy pasted the same question here. What I want you to do is only this. I don't even want you to see that book. I don't even want. Ideally, a student should not even open my question bank. You should only see concept book with full clarity. If you are able to do, great. Some practice you want, note down your difficult questions. Note down your difficult questions. Able to understand this IRR approach. In exam, if you have to do IRR approach, they have to give effective yield and maybe 2-3 rates below the question. If they don't do give 2-3 rates and still ask you for IRR, then you have to assume some rate and proceed. One positive NPV, one negative NPV. At CA inter, you would have understood, you assume something, one positive, one negative, and then you get to the answer. Any doubts on this? Any doubts on this part? Can we proceed? Yep. Okay, 6 and 7, what we did were forward working question. 8 is a reverse working question, which also got tested in Jan 26 exam. It got tested in Jan 26 exam as well. We will see the question first and then keep solving it. Measures corpus and AMC on 1/4/2015 floated 2 schemes: dividend plan, bonus plan. Mr. X, an investor, invested in both the scheme. Following detail except the issue price are available. Except the issue price are available. There is a dividend plan. Dividend means dividend reinvestment plan. Dividend means what? Dividend reinvestment plan. There's a bonus plan. 1/4/2015, I don't know. Individually, there is a bonus ratio given. There is a dividend percentage given. And there is a dividend plan NAV given. There's a bonus plan NAV given. All that they have given in the question. Additional detail. I invested 920 and 10 lakh. Profit is 27,748.60. Average profit. The word average means yearly profit. The word average would mean yearly I make a profit of how much? 27,748.6. Yearly profit is 27,748.6. Average yield means yearly yield. Yearly yield is 6.4%. You are required to calculate the issue price. What I am going to do in this question, this is a good problem, we'll do it together, okay? What we are going to do is, I'll first calculate the last day value. What is last day values? Investment plus profit. What is profit? How many years is my investment? 1/4/2015 to 31/3? 5 years. In the first plan, my profit is 27,000 into 5 years. Second plan, my profit is 6.4% into 5 years. 6.4% into, one is given in percentage term, one is given absolute. You get the last day value. What is last day value? closing NAV into closing units. Closing NAV into closing units. From the closing units, reverse and get the one step backward closing, another step backward closing, another step backward closing, which would be the opening. Which would be the opening. You have to do it in the reverse order. You have to do it in the reverse order. Start with the closing, get one step forward, get another step forward, and we may reach the opening. We may reach the opening. Once you reach the opening, 9,20,000 divided by the opening units is the opening NAV. 9,20,000 divided by the opening units. Opening units is the opening NAV. I'll spend a lot of time on problem discussion, then only solving. Okay, 920 divided by what? Opening units. You will get the opening NAV. Able to understand this question? What is our mind working? Forward. What ICI did? Reverse. In the reverse order. Can we start? Working note 1, dividend plan. Dividend plan. Dividend plan. Note 1, computation of closing units. Closing units. Most of the concept discussion will happen with problems only, and I'll keep going back to concept book in the end. Computation of closing units. Profit equal to closing value minus opening value. Profit equal to closing value minus opening value. Profit is equal to closing value minus opening value. In the first plan, then the table is not formatted properly. This is dividend plan. This is bonus plan. I should have formatted it extended. In the first plan, my investment is 920 and profit is how much? 27,748.60 per year. 27,748.60 per year. Per year. So profit, right? 27,748.60 into 5 years. Into 5 years. Into 5 years. Clear? Closing values, closing units into, tell me what is the NAV on the last day? 49. One good part, no securities transaction, no, all that will be more difficult. Closing units into 49. Closing units into 49. Opening values, opening units into opening NAV, I don't know them. I know the value only. I know the value, but I don't know what is opening units, which is what we are trying to do. So investment is my opening value, and the closing values, closing units into what rate? 49 into 49. How much is the opening investment? Please do the calculation. Tell me the closing unit. Tell me the closing units. Twenty-one 607 units. 21 607 units. Any place you don't understand a number, let me know, but don't focus too much on the calculation. Sometime you're going little slow on the calculation, you can copy the number also. Focus, how is it every number coming? 21 607 units. Clear? When is the last dividend paid by the company? Last dividend. Note 2, dividend analysis on. Analysis on last dividend is when? 31/3/2019. 31/3/2019. Dividend analysis on 31/3/2019 from the reverse order. From the reverse order. Open the table format which we used, same table format. Date, opening units, dividend rate, dividend rupees, date, opening units, dividend percentage, dividend rupees, reinvestment, units allotted, closing units. Last dividend. Last dividend. I'm starting with 31/3/2019. Then I'll go back to the earlier dividend. I'll again go back to the earlier dividend, whatever number of dividends are there. Good part, only 3 are there. More is there means more time consumption. 31/3/2019. Right, 31/3/2019. Opening units is A. I don't know the number. X, A, Y, anything you can write. A. Opening units is A. Any alphabet is fine. What's the dividend percentage on the three? 15%. Dividend in rupees, listen. A into 15% into face value. A into 15% into face value. Into face value. A into 15% into face value. What is the face value? 1.5A. A into 15% into 10. 1.5A. 15% into 10. 1.5A. Clear? What is the NAV on this day? 45. Units allotted is 1.5A by 45. 1.5A divided by 45. This is the reverse working computation. You will understand once I close the closing units. 1.5A. I'll repeat again. Opening A, dividend rate, any percentage given in the question, 15%. Apply this on face value. On face value. A into 15% into rupees 10 into rupees 10. You get what? 1 point, participate, 1.5A, reinvestment NAV 45, units allotted 1.5A by 45. Listen, closing NAV is A plus this equal to 21607. Equal to 21607. You'll get answer to A. Equal to 21,607. Then we will go back to the earlier. 21,607. 21,607. 21,607. A plus 1.5A by 45. 1.5A by 45. Any doubts on this? 1.5A by 45. I'll repeat again. Opening is A, dividend percentage, any alphabet you can take, dividend percentage into face value, dividend in rupees, dividend in units, add the two, 21,607. So I solve this now. A plus, it will become 45A plus 1.5A divided by 45 equal to 21607. Let me know what do you get as A. 607 into 45 divided by 46.5. 20,910 units. 20,910 units. If you have understood this, we will do the second scenario. By that, full clarity will come. There's a third scenario which you will do. You will do in your notebook. I'll do it in the screen. Third scenario. Any doubts on this? Before this, when is the earlier dividend? Note 3. Before this, when is the dividend? 31st 18. 31st March 18. Same story. Start with opening A. Can I do it in a single table and all? Depends on how comfortable you are to work with reverse working. Not comfortable, do separately only. Opening A. Opening A. You need not wait for my instruction if you've understood it. Not understood, want more clarity, do it along with me. Opening A. What's the dividend percentage on this date? 10%. A into 10% into 10. Why same alphabet? Your wish, you take any other alphabet also. I'm not bothered. Only thing is it will be equated to some other number now. A plus 10%, sorry, A into 10% into 10, which is A as it is. A as it is. A as it is. What is the reinvestment in NAV? Participate, guys. I want participation. 50 units allotted is A by 50. A plus A by 50 is now equal to what units? 20,910. 20,910. We will complete this part. Other part you will do in your notebook. I'll do it in the screen. That will give me the opening units. That is equal to that into NAV is the investment. That will give you the issue price. 20,910. 20,910. 50A plus A by 50. 2910. 2910 into 50 by 51. In case somebody wants to check the answer, write 2500 in place of A in the calculator, do the forward working, see whether you're getting 2910. In case anybody wants to check at some point of time, 2500 into 10% into 10 is the dividend, divided by 50 is the extra units, and put together you should reach 20910. Put together you should reach 20910. 20910. Any doubts in this? When is the dividend before this? 31.3. You do in your notebook. I'm doing it in the screen. Don't see here. Don't see the screen. 2017. Don't see the screen. You keep doing it. You keep doing in your notebook. Refer the screen once you're done. $20,000 units. Very simple computation. There's nothing tricky and all. It's just that it has to be done in a reverse manner. Somebody wants to cross verify, you have to start with 20,000 in the calculator, go to 2500, then 2500 in the calculator, go to 2910, 2910 in the calculator, go to 21607. It will happen in the forward working. It will happen in the forward working. 20,000 units. Any doubts on this? Any doubts on participate, guys? Yes, no, at least you have to say 20. I know you have become tired now. I am also tired, but you'll have to participate. 20,000 units. 20,000 units is the initial investment. Issue price. Everyone done? Anybody still doing? Anybody needs time? 20,000 2 minutes. Okay, okay, complete 20,000 units. Complete the calculation. 20,000 units. The initial investment is how much value? What was the value of the investment? 9 lakh 20. Issue price is equal to, issue price is equal to 9 lakh 20,000 divided by 20,000 units. Divided by 20,000 units. How much? This obviously is a time consuming calculation. I am not going to say that it's very easy calculation and all. Lot of focus is needed to do the reverse working question. Any doubts on 46? Can we proceed? Any doubts on this? Done? Can we proceed? Next, bonus plan. Analysis of bonus plan. Bonus plan. Note 1. Computation of closing units. Closing units. Same logic. Profit is equal to maturity value minus investment. For plan B, what is the profit they mentioned? 6.4% of my investment. 6.4% per year. Per year. 6.4% is per year. 6.4% is per year. On what? On the investment value. On the investment value. 6.4% on which value? Investment value. Profit is equal to, profit is equal to maturity value minus investment value, or closing value minus opening value. Closing minus opening. Closing minus opening. 6.4%. 6.4%. How many years is the investment? 5 years into 6.4% into 5 years into what is the investment value? Sorry, 10 lakh. Okay, 10 lakh. Maturity values. Closing units. What is the closing NAV? 40. As we practice, at some stage you'll have to pick on the speed also. Reason is your exam questions are 4 mark, 6 mark question. That takes up a lot of time. 30,000 units. This is what got tested in the recent exam. Okay, this is what exactly got tested in the recent exam. You have to get the closing units. From the closing units, you have to come to the opening units. Bonus plan was tested, not reinvestment plan. Come to the opening units, and after you come to the opening units, you'll have to calculate the opening NAV. That was the requirement in the exam. Any doubts on 30,000? Any doubts on 30,000? Note 2. When was the last bonus declared? Analysis on 31/12. Listen, I can do a table, or without table also bonus is possible. Table your wish. I feel without table itself will do. What is without table? Opening units A bonus is A into 1 by 5, 2 by 5, 3 by 5, 4 by 5, something will be given, and closing is there. Closing is there. I want to do it in table, do it in table also. Printed answer will have the table approach. I feel bonus we can do without table also. Opening units plus bonus units. Opening units, opening units plus bonus units equal to closing units. Opening plus bonus is closing units. Closing we know, we are getting the opening and then go to the reverse. Go to the reverse. Opening units, please write it as A. Opening is A. What is the bonus ratio on this day, 31/12/2018? 1 by 5 of A. 1 by 5 of A. 1 by 5 or 0.2A. You can just write it as 0.2. That will make it easier. 0.2A. 0.2A. 1.5 of A. This is what exactly got tested in exam. Okay, 1.1 by 5 of A. 1 by 5 of A, which is 0.2. 0.2. 25,000 units is what I will have on the opening of 31/12/2018. Reinvestment, more trickiness. Bonus plan, relatively easier to do. 25,000 units. Can we proceed? Any doubts on 25,000? Opening units plus the bonus units. Opening units plus the bonus units will give you the closing units. Opening units plus bonus units will give you the closing units. Opening is A, bonus is 1 by 5 of A. 1 by 5 of A. When is the prior bonus before this? Analysis on 31/12/2016. 31/12/2016. Opening units plus bonus units equal to closing. Reverse order. We started with 30. From 30 we have got 25. From 25 we may get some 18, 17, 16, some number, I don't know. We'll do the calculation. We'll keep going in the reverse order. We started with 30. 30 gave 25. 30 gave 25. 25 will give some number. We'll do the calculation. Any doubts first on this? Clear? Can we proceed? Opening, take it as A. What is the bonus ratio on this day? 1 by 1 by 4 of A. 0.25. 0.25. 1 by 4 is 0.25. And this has to finally give me, this has to finally give us the issue price. This has to finally give us the issue price. One place, see, some areas I may do calculations faster. You have understood the calculation, but you are not able to pick on the calculation speed, you copy the answer. You have not understood what is being done, then don't copy it. Then ask me the doubt, okay? But some places I generally get into faster calculation because calculation is not my focus area. Because I'll say A plus 1 by 4 of A is equal to 25,000, A is equal to 20,000. Some student will take time to get to that 20,000. Some may get it faster also. Don't worry about, you know how to solve, but you're going to take time to solve it. Don't worry, you can copy the solution. You're not even understanding how did that 20,000 come. Don't copy it. Then ask me because I can see your reaction, but still I would want you to tell me in case you have a doubt on the number. Issue price. How much was the investment value? Lakh divided by 20,000. Rupees 50. Rupees 50. Any doubts on this? Rupees 50 is my investment value. Rupees 50 is my investment value, which I make it on day 0. Investment or issue prices rupees 50 per unit. Any doubts on this? Clear? Able to understand this? because it's a lengthy calculation. I'm giving you 2 minutes. Go through all the solution. Let me know if there's a doubt. 2 minutes for you. Okay. I'll now be covering 2, 3 concepts where mostly I'll be only solving it. You'll only be maybe another 15 minutes we spend and then take a break. Okay. Okay. No solving by students, only faculty solving. A very simple question only. But still, it has come once in mock test paper, part of the ICI study mat question. Let's discuss this question. XYZ plan, a hedge fund currently has assets of rupees 20 CR. You're not going to solve it, okay? No solving by you because your focus will shift to calculation then. Currently has assets of rupees 20 crore. Hedge fund is basically a fund which invest in risky investments. That's the meaning of the hedge fund. Nothing to do with hedging as a concept, okay? It's like a mutual fund. Let's take it's a mutual fund. It has assets of how much? 20 crore. What is this asset of 20 crore? I collected money from all of you. 20 crore I collected. Mr. A, the manager, I'm the manager. I'm the manager, charges fee of how much? 0.1% of the asset. Whatever value I'm managing, I charge what? 0.1%. In addition, it charges an incentive fee of 2%. Incentive fee of 2%. The incentive will be linked to each year, to gross return each year in excess of the portfolio maximum value since the inception of the fund. Portfolio maximum value since the inception of the fund. That is, maximum value the fund achieved is how much? 21 CR. Variable incentive fee is basically, in the mutual fund, they don't have any variable incentive fee. But what I am charging is, you have given me money. I'll charge you 0.1% of the funds plus, if I earn a lot, on that extra I'll charge how much? 2%. On the extra I will charge 2%. Otherwise I'll charge how much? 0.1%. I'll charge you 0.1%. Only on the extra earning I'll charge you how much? 2%. And that extra is how much? From 20 CR I have to touch how much first? If I go beyond 21, then I ask for incentive. Then I'll ask for incentive. Till 21, no incentive. Benchmark return to make me eligible for incentive. I will get incentive if 20 at least touches 21. 20 at least touches 21. 20 touching 21% is how? 21 is how much percentage? 21 minus 20 divided by 20. If I earn more than 5%, if I earn more than 5%, what is more than 5%? 21 is the cutoff. 21 is the cutoff. Below 21, you keep no incentive. No incentive. In short, B and C, no incentive. B and C, no incentive. Minimum how much I have to earn? 5%. Then what will I get in B? 20 CR into 0.1%. B and C, 20 CR into 0.1% on the opening assets, not on the closing. Closing will be plus or minus something. On the opening, I'll charge how much? 20 CR into 0.1%. Can you tell me what is the value? 20 CR into 0.1%. 2 lakh. No variable fee. No variable fee. Why no variable fee? I had to touch what percentage? 5%. Did we touch 5% in the two situation? No. We did not touch 5%. If you touch 5%, you'll be eligible for variable incentive fee. These questions, why I discuss this, I feel with my discussion itself you'll understand it. Writing is not mandatory. Still, somebody wants to practice, you can practice. You don't want to practice, don't practice also. I know which question I want you to practice. Even without practice, you should be in a position to handle this question, is my view. That is why I'm saying only faculty solving. Only faculty solving means I don't want you to even do at home. If needed, I'll tell you which questions and all I want you to do. This case, how much we are earning? 29%. So I started with 20 CR. I earn what percentage? Can you tell me what is the value I get? 25.8 or extra 5.8? Extra 5.8. In this, what will happen is, first 20 CR, 0.2%. 20 CR is 0.1%. 20 CR is 0.1%. This is what my fixed fee. Variable fee is anything in excess of 21. Anything in excess of 21. Anything in excess of 21. And I'll charge a very big number, 2%. 0.1 is very less. And I'm charging what percentage? 2%. So I will charge 25.8 minus 21 into 2% into 2%. Numbers and all I don't want. This is the logic. Logic is on the excess. On the excess, you're going to charge what? 2%. On the excess, you're going to charge what? 2%. Excess on top of what? 21. Question can say any return in excess of 12%. In excess of 12%, you'll get variable. Then 20 extra 17%. Extra 17. What is extra 17? 29 I earned. 29 I earned. Till 12 no variable. Till 12 no variable. Extra whatever percentage. Here also I could have done 20 extra 24%. What is extra 24? In excess of 5. In excess of 5 into 2%. Into whatever extra you are earning on the excess, I will charge 2%. On the excess I will charge 2%. On the excess I'll charge 2%. Able to understand this? In case you want to practice at home. Don't want to practice, I'm okay with this. I am okay with this question even without practice, provided you feel it is an easy question. You want to practice, see, practice, not practice, all depends on the amount of time available at your end. If you're writing later exams and all, 100% you should practice these questions also. Writing the just coming exam, then could be challenging for you to practice many questions. I'm trying to cut down the number of hours without cutting down the content. Content can't go down, but number of hours has to go down. Any doubts on the calculation here? Done? Can we proceed? Does this happen in the practical world? Yes, but not by a mutual fund. I work in a wealth management firm. We charge this to our clients. There's a fixed fees we charge. We also charge a variable fee from our clients whenever there's a cutoff. The cutoff can be 10%, 12%, depending on the cutoff. We give a cutoff of 12%. Anything above 12%, we charge a variable fee. Anything below 12%, only fixed fee. Loss also fixed fee. Loss also you will charge fixed fees. Any doubts on the concept here? And can we proceed? Okay. When I enter into a mutual fund, this I'll first discuss concept and then I come to question. There are two types of extra charges which can happen when you buy a mutual fund. When you buy a mutual fund or sell a mutual fund, extra charges. One is called front end load. Second is called back end load. These are the two names which are there in the practical world. Front end load means when you are doing the front transaction or the first transaction. Entry transaction. Load means one question you saw, no load fund. That's why I said I'll explain later. No load means no front end load, no back end load. No front end load, no back end load. Then what is this front end load and back end load? Front end load is charged when a person is entering into the mutual fund. Back end load is charged when a person is exiting the mutual fund. Where is the implication? You say NAV 1 minus NAV 0 D1 CG1 to calculate the return. Front end load will inflate the NAV 0. Front end load will increase the NAV 0. Back end load will reduce the NAV 1. Indirectly returns can go down. What is then front end load? Front end load is very simple. No formula and all as of now. NAV plus XX percentage of NAV. This XX percentage is front end load. NAV plus XX percentage of NAV is equal to public offer price. Public NAV is 10, but public have to pay 10.20. NAV is 10, but you have to pay how much? 10.20. NAV is 10, but you have to pay what? 10.20. NAV minus XX percentage of NAV. XX percentage of NAV redemption price. NAV is 10, but redemption will happen at 9.9. Redemption will happen at 9.9. I am entering, you are exiting. When I enter, I have to pay more than 10. When you're exiting, you will exit at lower than 10. Lower than 10. In India, front end load is abolished by AMFI. There is no concept of front end load in India. You cannot charge front end load. There is a formula. Don't see the formula as of now. I've explained the logic. I'll come to the question. Front end load, AMFI has told you cannot charge front end load. It used to be there till 2008. Exit load still continues. That is also on a period. What is on a period is, if you continue in the mutual fund for more than 2 years, they may not charge an exit load, or more than a year. You buy today, in 5 days you exit, they may charge a exit load. They may charge a exit load. This front end load as well as the back end load is the income of the mutual fund, which ultimately all of you will share again, which ultimately the unit holder will get it. One person will be penalized, everyone else will enjoy that gain. Everyone else will enjoy it. If you are exiting immediately, you will be penalized. Who will get the benefit of this? All other people who are staying back, in the mutual fund. Okay, front end load, extra charge on entry. Back end load, the amount which is reduced. There is a formula. I'll come to the formula and all in some time. Okay, logic is this. Let's see this question to be done in class with students. Unit price of a ELSS scheme is rupees 10. Rupees 10. Public offer price is 10.204 and redemption price is 9.80. NAV is 10 rupees, but public offer is happening at what date? 10.20. That extra 0.20 is front end load. Extra 0.20 is front end load. Extra 0.20 is front end load. Redemption is happening at what price? 9.8. When you're redeeming, you are given lesser 0.2. That lesser 0.2 is called back end load or exit load. Back end load or exit load. Let's start. Front end load is equal to front end load NAV plus NAV into front end load percentage. I'll then give you the formula, but this is the logic. Public offer price. This is the logic, but I'll give you the formula in the end. NAV plus the NAV into the front end load. NAV into the front end load is the public offer price. What is the NAV? 10 into FEL percentage. Take 10 to the other side and you will get the front end load percentage. 10 plus 10 into front end load percentage. 10 into front end load percentage. There's a formula. I'll come to formula in the end. Formula is my least worry. 10 plus 10 into front end load percentage. This goes to the other side. .204 into 100. What is the percentage you get? Okay. ICI StudyMat has given two answers saying that you can do two. What is the two? 0.204 is front end load. 0.204 is front end load. You can divide that by 10 rupees, which I feel is more logical. You can also divide this by 10.204. They have given two answers. One you divide by 10, another you divide by 10.204. Both will obviously give different percentage. Both will give different. What is that 0.204? That is the front end load. Extra 0.204. To convert into percentage, I have to divide by something. I can divide by 10 rupees or 10.204 as per ICI answer. Both they have given. They have given both. I feel 10 is more logical. 10 is more logical. So you get a percentage of how much? 2.04 percentage. 2.04. That is, you have to pay 10 rupees and 2.04 percentage of 10 rupees. 10 rupees and 2.04 percentage of 10 rupees. 2.04 percentage of 10 rupees. Any doubts in this? Then NAV minus NAV into back end load. Back end load percentage is redemption price. NAV minus NAV into back end load. NAV minus back end load. Like we have front end load, there is a back end load. We saw a question called no load NAV. That time I could not explain it. Now we have explained that. Redemption price. What was the NAV? 10. 10 into BEL. Redemption price. I take redemption price to this side and this to the other side. Again, IC has given two answers for this. They say you can divide by 10, you can divide by 9.8 also. You can divide by 10, you can divide by 9.8. Coincidentally, if you do the other answer, you will get that as 2 and this as 2.04. That is more of coincidence. Okay. If you do the other approach, that answer will become 2% and this answer will become 2.04%. That is more of coincidence. Students ask me saying that are we getting this because of the question drafted that way? Yes. Technically, you should divide only by NAV. You should divide only by NAV. If you divide by the other number, coincidentally, it will become 2 and 2.04. Coincidence. It's not that it has to happen always. Coincidence, it will happen 2 and 2.04. I'm not sure if I've given both the answer. Yeah, alternative answer 2.04 and 2%. 2.04. This is the answer we got, no? Front end load. And this is another answer by ICI. 2 and 2.04. 2 and 2.04. Both ways okay. Don't go into formula, don't go into any of this. Okay, just understand logic and procedure. Just understand logic. Front end load is extra collection when you enter. Back end load is extra charge when you exit. Clear? Any doubts on this? Done. My first segment is almost over. Question 11, it says no solving by student, only faculty solving. So I'll discuss this question and then we take a break. We take a break after this. Once break is done, I will revise whatever we have done and then we keep proceeding forward to the next area. When I revise, you will understand with the concept book, whatever I spent in 3.5 hours can get over in 5 minutes. 5 minutes is what should ideally take in the revision phase. Let's see this question now. Asset management company of a mutual fund declared a dividend of 9.98% on the units under dividend reinvestment plan. The dividend is 9.98%. Investor are issued additional units for the dividend at the rate of closing NAV for the year. Closing NAV for the year as per the conditions of the scheme. That is reinvested at which rate? Closing NAV. The closing NAV was 24.95. The closing NAV is 24.95. An investor who's having 20,800 units at the year end. At the year end, he has what? 20,800 units at which year end made an investment in the units before the declaration of dividend. Before means dividend is declared later and I made investment before at the rate of what? Opening NAV plus an entry load of 0.04. Entry load of 0.04. NAV has appreciated by 25% during the year. NAV has appreciated by 25% during the year. Assume the face value to be 10. Reason why it is faculty solving is similar questions have been done. That is why it is only faculty solving. It is a good question. You can practice later at home if you want to do also. This is a good problem. Listen, I'll repeat again. How much is the dividend declared? 9.98% for the year ending 31st March 2021. Investors are issued additional units at what NAV? Closing NAV is how much? 24.95. Investor is having 20,800 units at the year end. At the year end means something extra would have got allotted and 20,800. And when did I invest? Before the dividend. Before the dividend is declared at what rate? Opening NAV plus an entry load of 0.04%. NAV has appreciated by how much? 25%. So listen, closing NAV is equal to opening plus 25% of opening. Opening NAV plus 25% of opening NAV. No, I'll ask you numbers alone you tell, no writing, okay? Closing NAV plus, sorry, opening NAV plus 25%, appreciation of 25%. What is the closing NAV in the question? Opening NAV is X plus 0.25X. Solve and let me know what is X. X plus 0.25X. 19 point. Any doubts on first 19.96? Any doubts on 19.96? This is how MCQs will come in exam. MCQs doesn't need a separate preparation. You can't prepare separately for MCQ. Students keep saying, sir, we want to prepare separately. What will you prepare separately? This could have been a descriptive question. The same could be an MCQ question also. How can I prepare separately for MCQ? You can't do it. Same, only good part is MCQ means some options are there. Assumption issues will go out. I take one assumption, different answer, another assumption, different answer. Because of the choices, I will get more or less closer to the right answer. 19.96. How many units are we having on the end? 20,800. 20,000. I want participation. How many units in the end? 20,800. Listen, opening units plus units allotted closing units. What is opening? A. What is units allotted? 9.98% of A. Any face value given in the question? Into 10 divided by the reinvestment NAV. Divided by the reinvestment NAV. Where did we do this? In the table format. In the table format. I don't want to repeat the same question. I don't want to leave this question also. I didn't want to leave it. I could have left it as homework also, but I felt I will reduce the number of questions which you have to do at home. Okay, 9.98% of what? Of the opening units. What is opening units? A. 9.98% of the opening. Can I do it in the table format? Please do it. Can I do it like this? Your wish. 9.9 percentage of opening units into what? Into the face value. What is the closing NAV? 24.95 is equal to 20,800 is equal to 20,800. That is the units I have at the end. That is the units I have at the end. Can you simplify this part and tell me how much is this? 9.98 divided by 24.95. 9.98 percentage into 10 divided by 24.95. Do 0.04a. 04a. 0.04a. Calculation I want you to do. When I say I am solving, you have to solve the calculation part. 0.04a. This is what? 20. A is how much? A good variant of this has come in September exam, where they did something else and all. I will discuss this later if needed, or you see the September exam question. They added something called as real return and all in that. That's a good variant. You see that later. I'll tell you when to see and all. 20,000 units. Number of units purchased will be 20,000. Number of units purchased will be 20,000. What is my investment value? 20,000. NAV was 19.96 plus extra 0.04. Extra 0.04. Extra 0.04. 19.96. What is 19.96? You did the calculation here. 19.96 extra what? 0.04. Extra 0.04. You want to practice this question, you can practice it. Other question I don't want, but this question you want to practice at home. You have understood all the workings properly, no need to practice. These two and all after theory. You have to read theory to understand this. Let's not spend time on the theory element as of now. I'll tell you later on the theory element. 20,000 units into 19.96 plus extra entry load is how much? 0.04. into 20 rupees 4 lakh. Any doubts on the calculation here? Any doubts on the computation here? With this, my first segment of the chapter gets over. I have bifurcated MF into multiple segments. First segment is return computation. Second segment is NAV focus. NAV focus will happen in the second segment. Any doubts on this? Any doubts till this? I will revise post break. Okay, post break. We'll resume again at 2 o'clock. We'll take a break now. Okay, let's continue with the discussion. I'll quickly revise what we did in the morning session. We started understanding what is mutual fund. Basically, you'll have to participate along with me. Basically, it is going to pool money from lot of investors, invest the money as per the specified objective, earn returns for the investor post deduction of its own expenses. First concept we learned is MF return versus individual return. What is the formula to calculate without opportunity cost? MF return is equal to, don't look at the screen, own return divided by 1 minus initial expense ratio plus annual expense ratio. If there is an opportunity cost element, what you end up doing is do a cost benefit analysis. Cost of MF investing is lower return. Benefit of MF investing is increase in professional income. Net off the both and decide whether MF is better or own investing is better. Holding period return formula, what I get back minus what I give divided by what I give into 100 without 12 by M. What I get back is called NAV1, D1, CG1. What I give is called NAV0 divided by NAV0 into 100. If you do into 12 by M, that will become annual return. Without 12 by M, it will become holding period return. Linking the two together, you can calculate period of holding as balancing figure. Holding period return equal to question mark. Annual return equal to 12 months. Annual return is for 12 months. Holding period is question mark. Cross multiply and then you get to the answer for your holding period. Return computation. I have not discussed this concept, but few things I can discuss now. Return computation, when you calculate, ideally we will do 12 by M. Ideally we will do 12 by M for annual return. If a question uses a word called 1 year consists of 365 days, 1 year consists of 365 days, please do calculation with the number of days. Would it lead to a big variation? No. But will ICI okay with months calculation? That also unfortunately no. So if they say 1 year consists of 365 days, we did a problem of 1 month return. We did 12 by 1. You can't do 12 by n into 365 divided by 30 or 31. Divided by 30 or 31. If they mention what? A year consists of 365 days, some line. Is it only for mutual fund? No, it is for everywhere else in AFM. Wherever you are doing days or months computation, if the line used is 1 year consists of 365, 360. But that leads to another problem. Another problem is I invested on Jan 1. Maturity or I sold on Jan 31. Invested on Jan 1, sold on Jan 31. Now for days calculation, should I consider January 1, ignore January 1, consider January 31, ignore January 31? All these are assumption. Jan 1 and 31 both you consider 31 days. Jan 1 you consider, but 31st you don't consider, 30 days. Or 31st you consider, first you don't consider, 30 days. Both are ignored in days, 29 days. Both are ignored, 29 days. This is a headache you will have if you do days calculation anywhere in the AFM. Anywhere in the AFM, wherever we are doing calculation, we can do days computation. If a question specifically, we'll be doing later something called as futures valuation. There also we will use this. Interest computation in interest rate risk management. There also we will use this concept. Wherever days, if says 1 year consists of 365 days, headache is extra into 365 by number of days. As a consistent rule, what I tell student is ignore 1 day, consider 1 day. That is what mostly will work. Again, I'm not giving guarantee, okay? 1 day they may consider, 1 day they may ignore is my view. That also I'm not giving you with confidence, okay? But mostly, if they say date of investment 1st March, date of maturity 31st March, consider 1st March, ignore 31st March. Or they say you invested on 1st March morning, consider 1st March in calculation. You exited on 1st March evening, consider 31st March also on the calculation. If you have exited in the evening, entered in the morning, both are considered. This is practical angle. When did we enter? When did we exit? All that clarity they will not give. Date of investment or redemption may be considered ignored in number of days based on assumption. Based on assumption. Investment made on March 1, redeemed on March 31 can be taken as 31, 30, 29 based on assumption. Based on assumption. I don't have a straightforward direct answer for this. Can be 31, can be 30, can be 29. I know what is there in the answer. I'll say take 31. That I know answer. But in an exam situation, this headache will come if days computation is asked. Is it only for this area? No, this is uniformly across entire AFM. Across entire AFM, if question says 1 year consists of 365 days, you have to do into 365. I have to calculate interest on 10 lakh into 6%. I have to calculate 1 month. You have to calculate. We'll do 1 by 12. If they say days, 30 by 365 or 30 by 360 depending on the data. This is uniformly across everywhere. Interest calculation 30 by 365. This calculation 365 by 30. Whatever is the requirement. Wherever the word question specifies a year consists of 360 or 365. Unfortunately, I should not be discussing this itself. This is just waste of time. Why waste of time? Because in the practical world, I will have clarity whether to do days calculation or months calculation. And I'll also have clarity on whether to do 30 days, 31 days, 29 days, all will be there. There is another angle which will come when I do interest rate caps. 366 days leap year data will be there. So all these unnecessary extra headache which you may face in this area whenever you doing your calculation. This is uniformly across entire AFM. I may discuss this maybe in 10-20 questions. Should I do 365 by days or should I do 12 by number of months? 12 by number of months will both give same answer, almost same but not exact same. Almost same but not exact same. Dividend payout versus reinvestment plan. We have already discussed this. Dividend payout NAV1, NAV0, D1, CG1. Reinvestment closing value minus opening value divided by opening value into 100 into 12 by M if you want. The dividend rate is on face value. Yield is on NAV. Again, good examples are there. At home, you practice all these examples. This 100% you have to do. Examples 100% you have to do. Today, post going home, you will take some rest, read concept 1. Without reading also, first you will try to tell on your own. If you are not able to tell, read concept 1, solve the MCQ below. Solve the MC. This is mandatory. 100% you have to do. We have 4 types of plan: growth plan, bonus plan, dividend payout plan, dividend reinvestment plan. How you calculate units for dividend reinvestment? We start with date, opening units, dividend percentage, dividend in rupees, reinvestment NAV, units allotted, closing units. The second thing we saw was bonus plan, where you start with units held, bonus ratio, units allotted, closing units. Can be a forward working, can also be a backward working. Return for close ended. I have not discussed the concept. I'll discuss the concept MCQ at home. There are 2 types of mutual fund scheme. One is called open ended scheme. Second is called close ended scheme. What is open ended scheme is I can buy the mutual fund whenever I want. That is, how do I buy mutual fund? I give money. You gave money to me. I gave you units. You don't like the units. You return the units to me. I give you back the money. In a close ended, I tell very clearly, Jan 1, I'll take the money. Jan 1, 2017. And I'll give you back only on Jan 1, 2025. In between, don't come back to me saying that you want more units or you want to exit. Close. It is closed. I'll take the money and close the fund. Close the fund. You cannot take back the money even if you want. You cannot take back the money even if you want under a close-ended mutual fund. Under a close-ended mutual fund, entry date is decided, exit date is decided. Some variant is called interval fund. What is interval fund is entry decided. Also, I may give you entry again after every 3 months or 6 months. Some periodicity I will decide. Entry once, entry and exit every 3 months. Every 3 months once I'll give you, or every 6 months. Close-ended, pure close-ended, entry once, exit once. I invested into the mutual fund. I liked the fund, I invested everything fine, but suddenly I'm not performing well. I'm not performing well. You want to exit now. You want to exit now. You came to me, I said nothing doing. You cannot exit by giving money to us because we are not ready. We are not ready to take back the funds. What is close-ended scheme? Under close-ended scheme, I will not take back the money from you, or I'll not give back the money. Under rules, it is mandatory that a close-ended mutual fund is listed in the stock market. It has to be listed in the stock market. So like you buy a share, sell a share in the stock market, you can buy or sell mutual fund, in the stock market during 9 a.m. to 3:30 p.m. Whatever trading you can do, you can trade. Normally how mutual fund happens is, you give me money, I give you units. You give money, I give you units. Later you return the units, I give back the money. This is what normally mutual fund will do. Under close ended, I will collect 10,000 CR. Initially I wanted to collect some money. After collecting, forget for 8 years. You want to exit out of the mutual fund, possible. How will you exit? You sell. Somebody else has to buy. Somebody else has to buy. You will sell, and somebody else has to buy the mutual fund. Somebody else has to buy the mutual fund. Now there is one issue. Whenever we are doing in a normal market, what is normal market? Directly with me, buying and selling will happen at NAV. Buying and selling will happen at NAV. When you do it in the stock market, the NAV is 20. Every day NAV will be declared. NAV is 20. But the trade may happen at 21 also. The trading may happen at a higher price or at a lower price in the market. Classic example, 20 days or maybe 2-3 months back, silver ETF or silver close-ended mutual fund. The real price of the NAV was 100, but people were buying at 120, 130, 140 because they felt silver is going up significantly. Huge demand in the market. Buying and selling, price will keep changing. So under a close-ended mutual fund, my formula, to cut it simple, my formula is not NAV1, NAV0. P1 minus P0. P1 minus P0 for return calculation. P1 minus P0, D1, you will get dividend, you will get CG1, everything you will get. But the formula is what? P1 minus P0. Where is the difference here? The P1 can be higher than NAV1, can also be lower than NAV1, can be higher than NAV1 or lower than NAV1. That is the only difference in the formula. NAV1 and NAV0 will be replaced with what? P1 and P0. Entry and exit on only once. So I entered into the mutual fund. I panicked. When I panicked, I pressed a sell order. So many people pressed a sell order. Price will go down. The real price is this much, but you may sell it at a lower price. Everybody wants to buy silver. The real value is this, but you are paying this much. This can happen in a close-ended mutual fund. The technical name to this is called ETF, Exchange Traded Fund. That's the technical name in the stock market, Exchange Traded Fund. There is one example there. You see this at home, but concept is very simple. Open-ended, entry and exit with me. With me, I'll collect the real value. I'll collect the fair value only from you. If fair value is 10 rupees, I'll collect 10 rupees. In the stock market, when you press the order, instead of 10, you may end up paying 11 also. Or you may end up paying lower also. So, only change in the formula is not NAV1, NAV0. It will be called P1 and P0. IC has not tested it, but I have still kept one example for you to see at home. Taxation impact we saw. Cost of acquisition of bonus unit is 0 and STT is not a tax deductible item. STT is no. Only this much you revise, it is sufficient. Effective yield, our normal approach is to do NAV1, NAV0 or what I get back minus what I give divided by what I give into 12 by M into 100. That ignores time value of money. You want to consider time value of money, day 0 outflow, day 365 inflow, IRR calculation. You do the IRR calculation. Front end load, extra collection from the customer on the date of entry. Public offer price minus what you pay is, what is the NAV? The gap is entry load. divide by NAV, divide by public offer price. You can divide by either. Similarly, NAV minus redemption price, you can divide by NAV or you can divide by redemption price. Now I go to the next concept. I've spent 14 minutes to revise what I did in the previous session. In that also I had to explain two new concepts. If I was not explaining those two new concepts, that days calculation and close ended, take me 5 minutes. 5 minutes is what it will take me to cover 10 concepts. And you should ideally go home, take, for me 10 minutes, for you could be 30 minutes. That's okay. For you it could be 30 minutes and maybe another 30 minutes to solve the question. You'll have to solve the MCQ also, no? So it can take you time. I have no issues in that. MCQ solving mandatory. Now I go to NAV. We have been using this word NAV till now. Let's understand the term net asset value. What is net asset value is a mutual fund makes investments. What type of investments it will do? It can do equity investment. It can do debt investment. It can do real estate investment. It can do commodity investment. It can do silver, gold, any investments it can do. NAV is equal to market value of all asset. Market value of all asset. What are the assets? Market value, not book value. Don't say in my books of account I've recorded at this rate. No book value. Market value of all assets minus any liability divided by number of units. Divided by number of units. When is it calculated? Every day around 12 o'clock or 1 a.m. This is released by every mutual fund. Every mutual fund has to release this on a daily basis. Maybe in future you could be working on the accounting side of mutual fund also. As a chartered accountant, you may end up working there also, where every day you have to track, calculate NAV, somebody will observe it and then release the NAV on a daily basis. Why is this critical? Because a person may enter into mutual fund any day, exit out of the mutual fund any day. If you enter, you want a denominator, you want to exit, you want a multiplier to take the money out. Take the money out. Every day NAV has to be declared. What is the formula? Very simple. All assets minus all liability. No accounting angle. Don't tell me accounting angle. Accounting is book value, market price, whichever is low. All that is not there. Only fair value. Only fair value. You have to record everything at fair value. If you have any liability, if that liability does not exist, don't record it. In this case, every day accrued expense will also be recorded. Every day accrued expense. Every day, because every day NAV is calculated. In a month, salary expenses 1 CR. Every day salary expenses 3 lakh in the calculation. Every day salary expense will be 3 lakh in the computation. All this will be decided by a model will get created. It will keep deducting all of this. Value of all asset, value of all liability. In the liability, first day 1 day salary, second day 2 day accrued salary, third day 3 days accrued salary. Till it is paid, it is a liability. Moment it is paid, cash will go down. Moment it is paid, cash will go down. Able to understand this? Value of all assets minus value of all liability divided by number of units. Assets of a mutual fund include equity investment, debt investment, money market instrument, cash balance, receivables, other asset. All this you have to value. For valuation purpose, you will have to use your other chapter which you are learning here called a security valuation, that we will see later. In a practical world, you will need understanding of security valuation. For classroom discussion, the data would be almost given directly. Liability can include outstanding expenses, amount payable on shares, other payable, whatever liabilities are there. One thing you have to understand is, this is a very important concept, not very critical, but student make a mistake here. There's something called as unit of a mutual fund and a share of a company. A mutual fund can buy shares of company A, company B, company C, company D. What students sometimes confuse is, they'll total up all the share numbers and say that is the number of units. That is wrong. Number of shares and number of units has no linkage. Number of shares and number of units have no linkage. What happens is, a mutual fund is investing in company A, company B, company C, company D. Suddenly student will add up all the number of shares and say that that is the number of units. No link at all. Both has no linkage at all. I had to write a line because many students have got this doubt. That is why I'm writing this line. There's no linkage between number of shares and what, number of units of mutual fund. Clear? Any doubts till this? What is NAV? NAV is the fair value of the mutual fund. There's some other formula and all, that is later discussion. I will give one by one. Okay, fair value of the mutual fund. How do I calculate fair value? Add up all assets, deduct all liability, divide by number of units, divide by number of units. Can the number of units change on a daily basis? Yes, number of units can change on a daily basis. Can the value of assets change on a daily basis? Yes, even without units changing, even without units changing, value of asset can change. Can value of liability change? Yes, accrued liability will get created, some liabilities you will pay. So anything can change, anything can change. What you need to do? All assets minus all liability divided by number of units, divided by number of units. Clear? Any doubts in this? I'll come back to some more points later on. There is something else to be explained. But what does NAV is the real value of a mutual fund, real value of the mutual fund 1 unit. Just give me a minute. Okay. In this question 12 is a homework question. You will have to do this at home. Easy question. Question 12 you will have to do at home. Now don't see it. Now you will not understand. Okay. Question 12 is homework. Note down. This is the first homework for today. Let's come to 13. Let's come to 13. On 1st April 2009, ABC Mutual Fund has the following assets and prices. Question 13 at 4 p.m. A Limited, B, C, D, E Limited, number of units of fund. 5 companies we have invested, number of units is given, prices. Calculate the following. NAV of the fund. What is NAV calculation? All assets minus all liability divided by number of units. Assume Mr. X sends a check of how much? 50 lakh to the fund, and the fund manager purchases 18,000 shares of C Limited. Somebody entered into the mutual fund. He gave how much? 50 lakh rupees. If a person is entering into the mutual fund, I have to give him some units. I have to give him some units. With this 50 lakh, I purchase shares, my asset increases, and I may have some cash balance still. I may have some cash balance still. What is the position? Position is what is the new NAV? We'll calculate. Calculate again the new NAV, third part. New NAV if the price changes at A, B, C, D, E, some new prices they have given. Prices undergo change on a daily basis. I don't see any liability here, only assets are there. Only assets are there. Can we start? Working note 1. Computation of NAV as on NAV as on what is the first date? April 1, 2009. First question on NAV will be going very slow. Any place you have a doubt, you let me know. Particulars calculation amount. Calculation amount. Particulars calculation amount. Market value of assets. Market value of assets. Market value of assets. We totally have 5 assets. Shares of A, B, C, D, E. Just put a total of that. Shares of A Limited. Shares of A Limited. Amount in bracket lakhs. To save some time, we'll do it in lakhs. You can do normal numbers also. Shares of A Limited. How many shares are there? 10,000 into 19.7. 1.97 lakh. 1.97. Keep writing like this. Shares of B Limited. B Limited. Shares of B Limited. How many shares are there? B Limited. 50,000 into 482.6. 241.30. 241.30 shares of B Limited. Shares of C Limited. Shares of C Limited. 10,000 into 264.4. 10,000 into 264.4 into 264.4. How much is this? 26.44. Shares of D Limited. Of D Limited. $674.90. Shares of E Limited. E Limited. Shares of E Limited. Of E Limited. How many shares are there? 30,000 into 25.9. 7 point. Total value of assets, no liability. 9.38. Total value of assets, you can check the numbers, 952.38. The good parts are the rework there, 952.38. Any liability in the question? No. Number of units. Number of units 8. Listen, that 8 lakh has nothing to do with the number of shares. 8 lakh has nothing to do with the number of shares. NAV per unit. 952.38 divided by 8. 4 decimal answer. 119.0475. 119.0475. 0475. Any doubts on this? Can you proceed? NAV is how much? 119.0475. Now somebody is coming into the mutual fund. A person comes into the mutual fund. 3 things will happen. Units will go up. Units will go up. Units will go up. I will have to give him 50 lakh divided by 119.04. That's the purpose of calculating. 50 lakh divided by what? 119.0475. A person is coming into the mutual fund. You'll have to give him something. What will you give? 50 lakh divided by 119.0475. You'll have to give him what? 119.0475. With that money, I buy what? Have they given any price for buying the C Limited share? Participate. Have they given any? I want participation. Any price is given. I assume it is 264. I don't have any other choice. Leftover money after that is cash. Leftover money after all of this is cash balance. After all of this is cash balance. Clear? Working note 2. New position of the fund. Totally 5 columns will be needed. Why 5 columns and all I'll explain. New position of the fund. Particulars calculation amount. Another calculation amount. What is that and all later discussion. 5 columns you open. Calculation amount, calculation amount. There's an extra calculation amount needed. What is that? In some time I'll explain. Okay, let's understand what is happening now. 50 lakh rupees one person is giving. You have to give him 50 lakh divided by 119.0475. You have to give him 50 lakh divided by 119.0475. A limited no change, B limited no change, C limited number of shares will increase. C limited number of shares will increase. D limited no change, E limited no change, and some cash could be there. Why is the other calculation column? That is for 2nd April, where the rate will undergo a change. Where the rate will undergo a change. First calculation amount is for part B. Another calculation amount is for part C. Is for part C of the question. Able to understand this? I'll do part C in some time. First, let's focus on part B. Let's write shares of A limited. Copy paste the same thing. A, you copy paste except for C. Please write the same thing again. C alone will change. C will change. Copy paste A, B, D and E. Same thing write again. A, B, D and E. Copy paste A limited, B limited, D limited, E limited. Can you proceed? C limited, how many shares we had earlier? Earlier. Extra how many shares? Into price, they have not mentioned any change. Into what rate? 264.4. 74.032. 10,000 plus extra 18,000 shares I'm buying. 10,000 plus extra 18,000 shares I'm buying. 10,000 plus extra 18,000 shares. Any doubts on the number? Any doubts on the number? 10,000 plus extra 18,000. I use this money. I use this money partly for buying this balance money, cash. How much money we had originally? How much money we got? 50 lakh minus 18,000 into. Listen, it is my assumption. It is my assumption that I purchased at the rate of 264. If question says closing is 290, purchase is 250. Here you will use 290. Here you will use 290. And here you will deduct 250. Because what is paid in the cash can only be deducted from 50 lakh. I can purchase at any other price also. No data, our assumption, purchase happened at the closing price. Purchase happened at the closing price. In case there is a difference between the closing price and purchase price, then closing price is for valuation, purchase price is used for calculating the closing cash. Closing cash. Any doubts on this? Let me know the cash figure. 2.408 total assets. Total assets 1.97, 241.3, you can note down 1,038. 1,002.38. Let's first understand what is this 1,002. This is I could have directly given the answer also, but initial set of question. What was the last time net asset? 952. No change in any asset value. No change in any liability value. 950 plus extra 50 is the asset value. 952 plus extra 50. extra 50 lakh came in, no change in any value. Share did not go up, share did not go down, purchase price, closing price, everything is same. So asset will go up by 50 lakh rupees. Asset will go up by 50 lakh rupees. In fact, in the practical world, if you are entering into the mutual fund immediately won't use it. It will be cash of 50 only. It will be cash of 50 and units, the value will go up. Next, number of units. Number of units. 8 lakh plus 8 lakh plus extra. Extra is I have to allot. At this place, many student by mistake add 18,000 shares. By mistake add 18,000 shares. No link between shares of a company and units of a mutual fund. Extra listen. 50 lakh, listen for a minute. Divided by 119,0475. 119,0475. You get the number and finally we'll write it in lakhs in the outer column. Extra units is 50 lakh divided by 119. After this NAV may change also, but my units allotted, that's all. My units is allotted. At what rate? At 119.0475. Divide and tell me the outer column figure. 8.42 lakh. 8.42 lakh. 8 lakh 42,000. 8 lakh 42,000. And this comes to one more important concept. Entry of a person or exit of a person will not impact the NAV of the mutual fund. Entry of a person or exit of a person. Why? On entry, numerator goes up, denominator also goes up. What is numerator? 952 became 1002. What is denominator? 8 became 8.42. 8 became 8.42. When will the NAV change? If the new person comes in with some entry load, exit load, or the new person comes in, I buy the share, share price goes up, share price goes down. If anything extra happens, NAV can change. You can divide and check, you'll get the same NAV. You'll get the same NAV. NAV will change for the rework scenario. I'll explain that in some time. What is NAV? Value of participate, value of all assets divided by units, divided by units. Asset value 952 went up by 50 lakh. Units 8 lakh proportionately went up by 42,000. Proportionately went up by 42,000. Divide and tell me the NAV. NAV per unit. Same number you will get. 119.0475. 119.0475. NAV cannot change just because a person is coming into the mutual fund or just because a person is exiting out of the mutual fund. In both the scenario, it can't change. In both the scenario, it can't change. Any doubts in this? Entry cannot change. Exit also cannot change the NAV. Any doubts in this? Now, the next part, right? Okay, so his point is if I only get cash, I would have added 50 here. This would have remained earlier value. Same 1002.38 you would have got. If you had not purchased the share, it would have been 10,000 into 264, which would have been lower. And cash would have been 50 lakh. It will still go up to the same number. When will NAV be impacted? If you see any P&L debit item or a credit item. What can be debit or credit item? You entered. Mutual fund bought share. Share price went up. Income is there. NAV can go up. NAV can go up. You entered. I bought the share. Share price went down. Then also NAV can be impacted. Are you entered with a front end load? NAV can be impacted. NAV will be impacted if there is any P&L impact. P&L impact means any income or expense you have to get. Any income or expense should be there. No income, no expense, no change in NAV. No income, no expense. Because you are just changing the balance. What is income? Income means share price going up, going down is also income. Unrealized, realized. Unrealized or realized income. Any doubts on this? Any doubts on this number? 119.0475. Many students have asked me a doubt here. Why not add 24,000? Why not add 24,000? What is, 18,000? What is 18,000 is shares purchased. No link at all. You could have also had this doubt maybe earlier, but there is no link between the shares of the company and what? Units of the mutual fund. Any doubts on this? Next slide, calculation 2nd April. Calculation 2nd April. 2nd April. Now, please repeat the number. Okay. Okay, you do in your notebook. I'm doing it in the screen. Repeat the numbers. 2nd April numbers repeat. Value will change. You do in your notebook. You do in your notebook. Note down the numbers. NAV will change now. You keep noting down the numbers. The calculation column is to present those numbers and write the amount column. Okay, listen for a minute now. I have got doubt from students where here when you do cash calculation, what is the share price of C Limited now? 290.8. Should I do into 290.8 here? Should I do 290.8? Yes, no. No, because share is already purchased. So some student have asked me a doubt. That is why I'm copied it. But cash will remain same because purchase is already done. Cash will remain same because purchases is already done. If purchase was not done, into 290 can also happen. They could have said 50 lakh came in, purchase happened on the second day. Purchase happened on the second day. At what price? Closing price. I don't have any option. I don't have any other option. So purchase is already done. Cash will not change. Cash will not undergo change here. Any doubts on this? What is the total? 27.87, 27.872. You can do the calculation. It is little bit time consuming. 81.424, 671.9, 13.26, 2.408. Yeah, 1027.872. Units no change. NAV will change. NAV will change. Divide by 8.42. 122.0751. NAV will undergo change. 122.0751. This is what every day mutual fund does. Every day they do this calculation and every day they declare the NAV. Every day they declare NAV. Any doubts on 122.0751? Can we proceed? Clear? Any doubts on this? Done? 12 is homework for you, where rework is not there, only base data is there. Very easy question. Please practice this once at home. Question 12, practice this at home once. 14, you can ignore the question. 14, you can just write ignore. Exact same question as 13th can be ignored, no homework also. 14, exact same as 13. 14 is exact same as 13. You can end up ignoring this question. Somebody still wants to practice, then the same thing will happen. They would have given some 4 or 5 shares. Somebody will enter into the mutual fund. You will buy some share. Some cash balance will be there. NAV will have to be calculated, and a new NAV will have to be calculated. So this is ignore. Let's come to 15 now. Let's come to 15. A mutual fund made an issue of 10 lakh units of rupees 10 each on Jan 1 2021. The start is Jan 1 2021. No entry load was charged. No entry load was charged. It made the following investment: 25,000 equity share, 5% government security, 10% debenture, 8% debenture. During the year, dividends of 8 lakh were received. Interest on all type of debt securities was received as and when due. What are the investments the mutual fund has made? Equity shares, government security, debentures 10%, 8%. Dividend on the equity share, I've got some dividend income. Interest was received as and when due. I have received some interest. What is the interest I would have received? 5% on the investment, 10% on the investment, 8% on the investment. On December 31, equity shares appreciated by 15%. Appreciated means from my purchase price, it has appreciated by 15%. Listed debentures are at 20% premium. XYZ on 15th December, 15th December in the AGM, XYZ is my company where I made an investment. In the AGM, it declared an interim dividend of 10% and bonus 1:10 with the record date being 28th December. 28th December. What is the use of this? My number of shares which I invested may go up. They are giving bonus on my shares. They are giving bonus on the shares which I am invested. I invested in how many shares? 25,000. There is a bonus declared in the ratio of 1:10. Find out the NAV if expenses paid data is given. Find out the NAV if dividend is distributed. Third part is, if you are the investor, what is the annualized return? How will I calculate annualized return? NAV 1, NAV 0, D1, CG1 divided by NAV 0 into 12 by M into 100. But the difficult part is, I'll not give you the NAV 1. You have to do the calculation. NAV 1, you have to do the calculation, which is part 1 of the question. Which is part 1 of the question. You have to do the closing NAV calculation. So the requirement is return computation. But for return computation, I need NAV, and for NAV, you have to do valuation. You have to do valuation. I'll repeat. One new fund was started. It made 4 investments: equity shares, government security, debenture. Okay. Now, in exam, you will have this adjustment also coming in. Cash balance computation to value NAV. Cash balance computation to get the NAV. What is cash balance computation? Some question will tell what inflow of money came, what outflow of money happened. What inflow? 10 lakh into 10, made one investment, made second investment, made third investment, made fourth investment, dividend received, interest received, expenses paid, interim dividend received. If you give all this tracking, prepare a cash book. Prepare a cash book and get the closing cash balance. Because cash is one of the asset. Cash is one of the asset of the mutual fund. If you give me directly, okay. If you don't give me directly, and tracking not possible, ignore. Tracking is not possible, ignore cash. Ignore cash. Suddenly they say these are the assets. For example, last question, they said some person came in, before he came in, cash could have been there in that mutual fund. But we did not bother about the cash balance because I don't have data. If you have information to track what? Inflow of money and outflow of money, you have to open a cash book. You have to open a cash book which will record inflows, which will record outflows and give you the closing cash. What are the inflows? Inflow from unit holders, sale of share, dividend received, interest received, other income, whatever inflows are there. What are outflow? Purchase of share, expenses paid, redemption of unit, dividends paid, whatever is outflow of money. If you can track it, please track it and get what? Closing cash balance. Closing cash balance. Somebody says, no, I'm not able to track. Not able to track, ignore it. Not able to track, ignore it. Some question may give you the cash balance directly. Write that balance and proceed. Able to understand the concept first. In this question, anywhere is there a discussion on cash balance? Anywhere is there a discussion originally on cash balance? No, but still cash will be calculated. Still cash will be calculated. Reason is it said made an issue, made investment purchase, dividend was received, interest was received, expenses are paid, some interim dividend, something they have given. I'll track everything. I'll track everything and record the closing cash. Record the closing cash. In case this tracking is not there, take four assets. What are the four assets? Equity shares, government security, debenture, another debenture. I have the fifth asset now, cash balance. I may have a sixth or the seventh asset also. What is sixth or seventh asset? Interest is accrued, not yet received. Not yet received, record that also. Dividend is accrued. Accrued means company has declared, but I'm yet to receive the dividend. Record that also. Record. If you have any asset, what can be asset? Accrued interest, accrued dividend, any asset you have, please record it. Please record it. Four directly I see, but apart from four, hidden assets can be there. What the question could have said? Interest on all types of debt securities was received as and when due. However, only 9-month interest was due in the current year and 3 months is accrued on the last day. 3 months is accrued on the last day. When will you receive? Next year. When will you receive is next year. Accrued interest 3 months is an asset. If you receive, then also it is an asset as part of cash balance. If you receive the money, it is part of cash balance. If you don't receive the money, it is part of accrued interest. It is part of accrued interest. Whether interest is received or not received is never my worry. As long as it keeps getting accrued, asset has to increase. It is received, no accrued interest, real cash balance. Real cash balance. Clear? Able to understand the question? Working note 1. Computation of closing cash. Computation of closing cash. Particulars calculation amount. Particulars calculation amount. We will keep recording the item. If it's inflow, write it as positive. Outflow, write it as negative. No separate and all. I'll keep writing as I get an inflow, as I get an outflow, I'll keep recording it. First line has one inflow. What is the inflow? 10 lakh units into 10. I get it from unit holders. Inflow from unit holders. 10 lakh into 10. 1 crore rupee I get from unit holders. I start with the fund with the 1 crore inflow. 10 lakh into 10. In this 1 CR, there can be an initial expense given in the question if they wish to. I may incur some 2-3 lakh as initial expenses. Got tested, I think in the recent exam, Jan 26, there was something on initial expense ratio, which was there in the Jan 26 exam. So this amount is my start. The amount starting is 1 CR. Less investment made. Add up all of this and tell me a single amount. How much? 99 lakh. 84, 85 and 10. 99 lakh, I make the investment. I make an investment of 99 lakh. After this, I get some more inflow, outflow. What is the next inflow I get? Dividend received. Dividend received. Dividend received. How much dividend are we receiving? 8 lakh. Dividend received 8 lakh. Interest received, do the calculation. What is interest received is 5% of 4 lakh, 10% of 5 lakh, 8% of 10 lakh. All the three put together, you will get the interest income. Put together, you will get the interest income. Interest received 4 lakh into what percentage? 5% plus 3 lakh into 10% plus 10 lakh into 8%. How much? 0. Not received, if they mention accrued interest. If they say not received, it is accrued interest. It will be part of the asset. It will be part of the asset. If they want to play around, they can say you invested on January 1, NAV is on March 31. 3-month interest then. 3-month interest. Any doubts in this? On 31st December, share price appreciates by 15%. What was the price I paid? 320 plus 15% is how much? 368. 368. What is the use of this? We'll see later. Okay. Then listed debentures are quoted at some premium. We'll add the premium. 15th December in the AGM, interim dividend is declared at what rate? 10% on face value. 10% on face value. Dividend is always on face value. If they say declared an interim dividend yield they will not mention, but if they at all they mention, that is on market price. That is on market price. Which market price? Can be opening, can be closing. That is opening is 320, closing is 368. Opening is 320, closing is 368. Which company is declaring dividend? XYZ is declaring dividend. When is it declaring dividend? 15th December. Also it did what? At the rate of 1:10. Record date is what? Okay, I will mostly get my dividend on 20th December or 1 or 2 days later that. Okay. Will I get dividend on 25,000 shares or on 27,500? What is 27,500? Is extra 1 by 10. Extra 1 by 10. Bonus is done, no? Bonus is what? 1 by 10. Bonus is 1 by 10. So my 25,000 will go up. My 25,000 will go up. Would I get it on 25,000 or on 27,500? You'll have to tell me this. It will be only on 25,000. Reason I'll tell you. When dividend was declared, that day those shares were not even in existence. That day those shares were not even in existence. Same question is there in ICI study mat without this bonus issue adjustment. Without the bonus issue adjustment, same question is there. In exam, in MTP as well as in one exam, this has come with the bonus issue adjustment. With the bonus issue adjustment. With the bonus issue adjustment. Wait. Dividend income of mutual fund on its investment. On its investment, original shares applicable and will be received. What is original share? 25,000. Right share or bonus share? You have a right share or bonus share will not be applicable. Will not be applicable in case dividend is declared before what? Allotment of bonus or right share. Before allotment of bonus or right share. Ideally, I should not have done the question. This is that example. This is that example which is there as an MCQ. Which is there as an MCQ. Only this example is what I wanted to discuss in this question. The other question is study mat question. In exam or MTP, they ended up asking with this extra adjustment. Extra adjustment. I'll repeat the adjustment again. On that date, whatever the last day, what did that company do is they declared a dividend as well as a bonus. Dividend is on original shares of mine. Bonus is on the original share, but on the bonus, I'll not get dividend. Second thing, whether I received a dividend or I did not receive by 31st December does not matter. If received, cash balance will go up. Not received, accrued dividend. Not received, accrued dividend in the balance sheet. Not received, accrued dividend in the balance sheet, because it is guaranteed to come now. It is guaranteed to come now. Timing could be January 2 or December 30. Doesn't matter. Doesn't matter. Received, increase cash balance. Not received, leave the cash balance, increase an asset called accrued dividend. Increase an asset called accrued dividend. Able to understand this? 25,000 shares I purchased. By the time I do valuation, 25,000 will go up. Will go up. It will go up by 1 is to 10. It will go up by 1 is to 10. But I will not get dividend on this extra share. I will not get dividend on these extra shares. Clear? Able to understand this? Any doubts on this? Next item, dividend received. Interim dividend received. Interim dividend received. XYZ. 25,000 shares. 25,000 shares. What is the dividend percentage? Into face value. 10% into face value. 2 lakh. 2,50,000. I have purposefully sometimes added two questions just to tell you how ICI plays around with the question. This and the next question is same only. I purposefully added both. Some places I remove, some places I keep both. Just to show you what ICI keeps doing. They will do some extra adjustment. 2,50,000 is the interim dividend. And possible that student makes a mistake in this adjustment. There is a possibility that you make a mistake in this adjustment. That is where that extra add-on is there. Clear? Is there any other transaction? One more transaction is there. Expenses paid is how much? 3 lakh. This will reduce cash, reduce my NAV. Reduce cash, expenses will reduce the return. Will reduce the return. Less expenses. Less expenses. Closing cash. Closing cash. Now, you may where at all this is there in the question. Nothing is given directly. You are able to track, get the closing cash. Not able to track, ignore it. Not able to track, ignore it. Tell me the closing cash. 10 lakhs. Any doubts on this? I totally have 5 assets now. 4 assets which they have invested. Fifth asset is cash balance. Fifth asset is the cash balance. I'll add up all the asset. I don't see any liability because expenses are paid. If they had said expenses yet to be paid, then record that also. Expenses yet to be paid, record that as a liability. Any doubts on this cash balance? Working note to computation of NAV. Computation of NAV. Computation of NAV. NAV calculation. Particulars calculation amount. The most important part is cash tracking. Again, covered in the concept book. Most of the points are covered. I directly read the concept book. I understand everything. You will not understand. That is why I'm forced to do something and then go back to concept. I could have explained the dividend income adjustment from the concept book. But when I do the question and I explain, you are able to relate well. That is how most of our learning will be. Do question, go back to concept. Many places. Few places I may do concept first and then question. Market value of assets. Market value of assets. Item. Equity shares. Equity shares of Okay, one word should have been there. I don't know. It missed. This is equity shares of XYZ. This should have been there in the question. It is the equity shares of XYZ. 25,000 equity shares of that company name is XYZ. That is why the data on XYZ is given below. Equity shares of XYZ. How many shares did we buy? 25,000 plus how much we are allotted? 110 of 110 of 25,000. 110 of 25,000 into what was our price? Extra how much? Multiply this and tell me the outer column figure. 1 crore 1 lakh 20,000. 1 crore 1 lakh 20,000. 10120. 27,500 into 368. 27,500 into 368. Any doubts on this? Any doubts on the number here? Can we proceed? Was the next investment made? Any extra data on government security? Any extra information? Copy paste. 4 lakh. Copy paste 4 lakh. No extra information. Copy paste 4 lakh. You have to do it along with me. You may know the question also, but still do it along with me or before me. Along or before, that's up to you. 5% government security 4 lakh. What's the next one? Any extra data on unlisted debentures? Any extra information? Copy paste. 5 lakh. What's the next item? 8%. There is some extra information. What is the extra information? 20% premium. 20% premium. 12 lakh rupees. Any doubts on this? Some cash balance we calculated. Tell me the value of all assets. 1 crore. Again, I don't see any liability in this question. No liability data, only assets. Only assets information is there, which is 1 crore 32 lakh 20,000. How many units we started with? 10 lakh. After that, no change given. Number of units 10 lakh. Number of units 10 lakh. NAV per unit 13.22. This is the NAV per unit 13.22. 13.22 is the NAV per unit. Any doubts on this? Can we proceed? Any doubts on this? Done. In the second part, find out the NAV if mutual fund has distributed a dividend of 0.50. If you have distributed a dividend of 0.50, how many units are there in the mutual fund? Into 10 lakh, 5 lakh rupees is dividend. If you distribute dividend, cash would have gone down. NAV will go down by 50 paise. NAV will go down by, to put it very simple, NAV goes down by the amount of dividend in dividend plan, does not go down in growth plan. That is why both have a different NAV. Growth plan, dividend is not declared. Dividend plan, NAV falls by the amount of dividend. NAV falls by the amount of dividend. Why does it fall by the amount of dividend? If you declare and make a payment, cash goes down, assets go down. If you declare, don't make the payment, a new liability is created called dividends payable. A new liability is created. Either you create a new liability or you have a reduction in cash. Either ways, numerator will go down. What is numerator? Asset minus liability. Numerator is asset minus liability. Share price also in the practical world. falls by the amount of dividend once it becomes X dividend come dividend. X dividend and come dividend, there is a date it will become X dividend. In the practical world, share price falls by the amount of dividend and NAV to 100% will fall by the amount of dividend. Share price buying selling happens, trading something can change. In mutual fund, whenever dividends are paid, NAV will fall by the amount of dividend. Whenever it is declared. How does it impact my returns? No, it doesn't even impact my return. For example, if this is 13.22, my return is 13.22 minus 10. If dividend is paid, NAV could be 12, dividend could be 1 rupee, minus my investment, same return. Whether dividend is paid or not paid, because what is the formula? NAV1, D1, CG1. If you pay D1, NAV1 will go down. If you pay D1, NAV1 will go down. You don't pay D1, NAV1 will not go down. NAV1 will not go down. Practical world, NAV will fall by amount of dividend, will fall by amount of dividend once the dividend is declared. Impact of events on NAV. Fresh purchase or redemption. What is fresh purchase or redemption? 50 lakh entry, check came for 50 lakh. No impact as numerator and denominator is impacted equally. No impact as numerator and denominator is impacted equally. Where did we see? We saw that 50 lakh check came in 119, remained 119. I could have explained the concept and gone there also, but I wanted to tell you with the numbers. 119 remained what? 119. Dividend declaration. NAV falls by the amount of dividend per unit. Reason: dividend declaration leads to fall in NAV. This is because net asset will decline. Net asset will decline by the amount of dividend. Why? Liability creation or cash payment. Liability creation or cash payment. You pay cash, net assets go down. You don't pay, new liability is created. Able to understand the concept? NAV will fall by amount of dividend. NAV will not change. Entry, exit. NAV will change if underlying assets change. Able to understand the concept? This is done in two different questions. I just keep writing all this because easy for me to explain with the question. Any doubts on the concept here? Any doubts on the concept? Go back and write. NAV if dividend is distributed. NAV if dividend is distributed. How much is the dividend? Deduct 0.5. 12.72. Is there a doubt? Let me know if there's a doubt. No, units has, so his doubt is, so for bonus will we change the units? Bonus is on shares. Number of shares and number of units have no linkage. Number of shares. If you declare bonus in the mutual fund, if the mutual fund declares bonus, 10 lakh units can become 15 lakh also. The units of mutual fund can change if the mutual fund declares bonus. Who has declared the bonuses? I made investment and that company has declared bonus. That company has declared a bonus of 1:10. In this question, recalculated units because of what reason? No link between shares and units. Reason we did units extra is 50 lakh money came in. 50 lakh money came in. Where is the money coming in here? No money is coming. No link between number of shares, number of units of mutual fund. And it's not your doubt. Many students keep getting this doubt. That is why I've covered it as a separate small line there. No link between number of shares and number of units of a mutual fund. Clear? Any doubts on this? Next, annual return. I'll give you two answers. Both will be same just for your satisfaction. Annual return if dividend is not paid. If dividend is not paid, what is the return if dividend is not paid? What is the return if dividend is paid? Both same answer. Both you'll get same answer only. But I want to show you both ultimately to tell you that whether dividend is paid, not paid does not matter from an investor point of view. If dividend is not paid, right? If dividend is not paid, what is the NAV? 13 point, right, 13.22. How much did we pay in the MF originally? 10 divided by 10 into 100. No D1, no CG1. No D1 and no CG1. Dividend not paid, no D1, no CG1. How much is this? If dividend is not paid, 32. Dividend paid also same 32 you'll get. To put it very simple, dividend is an event which doesn't really matter in a mutual fund. There are a lot of mutual fund which don't even give dividend plan. They say only growth plan is there. If you want, you take it. Don't want, don't take it. That's all. Only growth plan they give. They don't even give a dividend plan. Annual return if dividend is paid. Listen, if dividend is paid, 12.7 to NAV1, C1 extra 50 paise, no CG1 minus NAV0, minus NAV0. To put it very simple, dividend is an event which does not impact my returns. It will impact the NAV. And what will happen? It will go down by the amount of NAV. Which plan? Dividend payout or reinvestment plan. In growth plan, no change. That is why growth plan units remain same, value keeps going up. Here units may go up, value may not go up that much. Value may not go up that much. Any doubts on this? What's the percentage you get? 32.2%. Either ways, you do it that way or you do it this way, you will get same 32.2%. And a lot of concepts have come at different places here. I keep going back to the book whenever I want to explain the concept. Any doubts on this? I'll summarize again. First thing is, if you're able to track cash, please track the cash balance. Second thing is, NAV will fall by the amount of dividend, in case dividend is distributed, declared but not distributed. Declared but not distributed also it will go down. Not distributed also it will go down. And in our, once NAV goes down, in your income you can add the D1. In your numerator, in your return calculation, you'll have to add the dividend. Any doubts on this? Clear? I give you 2 minutes. You can go through both the question as well as the concepts. Let me know if there are doubts. 2 minutes for you. Okay, I proceed ahead now. Question 16, same as question number 15, without interim dividend adjustment, to be done at home by students. So homework, it is a homework question. No discussion. I'll not discuss this question in the next session. I'll not discuss the question, but you'll have to do this at home. When you do this at home, you may understand one slight new thing there, but you have to do this question at home. Exactly same thing. Made an issue of 10 lakh, equity shares, government security, listed, unlisted, all that is exactly same question without the interim dividend adjustment. Okay, without the interim dividend and bonus. So please do this at home. We'll see. 16 is homework. Already I have given you one more question, which is your question number 12. 12 is one question, 16 is one question. These two you have to do at home. 14 you can ignore it fully. 14 you can ignore, that is not to be done. Let's come to 17. Yeah, to be solved in class. Let's do this now. Based on the following data, estimate the NAV on per unit basis of a regular income scheme of a mutual fund on 31/3/2016. Listed equity shares at cost in bracket X dividend, cash in hand, bonds and debentures at cost, not listed, not quoted, other interest security, dividends are there, amount payable is there, accrued expenses are there. So they have almost listed down the assets and liability. We have to write assets in assets place, liability in the liability place, and give effect to extra information. What is the extra information? Current realizable value of fixed income security of face value 100 is what? 106.5. 100 rupee unit is 106.5. Number of units is 20 lakh. all the listed equity securities were purchased at a time when the market portfolio index was 1000. On the NAV date, market portfolio index is 2300. What is this? I'll explain. There has been a diminution of 20% in which bonds? Unlisted bonds and debenture. Unlisted bonds and debenture, there is a 20% fall. Other fixed interest securities are valued at cost. Listed bonds on NAV date is 8 lakh. I'll repeat again. I have listed equity share, which they are saying when you purchased some index values there. Today some index values there. What is the use of this? You'll understand. Cash in hand as it is, copy paste. Cash in hand as it is, I will copy paste, no adjustment. I'll not do any adjustment because I don't know when money is coming in, when money is going out. Bonds and debentures at cost. In this, unlisted is 1. For unlisted, there is an extra note below. Balance is listed. For listed also, there is a note below. Unlisted, there is a note. Listed, there is a note. We will copy paste whatever note they have given. Okay. Other fixed interest security at cost is how much? 4.5. Dividends accrued. Accrued dividend. Now, little tricky. Is it a liability or an asset? We may have to take an assumption. Why liability asset? Dividend accrued could be that I have to receive from the companies where I invested, or the mutual fund has to give to the unit holder, or the mutual fund has to give to the unit holder. Can be either ways. What is our standard assumption? I'll tell. Amount payable on share, asset liability. Amount payable on shares, asset liability. Liability, I purchase some share, yet to make the payment. Ideally, practical world, this will not come, but they have given. Expenditure accrued. Accrued expenditure, again a liability. One change you do, this is 8 crores. This is 8 crores. The last line is value of bond is 8 CR. This is your study material question number 19. We will start doing the valuation now. Okay. Various assets and liabilities are there. Note down every asset and liability. All assets minus all liability divided by number of units, NAV per unit. Working note 1, computation of NAV. Computation of NAV. Particulars calculation amount. Market value of assets. Market value of assets. Leave some 7-8 lines. Liabilities. Liabilities. No extra information, copy paste. Extra information is there, we will do calculation. Assets and liabilities. Was the first item. Listed equity share at cost. Listed equity share. How much is the investment made? Participate. How much is the investment made? 20 crores. Listen. I purchased the share when the index was how much? 1000. What is index? Is Nifty. When you purchase, Nifty was 1000. When I'm doing valuation, Nifty is how much? 2300. If Nifty has gone up, my share value also would have gone up. Will it be at the same rate? No idea. Can be more, can be less. Lack of information. So ICI says Nifty doubled. Your investment doubled. Nifty became 2.3 times. Your value also became 2.3 times. Nifty became 5 times. Your value also became 5 times. This is an assumption and a logical assumption. So what they have done is very simple. When we invested, what was the index value? 1000 equal to 20 crores. 2300 equal to question mark. In crores, let's do it in crores. When I invested, it was 1000 rupee. At that time, I invested 20 CR. The question could have said, listen. the portfolio has increased at double the rate of index increase. Double the rate of index increase. Index has gone up by 130%. 130%. What is 130? 1000 becoming 2300. If index jumped by 130%, my investment can jump by 260% also if they give data. If they give data, if they want to complicate, they can complicate like this. Index went up by how much? 130%. Our portfolio can go up by 260%, 390%, or even 65%. Half of the index increase, 80% of the increase, 20% of the increase. Anything can happen. Here, nothing is given. Direct calculation. Tell me the value. Listed equity share. 46 crore. What is the second investment? Cash. Copy paste. 1.23. No extra adjustment. Cash in hand 1.23. What's the next item? Listed bonds, unlisted bonds. Let's write it two separately. Listed and unlisted. Listed and unlisted. Listed and unlisted. I made an investment of 4.3. In this, unlisted is 1 CR. Listed is balance 3.3. For listed, they have given some note. What is the note? Listed, they have given some note. Value of the listed bonds on the NAV date. On the NAV date is how much? 8 CR. Directly given, copy paste. Directly given 8 CR, copy paste. Listed bond value is how much? 8 crores. 8 crores on which date? On the NAV date. Copy paste. 8 CR. 8 CR on the NAV date. Unlisted, something is mentioned in the question. How much? 20% in the unlisted bonds and debenture. Diminution of 20% means fall of 20%. Fall of 20% in what? Unlisted bonds and debenture. What is the value of unlisted bonds and debenture? 1 CR. In this 1 CR, there is a 20% fall. In this 1 CR, there is a 20% fall. Unlisted bonds and debenture, what? 1 CR. Listed is 3.3. For listed, they have directly given the value. Unlisted 1 CR minus how much? 20%. 0.8. 1 CR minus 20%, 0.8. Clear? The next item is little tricky. Tricky in the sense, I feel there an error in the question, but I'll explain. Other fixed interest securities, how much? 4.5. They are saying realizable value of fixed income securities 100 is equal to 106.5. Same logic. 100 rupees equal to 4.5 CR. 106.5 equal to question mark. 100 rupees I invested, 4.5 crores. 106.5 on the valuation date, value would have gone up. Another line says other fixed interest securities are valued at cost. Are valued at cost. This is a contradictory data. It is 100% a contradictory information. You cannot say that you will value at cost. Mutual fund doesn't work that way. Mutual fund will only tell you to do fair valuation. Either that 100, 106.5 by mistake they've added in the question, which is where I see a modified question. That's my creation, okay? Current realizable value of 100, 106 should be removed from the question. Should be removed from the question as it contradicts the line of other fixed interest security are valued at cost. By mistake, still they end up giving both. I don't see them giving. They have not tested this in exam. But study mat, they have not corrected. Study mat, they have not corrected this. By mistake, this gets repeated in exam. You'll ignore that line and value it at cost. Value it at cost. Why are we valuing it at cost? I don't agree itself. Again, reason is question has said other fixed interest securities are what? Valued at cost. I'm okay to value at cost. Then don't give me that 100, 106. 100 becoming what ideally we should do. Listen, don't write this. Other fixed interest security 100 equal to 4.5. 106.5 equal to question mark. You are not writing this, okay? Not writing this. 100 equal to 4.5. 106.5 is equal to question mark. Again, I've answered this doubt of many students. I ultimately change the question itself because there is a contradictory data. I can't really help it because students will keep getting this doubt because it's a study mat question. Non-study mat doubts will not be there much. This is a study mat question. I can't do anything here. So 100 equal to this you need not do. I remove that information from the question. I remove the information from the question. Directly write 4.5. Directly write 4.5. Somebody says, I want to consider 106 and do valuation. I'm with you. I have no doubt. ICI, we don't know what they will do. So I don't want to deviate my answer. I don't want to deviate. Wherever I see a logical gap, follow ICI solution. Only ICI solution. I don't want to get into saying that you follow this solution, you follow that solution. In class for explanation purpose, I can only explain with logic. So I will keep doing with logic, but wherever there is a gap, very limited question will be there. Gap there, follow ICI solution. Any doubts on this? What's the next item? Right in the asset side. I'll explain why asset. Dividend accrued 0.8. It will become a liability if they specifically mention dividends payable or dividends accrued for unit holders. Dividends accrued for unit holders. In that case, it will become a liability. Otherwise, it is on those listed equity share. It is on the listed equity share. Dividends accrued is an asset. An asset. Can it become a liability? Yes, it can become a liability if it is payable to my unit holders. Payable to my unit holders. Next two things you tell me. Those are simple. What are the next two items? Amount payable. How much is the payable? 6 point. Expenditure accrued. Total value of assets. Value of liabilities. Net asset value of fund. Net asset value of fund. Value of assets. Value of liability. NAV, net asset value of fund. What is net asset values? All fund put together. Divide by number of units, NAV per unit. Divide by number of units, NAV per unit. Add up all the assets and tell me. 61.3. Live online guys, you keep typing 61.33. Liability 7.07. 7.07. 61.33. 7.07. 7.07. Get the net value. Get the net value 54.26. Number of units. Again in crores, give me in the crores. Okay, they have given some value. How many units are there? Sorry, 0.20 crores. 0.20 crore, 20 lakh. Number of units is 20 lakh, 0.20. 0.20. NAV per unit. NAV per unit. $271.30. Except for that one line where there is a logical gap, everything else is okay. No new learning as such. 1-2 concept I've explained, but I'll go to concept book later. Any doubts on this? And major chunk of it will get revised with the concept book. That I'll keep telling you same thing. Any revision I have to do only concept book. No question solving. No question solving. Any doubts on this? Can we proceed? Same question, they can ask for return calculation. NAV1, NAV0, D1, CG1, and you do the calculation. Can we proceed? Done. Let's do 18. Let's do 18. On 1/4/2012, ABC Mutual Fund issued 20 lakh units at 10 per unit. Relevant initial expenses were 12 lakh. Invested the funds So raised in capital market to build a portfolio of 185 lakh. During the month of April 2012, disposed some of the instrument costing 60 lakh for 63 lakh, used the proceeds for purchasing 56 lakh, fund management expense 8 lakh, dividends 2 lakh, market value of the portfolio, and some annual rate of earning. Just give you a minute, you go through the question. Okay, in the question they're asking annual rate of earning, which is NAV1, NAV0, D1, TG1 by NAV0 into 12 by M into 100. Why 12 by M? Because they have not said 1 year consists of something like that. If they give, they will do 365 by number of days. Is it possible to track the cash flow in this question? Possible to track the cash flow? They said we started with 20 lakh, expenses were there, investment was there, sale of shares was there, purchase of shares was there. Exact same question with extra adjustment came in the recent exam. With extra adjustment, I know extra adjustments were there, but with extra adjustments came in the recent exam. Study mat question only. It is study mat question, but extra adjustments got added by ICI in the question. I'll discuss maybe those questions later. We'll quickly get the cash balance. After you get the cash balance, units, that is whatever assets are there less any expenses are there, NAV per unit, and then we apply the formula. Working note 1, computation of closing cash. Closing cash, particulars calculation amount. I keep saying this, solving question will not serve any purpose unless you have clarity on the concept, because the question which came in exam you will be able to handle only if you have clarity on the concept. They added something, they ended up adding something extra there. I went through the question, it was relatively on the tougher side, but clarity there, you'll still be able to manage it. Let's start. Inflow from unit holder. Inflow from unit holders. How many units did we issue? Two. We'll do it in lakhs, okay? In lakhs. 200. There was some underwriting adjustment which was added in the exam question. That was a CA inter adjustment. If you know what underwriting happens, that got added in the January exam. So 200 is the inflow from unit holders. Relevant initial expenses. How much expenses we incurred? Less initial expenses. Less initial expenses 12 lakh. Initial expenses is 12 lakh. What else happens later? He invested the fund in a capital market portfolio. Okay. Less purchase of share. Purchase of shares. How much purchase we did? 185. Purchase of shares 185. Purchase of shares 185. After purchase, what happened? So sales costing 60 lakh for how much? Add sale of share. Sale of shares 63. Sale of shares 63. The cost was 60 lakh, but I sold it for 63 lakh. What did we do next? Less purchase of share. Purchase of share. How much the purchase? 56. Purchase 56. What do we do after this? Fund management expenses. Fund management expenses which are yet to be paid. Fund management expenses which are yet to be paid. Sorry, which is paid and there is a yet to be paid. How much is paid? 90% we have paid. Not paid will be a liability. Paid will go here. Paid will reduce the cash. Not paid will be a liability. Reduce the NAV. 8 lakh into how much? 90%. 7,20,000. Then what happened? Dividend earned. Dividend earned how much? Then it says I distributed what? 80% of the distributed means dividends. Distributed is dividend. What did I distribute? 80% of the realized earning. Now, what is this concept? Let's see it here. Dividend out of realized earning. Dividend out of realized earning. What is realized earning? Realized earning of a mutual fund is equal to dividend income, interest income, rent income, all that can be there. Apart from that, there can be a realized capital gain. Realized capital gain, which is where they said instrument costing something, sold for something. Investment costing some number, sold for some other number. Listen, how much is the dividend income earned in this question? Some dividend income he has earned. 2 lakh. How much is the capital gain in the question? 80% of this is D1 and 80% of 3 lakh is CG1 in the practical world. AR, that is the meaning, ICI meaning, okay? Practical world, so not there. 80% out of the dividend is called D1 and 80% out of the capital gain is called CG1. Practical world, this gap is not there, but here in classroom discussion, if somebody asks what is CG1, 80% of the capital gain divided by number of units to get 1 unit. To get it as 1 unit, you'll have to divide by the number of units. So in this question, you can see both D1 and CG1 being there. D1 is dividend paid out of the dividend income. CG1 dividend paid out of the capital gain income. Capital gain income. And the question does say that I am paying 80% of the realized earning. What is realized earning? Interest income, dividend income, rent income, any other income, and realized capital gain. Realized capital gain. Realized capital gain. How can I calculate realized capital gain? Costing 60, sold for 63. On the balance sheet date, there will be unrealized capital gain also. What is unrealized? Your cost is something and value something else. Not bothered. I'm not bothered about the unrealized part. I'm only bothered about the realized capital gain. That is why they said costing 60, sold for 63. Costing 60, sold for 63. Realized capital gain. Realized capital gain. If you pay any dividend out of that, that is called CG1 technically. Any doubts in this? Now, right. Less dividend paid. Less dividend paid. 2 lakh plus 3 lakh into 80%. What is 2 lakh? Dividend income. What is 3 lakh? The capital gain. They may say you paid out of the net income post expenses. Then reduce the expenses. I will not be having any money. In this question, I will not have any money. I can reduce expenses also and then distribute. That's my wish. 2 lakh plus 3 lakh into what? 80%. 80%. Negative 4. Closing cash balance. 0. Clear? Any doubts on 0.8? Now question says this person, he entered on 1/4, exited on 34. When he exits, cash will go down, but I'm not bothered. I'll first calculate the NAV. After NAV is calculated, person goes out, numerator will go down, denominator will go down. Person goes out, numerator will go down, denominator will also, cash will go down, but I'm not bothered about it. First, let us calculate NAV. Once NAV is calculated, we'll calculate the annual rate of earning and close the question. What can happen after this is numerator will go down, denominator will also go down, because one person who entered with 100 units wants to exit on the month end. No problem, let him exit. Numerator goes down, denominator goes down. Person enters, numerator goes up, denominator goes up. Both will go up, both will go down, because some students have asked, why are we not considering this in the cash balance? I cannot, because I don't know the NAV. I don't know the NAV. Get NAV. You're still interested to do more? Then deduct your cash balance, deduct the denominator, same NAV will come. That is of no use to us. If the question say, please calculate the new NAV once this is paid out, reduce cash, reduce this, NAV will remain same. NAV will remain same. Any doubts on this? Come down. NAV per unit is equal to, no table, direct answer. NAV per unit is equal to, NAV per unit is equal to, what is the value of investments? 198. Cash, one liability is there in the question. 10% of expenses. 10% of expenses minus, I can do in table also. I'm not doing in the table. Okay, I'm not doing it in the table. 198 plus what? 0.8. What is 0.8? Cash. What is another 0.8? The expenses payable. How many units are there? Please apply the formula. NAV1, NAV0. Tell me the return. NAV1, NAV0. Apply. Sorry. NAV1, NAV0 and tell me the return. 9.90 is the NAV per unit. NAV per unit is 9.90. 12 by M you have to do annual return, annual rate of earning. Please do it, do it. There is a reason I'm telling you to do. You may make a mistake also. Do it, do it. Possible mistake is there when you do it. Do the return calculation. Do the return part. Once you are done, I'll discuss. Maybe a minute or two, I'm waiting. I want you to do it. Write, write. Well, even if you get it wrong also, it's okay, but I want you to write in your notebook. NAV1, NAV0, NAV0, 12 by M into 100. How much is the return? You'll have to be a little louder, guys. Not able to hear, you will have to be louder. What is the return you're getting? Live online, guys, type it. Is it 12%? Negative 12, positive 12? Negative, positive? Is it negative returns or positive returns? Participate, guys, participate. Negative returns, positive returns. Write in your notebook. You have NAV1, you have NAV0. Write. Negative or positive? Negative or positive? It is going to be positive return. A student has asked me to explain something. I'll explain that with the annual rate of earning. Listen. Annual rate of earning is equal to, I wanted you to do because some of you will make a mistake. And I was purposefully forcing you to make a mistake. NAV1, NAV0, there is a dividend declared by the mutual fund. I purposefully did not tell you to write it. There is a dividend declared by the mutual fund. The mutual fund paid a dividend of 4 lakh. The mutual fund paid a dividend of 4 lakh, and as a unit holder, I will get a part of that 4 lakh. As a unit holder, I will get part of 4 lakh. Closing is 9.9. Opening is dividend per unit. Dividend per unit is 4 lakh divided by 20 lakh. 4 lakh divided 1 unit calculation. 4 lakh divided by 20 lakh is the dividend per unit. Dividend and CG1 put together. Okay, dividend and CG1 put together. And in case somebody wants to know exact D1, exact CG1, D1 is 80% of 2 lakh divided by 20 lakh units divided by 20 lakh. CG1 is 80% of 3 lakh. 3 lakh divided by 20 lakh. I don't think that is needed. Put together how much? 4 lakh dividend on what? 20 lakh unit. When I was telling you to do, I was purposefully telling you NAV1, NAV0. I never told you do the other. That you have to take care, because there is a dividend paid by the mutual fund. 80% of the realized earning. 80% of the realized earning. I was purposefully forcing you to make the mistake. Manan, I hope your doubt is clear. That is how is D1 CG1 calculated is, in case you still want to calculate, you can do 2 lakh into 80% divided by the number of units, 3 lakh into 80% divided by number of units. You don't want to segregate, no problem. Just do together. As I said, practical world, the segregation is not there. What is together? 4 lakh by 20 lakh. Final answer is plus 12%. Final answer is plus 12%. It is not negative. You do the calculation, you will get positive 12%. Denominator is what? 10 by 1. I was purposefully forcing you to make the mistake, and some of you did make the mistake, because I never told you write D1, write D1, write D1. I know there is a D1, and I didn't want to tell also. Some of you wrote it, some of you did not write it. Perfectly fine. Only thing is you have to practice. You do, I explain, then you understand it better. You're only waiting saying that okay, he will tell, then we will write. You are not going to get an award for having a great notebook. Nobody is going to give you an award for that. Let there be lot of errors in your notebook, doesn't really matter. And most of the students don't even see the notebook later. They mostly see with the book only and go to the exam. So no point in having a perfect notebook and all. Make mistakes in the class and not in exams. And I was purposefully forcing you towards a mistake. Some of you made mistake. In regular class, I force many times. Here, time constraint. I cannot keep telling you make a mistake, I'll correct, make a mistake. But few places, I will keep doing this. So here, there was a hidden dividend. There was a hidden dividend, which is 20 paise per unit. Which is 20 paise per unit. Any doubts on this? Any doubts on the hidden dividend number? Clear? Able to understand this? Can we proceed? Same 12% you are getting. There it was negative 12. Because if you don't do that, you will say negative. Real answer is positive 12. Real answer is positive 12%. Any doubts on this? Clear? Okay, let's take a 15 minutes break. Okay, let's proceed ahead. We'll continue on the NAV computation part. 19, I'll do it later. Either end of today's session or next session, we will do this question because some new concept is to be explained. Now we move to question 20, 21, 22, 23. All four are very similar. All four are very similar. I'll be reading each of the question, and then out of these four, few we will do, few you can do at home are not needed. We will see. Let's come to 21st. Then I read 21. I read 22. I also read 23, and then link all the four together, because all the four have come at different points of time in exam, or they are study mat question. In fact, not only 20, 21, 22, 23, like this, there can be other questions also. I have kept, I think, 3 or 4 questions I have retained in the material. 3 question, I think. Let's see. 20. Mr. Sinha has invested in 3 mutual fund as per the details given below. Date of investment, amount of investment, NAV at entry date, dividend received, NAV at the closing date. You are required to calculate effective yield on per annum basis in respect of each of the 3 schemes to Mr. Sinha up to 31/3/2011. The heading says it's a homework question. but I want to link all the three. So I'll discuss first all the three questions together. Provide a brief comment. I'll read from the beginning. Mr. Sinha has invested in three schemes. Scheme X, different date, Y, different date, Z, different date. Question should have added a line saying that 1 year consists of 365. I think that got missed. Here we are doing days calculation for return later on. I have amount of invested. Amount of investment is what I give. What I get back is closing NAV into closing units plus the amount of dividend. Plus the amount of dividend. What I get back is closing units into closing NAV. How will I get number of units here? I want participation. How will I get number of units here? Amount of investment divided by NAV at entry date. This will give you the number of units. This into the closing NAV. No reinvestment, nothing is given. If it's reinvestment, then they have to tell me reinvestment NAV. You know, opening units, opening NAV investment, closing same units, closing NAV plus dividend. Can I do per unit calculation? Yes. Can I do overall calculation? Yes. Both will give same answer. Per unit, some rounding of differences can come. Any doubts first on this question? Where they have given three schemes. If needed, I may do scheme X for all the question, if at all needed. Okay. Three schemes are there. Scheme X is there, Y is there, Z is there. There's a date of investment, amount of investment, NAV at entry date, dividend received is there, NAV at 31.3 is there. What is the effective yield on per annum? Effective yield means no IRR. I'm not getting into IRR at all. Effective yield means our normal formula. Per annum means into 12 by M or 365 by D. Question should have said 1 year consists of 365 because we are doing days calculation here. Can I do months calculation? Wouldn't make a big difference. Clear? This is first question. Question 21. Amount of investment like the previous question. NAV at the time of purchase like the previous question. Dividend yield. Dividend yield. What was given there? Dividend received. Here it is given dividend yield. Yield is to be applied on NAV or your amount of investment. You can also say on my amount of investment. Why on my amount of investment? My amount of investment is opening NAV and end value is called closing NAV. It can be on opening, it can be on closing, it can be on opening. That is this 3%, 5 and 4 can be on NAV at the time of purchase. Can also be on NAV at the time of closure. Normally people follow NAV at the time of purchase. I'll do the question solving in some time. Let me read all the three questions together so that you get more grip on reading questions. NAV at the time of purchase is given, yield is given, NAV as on 31.3 is given, annual yield is given in the question. Take 1 year is equal to what? 365 days. Annual yield is equal to what I get back. I have data on what I get back. What I get back is closing units, closing NAV plus dividend minus opening NAV divided by opening investment into 365 by D. D is the balancing figure here. That is the requirement of the question. D is the balancing figure. They will ask holding period of your investment. Holding period of your investment. I'll do the calculation in some time. Which question to calculate I will see. Okay. This question has used the word what? Dividend yield. They have not given date of investment. Last question gave date of investment. Dividend received was there. This question dividend yield is there. Date of investment is missing. And that is one of the requirement of the question. You have to calculate holding period, calculate the date of investment. Lot of other things are there, which I will see in some time. Amount of investment, NAV at the time of purchase, dividend received. Dividend received. Going back to the first question. Going back to the first question. Like dividend received, NAV closing is given, effective yield is given. Go back and calculate the holding period. Go back and calculate the holding period. Very similar to the previous question 21. 21 used the word yield. This has used the word dividend received directly, or they may even use the word dividend rate. Rate is on face value. Yield is on your opening NAV or closing NAV. Yield is on opening NAV or closing NAV. Any doubts on this? 23. Amount of investment is given. Dividend received is given. NAV as at 31.3 closing NAV is given, effective yield is given, holding period is also given. Missing is opening NAV. Missing is opening NAV. Four different question, different ways. Four different question, different ways. I may do what I will do. I'll see. These are four different question. Okay. I may pick one scheme in all the question and do it. That's okay. One scheme. If I pick in all the question, all the four are done. The same thing you have to repeat for other scheme. Doesn't really matter. Okay. Four different question, different ways are there. First question. I'll go back to now. First question. We will do one scheme. Second question again one scheme. Third question again one scheme. Fourth question again one scheme. Then I may go back and discuss more things also. Discuss more things also in the question. What are more things also? I'll understand. I'll explain you, because some question has asked certain additional item, which I will go back to respective question. I'll repeat from the beginning the questions first. Question 19. 19 leave it, sorry. 20. Date of investment. You'll have to participate. Date of investment is there. Amount of investment is there. NAV at entry date is there. Dividend received is there. Closing NAV is there. This is straightforward question. No reverse working, nothing. Let us first do scheme X for this. Let us do scheme X. Next question, let us do scheme Y. Next question, let us do scheme Z. Next question, let us go back to scheme X. And then something extra is there. What is extra and all? I'll see. Clear? Let us start with scheme X for question 20. Scheme X question. Ideally, it's a homework question, but I think I can do one scheme in every question. And other schemes you want to do at home. Don't want to do, don't do it also. I am not bothered really about the. There are certain extra requirement which I'll explain. Working note 1, question 20. Question 20. And listen, these are not only 4 questions. There are another 2-3 questions on the same adjustment. Same question ICI has, I don't know, it is their favorite question. They keep changing here, there, here, there. They've asked this in multiple other ways also. I could not add everything here. I've kept 4 questions. Why? Because I normally start with mutual fund chapter in the class. In mutual fund, I normally tell student how ICI plays around with the question. Other chapters and all, I will not keep the same 4 questions. If the same 4 were there, I would have kept only 1 or 2 questions. Here, just to give you that view, what ICI normally does with question, so that you understand how they play around with the problem. Let us do working note 1, computation of return of scheme X, particulars calculation amount. Calculation amount. We are doing 4 different questions at the same time. It is 4 different questions, but done at the same time. This is how normally some time saving happens in an exam oriented batch. Otherwise, discussion will be full, but here and there I'll save time. We'll do scheme X. You're interested, you do scheme Y at home. Not interested, don't do it also. I'm not really bothered. If needed, I'll tell you. Let us start. Amount of investment. Amount of investment, how much? 5 lakh. This is what I give. This is basically what I give. NAV entry date. NAV at entry date. 10.50. This will tell me number of units. Number of units into closing NAV is closing value. Number of units into closing NAV. Closing NAV. Number of units divide 2 decimal answer. Sorry. 47,619.47,619.05. 0.05. Number of units 47,619.05. Clear? Dividend received. Dividend received. How much is the dividend received? 9,500. Dividend received 9,500. You do it along with me. This is technically a homework question, but one scheme is easy to do. Rather than doing all the 3 scheme in one question, let's do different question, different scheme. 9,500. Closing value 47,619 into what is the NAV on the last day? 2 decimal answer. 4,95,238.12 annual return. Annual return. You write like this only: what I get back minus what I give divided by what I give into 365 by D. Why 365? Question should have added that line. Okay, question should have added that line. They have done days calculation, they should add this line. Else months is also fine, no major variation. But next question uses the word very clearly: take 1 year equal to 365. This I think got missed out in the question. What I get back minus what I give divided by what I give into 365 by D into 100. What will I get back on the last day? 495 238.12. Also I will get back 9,500. What I give divided by days is a tricky part. Days is a tricky part. When did we make the investment? 1st December. My general rule is I'll ignore the 1st December, consider the 31st March in the calculation. Would it 100% match? I'm not giving you any guarantee. Number of days below. December month, how many days? 30 days. First I'm ignoring. I'm ignoring the 1st December. I don't know what is there in the answer. Okay. I don't know. I'm ignoring 1st December. Somebody says I want to consider 1st December. Logically you are okay. Logically you are right. I have nothing to against it. Best is 12 by 4. Number of months. That is the best and easiest way. Rather than just putting us into so much trouble, I would have ideally preferred doing 12 by 4. 12 by M. 30 days of December. How many days of January? 31 days. How many days of February? How many days of March? 1. Please calculate this and tell me the return. 2 decimal should do. Yeah, 2 decimal is fine. 2 decimal is fine. 2.88. 2.88%. This is one type of question where this is forward working. This is forward working. What is forward working here is they have given entry price, they have given exit price. Dividend we have 9,500. No, you can do dividend per unit also. NAV per unit 1, NAV per unit 0, dividend per unit. What is per unit? 9,500 divided by 47,000. Amount will be insignificant. Decimal issue will come. Even per unit you do, you'll get the same answer. Rounding off differences can be there. Per unit also will give you the same answer. Overall will also give you the same answer. Rounding off part, I can't really do much about it. Now we will see whether they have used 120 days, 121 days. I don't know. Let us see the answer. 121. They have considered even December 1 in the calculation. Again, I'm saying I cannot guarantee you what they will do. This is my normal view. One day ignore, one day consider. You will not be in a position to do anything with this because I will tell now consider. Next question they will ignore. Next question they will ignore. Ideal logic is, did I invest in the morning or in the evening? Morning means consider the day. Evening means ignore the day. Did you exit in the morning or evening? Evening means consider that day. Morning means you have already exited. Ignore that day. This is the practical logic I can give you. Exam days calculation, you also can't do anything. I would have written a note. Holding period does not consider the period, it just calculates return. For annualized return, we need to consider the time period. Number of days, it is assumed investment is made in the beginning of day, and hence date of investment is considered in number of days computation. This question is done. I go back forward. Other schemes we are not doing. Later, once everything is done, some more discussion is needed that I can do together. Coming to next question, let's focus on MFY. Let us focus on MFY. Same thing. Analysis of MFY. Question number 21. Let us focus on mutual fund Y. Mutual fund Y. Mutual fund Y. Good problems, different way. ICI has tested it in exam. I think in May 24 already a question has come. Okay, this is not this. I think the next one is the May 24. I've given the same reference to the question. So I have invested in 3 mutual funds. Let us see what are the requirements. Number of units. We will calculate the number of units by dividing value as on 31/3/2022, closing value, holding period of the investment. What is balancing figure is number of days of investment, date of original investment. After you calculate the holding period, if it's 30 days, from 31st March remove 30 days and go back to the date of investment, go back to the date of investment. Total return, past performance, exit load is a new adjustment which will be explained after all the 4 are done. After all the 4 are done, other extra adjustments later. Okay, first let us focus on similar adjustment. So I want number of units, closing value, I want holding period, date of original investment. One thing which is given in the question is annualized yield. What is given in the question is annualized yield. Let us repeat the same thing. Let us repeat the same thing. When I come to annualized yield, I will change amount of investment. Right. Same thing, I think. Let us write the same thing. Tell me the question. What is the amount of investment for scheme Y? 5 lakh. Question 21. Okay, we have moved to 21 now. Amount of investment 5 lakh. NAV at entry date 25. 25. 5 lakh divided by 25. One of the requirement of the question. Number of units calculation. Will go no hurry at all. But I want to link all the questions so that you get a better perspective. Somebody wants to practice, you may practice any of the question, all up to you. I'll pick one from each so that you understand all the 4 questions. Any doubts first on number of units? Dividend, what they mentioned? Yield. I assume this to be 5% on opening NAV. 5% on opening NAV, which ultimately will become 5% of investment. How does it become 5% of investment? You'll understand in a minute. 5% of opening NAV ultimately will be 5% of investment. How does it become? Let us do the calculation. Dividend received 5%. What is the opening NAV? Into 20,000 units. 25 into 20,000 units. 5% of opening NAV. 5% of opening NAV into 20,000 units. 5% of opening NAV into 20,000 units, which will match 5% of investment value. 5% of investment value, because proxy for investment value is opening NAV. Proxy for investment values opening. Now you can only debate is should I take it on opening NAV or closing. That debate I agree can be either ways. What we normally do is rule of finances. I invest at the beginning and I receive at the end of the year. So D1 by P naught, K is equal to D1 by P naught. D1 is what you receive at the end of the year. P naught is what you pay at the beginning of the year. So D1 at the end of the year, NAV 0 at the beginning of the year. That is the logic for yield. But somebody can argue, I want to take closing NAV. I will not say no to it. But mostly they will do it on opening NAV. Mostly they'll do it on opening NAV. Any doubts on this? Tell me the amount. 25,000. 25,000. Clear? How many, what is the NAV on the last day? Please don't focus on the other parts of the question, okay? Don't focus now on the other parts. Other parts I'll come back later whenever needed. 20,000 into 22.8. 4 lakh. Any doubts on 456? Annual return equal to what I get back minus what I give divided by what I give, 365 by D. This D is holding period. The D is the holding period. What is the holding period? Balancing figure. 365 by D. If you do into 100, other side no percentage. If you don't do into 100, other side decimal. That's up to you. Into 100, not into 100, I leave it to you. 365 by D. D is the holding period. D is the holding period. Previous question, holding period was given, annual return was to be calculated. This question, holding period is the balancing figure. Holding period is the balancing figure. Understand the questions very clearly so that you have grip on concepts. Now tell me, what is the annual return given for this scheme? 11 point. I'm not doing percentage. Into 100, I'm writing in the other side. You want to write without into 100, then write it in decimal. Write this in decimal. What I get back is 456 plus 25. 456 plus 25. Very simple approach. One scheme you do in different question, you will get full grip. 456 plus 25. And by now, you should get some idea as to how I do reverse working also. What I give is how much? Divided by into 365 by HP into 100. Solve this. HP is balancing figure. Take your time and solve it. Take your time. Okay, 124. Let others also complete. Holding period equal to negative 0.038, 365, 100 divided by negative 11.185. Negative negative will get cancelled. Negative negative will get cancelled. You will get to the holding period. I get the answer from live online as well as here you have told how many days? 124 days. Now comes the bad question. I have to reverse work 124 days and get the date of investment. In that you can consider the day, ignore the day, all that headache will be there. 124 days. Any doubts first on this? Any doubts on 124 days? Can we proceed? Any doubts on 124 days? Date of investment. Reverse working. March 31 days gone. In the calculator, March 31 gone. How many days? 28 gone. January 90 we have reached. We have reached 90. Still we have not reached 124. January 31. Is there a doubt? Jan 31. December how many days? 31. 121 days is over. Another 3 days is there. Another 3 days is there. I'll take it as 29th December or 28th December, depending on how you reverse work. So November. 28th November or 29th November. Out of 124 days, I'll repeat. 31 days of March, whole month of March I've ignored. 28 days of Feb, 31 days of January, 31 days of December, another 3 days. How can that 3 days be? 29, 30, 31 or 28 is investment, but that is not considered in days calculation. That is not considered in days calculation. Then it is 28 invested, but days start from 29. Days start from 29. I don't know what they would have done. Let me, going back the previous logic, this should be 29 November 20, whatever is the date. Which dates? 30, sorry. 28th November. 30, 29, 28. 30, 29 and 28. Sorry. 30, 29, 28. If somebody says I invested on 27 and that is not considered in the days calculation, 27 also possible. 27 also possible. 28 also possible. Any doubts on this? Somebody says 31st March I want to ignore. Then the calculation will further change. 31st March also you can ignore. Then the calculation will further undergo a change. Ideally, these are not very logical question. Whatever way they have done it in the question, they have done what date? 27. Now, if I take 27 and calculate forward number of days, it will not match 124. If you do forward number of days like the previous question, what did they say in previous question? Consider 27. 27, 28, 29, 30 means 4 days. 4 plus 121, you'll reach 125. One question they have followed one logic, another question they have followed another logic. I can't give any answer to this. You also can't do anything with this. Because if you take 27, then it is 4 days. No, last question logic, they considered the date of investment. This question they are saying date of investment is to be ignored. Either consistently if they do something, I'm okay with it. This is a problem where I have no solution. Okay, I have no solution. Easiest is 4 months. Why at all this headache? 12 by M I will do 4 months. 124 days is 4 months. Investment happened on 1st December. That's all. That's the best and the easiest way for me to solve the question. Any doubts on this question? Ignoring the days calculation. Okay, it can be like 30th November minus 3 days, 27th November. I'm okay with that answer. Then when I do forward working, last question only they said consider 27, 28, 29, 30 as 4 days. Now they're saying don't consider. This is not logical. Either consider or don't consider. So whatever way, last question they told something, this question they have done something else. Can we proceed? One important learning is dividend yield. Dividend yield is on the investment value. On the investment value or technically on the opening NAV. Clear? Can we proceed? There are other things to be done in this question. I'll come back to this later. Coming back to this question, question 22, I've written only faculty solving. We will do it together. We'll do it together. Almost same requirement. What is the missing figure is date of original investment. Same like the previous question. Dividend yield is not given. Dividend received is given. You do in your notebook for MFZ. I'm also doing MFZ. I'm doing MFZ. You do in your notebook mutual fund Z. I think this is very similar to 21. Very similar to 21. You do in your notebook mutual fund Z. 20 question number 22. Mutual fund Z. Analysis of mutual fund Z. Number of units, what is total NAV, what is total yield, all this later discussion. You don't worry about all of that, okay? There are certain points to be explained, which I'll explain later. You do in your notebook. You do the calculation and then refer the screen. Do the computation at your end and then refer the screen. One good part, they have not asked for exact date. They've just asked for holding period. Exact date again will lead to some issue unnecessarily. Exact date not needed in this question. They've just asked number of days investment is held. 2, 3 extra things are there, all that later discussion. This is very similar to the previous question, but the extra requirements are different. What are those? We'll discuss in some time. This entire question, linking all the four together, will take away 1 hour of mine. That's okay. Any doubts in 68 days? Can we proceed? Any doubts on this? Everyone got this number? Anyone still doing this 68 days? I'll wait. Do it, do it. Do the calculation. I'll wait. Take your time. Get to this number. Very simple question. Yield is not given. Dividend is directly given. Clear? Can we proceed? Any doubts in this? Can be done? Go to the next question. I've written the date of original investment, but I think that's not needed in the question. Maybe I would have copied. Question 23. I've said homework question, but let us do scheme X here. Let us do scheme X here. Missing data is NAV at the time of purchase. Missing data is what? NAV at the time of purchase. That is the missing information in the question. How are we going to do the calculation? Let us see. I'll directly apply the formula. Directly formula. Listen for some time. You have amount of investment. What is amount of investment? Opening NAV into opening units. I don't know both of them. Let it be as it is. What is closing value is closing NAV into closing units. Will the units be same? Will the units be same? Participate. So I'm going to calculate the closing units as a balancing figure, which will become opening units, which will give me the NAV in the end. What I'm going to calculate is the closing units. How will I calculate closing units? 19.345 is equal to closing units, I don't know, into closing NAV, I know, plus dividend, I know, minus opening investment, I know, minus opening investment, breakup, I don't know, minus opening investment, I know, divided by opening investment, I know, into 365 by D also I know, into 365 by D also know, into 100. What is balancing figure? Closing units or closing value. You can get closing value or closing units. That's up to you. Once you get the closing units, that becomes the opening units. That becomes the opening units, and that will give you the opening NAV. That will give you the opening NAV. We'll do, I'll just explain it one more time. Amount of investment available. What is the breakup? I don't know. What is the breakup? Is opening units into opening NAV. Not given, that is okay. Not given, that is okay. Dividend received is given. What I get back has one item. NAV closing is given. Closing, see, what I get back has two items. Dividend, closing value. Dividend you know, closing value you don't know. Closing units is missing. Opening value also you know. Opening value also you know. So balancing figure closing units. Copy that to be opening units. After you copy that to be opening units, opening NAV balancing figure. Opening NAV balancing figure. Any doubts till this first on the discussion of the question? Let's write now. Scheme X. We will do scheme X. Question 23, scheme X. Right. Effective yield is equal to what I get back minus what I give In exam, obviously write it properly. Closing value plus dividend minus opening value. What I get back minus what I give divided by what I give, 365 by D into 100. Different questions in different forms have been tested in exam till now. There are more variants also. There are more variants to this question. 365 by D into 100. What is the yield given? 19.345. No percentage there. 19.345. What is the NAV on the last day? 11.5 into A. A is the number of units. 11.5 into A. A is the number of units. A is the number of units. Every question is same only. Reason for doing it is one scheme is easy for me to discuss in the available time. 11.5 into A. 11.5 into A plus dividend. I also get back dividend. I get two things, dividend and closing value. What is closing value? 11.5 into the closing NAV. What is, so 11.5 into the number of units. What is number of units? I don't know. What is the dividend we are receiving? 10,000. What is the amount we are investing? Divided by 550. 365 by D. D is how many days? 120 into 100. I'm taking this 120, 365, 100 to the other side. 100 and also 5,50,000. Everything I take it to the other side. I take everything to the other side. I take everything to the other side, get one number in the other side, and then get A as the balancing figure. 19.35, 365 by 120 goes to the other side as 120 by 365 into, sorry, not into 100, 1 by 100. 1 by 100. 100 of this side goes to the other side, 1 by 100, and 550 as it is. From the denominator, it goes to the numerator in the other side. You solve this, A will become balancing figure. A will become balancing figure. I'll repeat the explanation again. I don't know the closing units. 11.5 into the closing units plus the dividend minus the amount invested divided by 550 into what? 365 by 120. 365 by 120 into 100. Can you tell me what is the simplified version of the site? Sorry, 34 980 plus 5,40,000 plus 5,40,000 11.5. A equal to 540 30, 34 980 49,000. You can round off to 50 also. I don't know what they would have done, but this is the number I've got, 49,998.26. Maybe they've rounded off to 50. I don't know. I'm just written this. This is the number I've got, 49,998.26. This is the number of units. 550 by this is the opening NAV. 550 divided by, because the number of units don't change. Number of units don't change. There can be other ways of solving and all. I would have done in different ways. Net I need the answer. Net I need the answer. Whichever way you present. So 19.345 into 120, 365, 100, 5,50,000. We got 34,980. Added 5,40,000 from this side to the other side. Negative 550 became positive. Positive 10 became negative 10. Net 49,998.26. Any doubts on this? Next line. Opening NAV. Opening NAV. 5 lakh divided by 2 decimal. We will keep it as 5 lakh 50 divided by, let's keep it as 2 decimal. 550 49,998.26 11. Okay, NAV is 11. So 50,000 also is fine. 50,000 is also fine. NAV is 11 rupees. Any doubts on this? There are certain extra things to be discussed. I give you 2-3 minutes. Go through all the 4 questions. See the scheme which we have calculated. If you have any doubt, okay? Any doubts on all the 4 questions? See it together. I'm yet to discuss certain extra points which I will discuss after you go through. I give you 2-3 minutes. Go through this. Okay. Now there are few more requirements to be discussed. I'll come back to question 20. Nothing to be done at your end. Okay. When I tell you something to be done, you do it. Otherwise, it's now listen mode only. Another 20 minutes will take for all the 4 questions. Provide a brief comment on the course of action to be taken. No other data. Comment is very simple. This is the best fund. Invest in Y. Invest in Y. Exit Z. Exit Z. My advice is very simple. Invest in Y. Exit Z. Exit Z. X also I may exit and put it in Y. Exit X also and put it which scheme? Y. Reason is if this is what is going to happen in future. If this is what is going to happen in future, exit what? X exit it, Z exit it, put the money in Y. Put the money in Y, story ends there. Exit from X, exit from Z, put the entire money in Y. There is a variant to this. I'll explain. Any doubts first on this question? So brief comment is this. Done. A question may ask total return on investment. Total return on investment. What is total return on investment? I don't think so. We are going to do it. What is total return on investment is X is earning 16,000. X is earning 16. What is 16,000? What I get back minus what I give. Y is earning negative 19. Z is earning 32. All put together is total return. All investment put together. What I get back for 3 funds. What I give for 3 funds divided by what I give for 3 funds into no 12 by M because all are at different times. All are at different times. What I get back for all. What I give for all divided by what I give. Divided by what I give. In case you want to practice, you will practice this example. We'll get back to concept book. Total yield of an investor or total return of an investor. Total yield applicable when an investor is investing in multiple mutual fund. What is multiple mutual fund? X, Y and Z. What is the formula? Capital gain of all. What is capital? Not CG1. What is capital gain is NAV1, NAV0 difference. The appreciation. Capital, I should have used the word capital appreciation. All 3 put together capital appreciation or depreciation can be negative also. All 3 put together dividend divided by all 3 put together investment into 100. 2 lakh I invested, 5 lakh I invested, 4 lakh I invested. I earned 10,000, negative 44, positive 16. Add all the 3 number. Add all the 3 dividend. Add all the 3 capital gain. Add all the 3 dividend. How will you get capital gain? NAV1, NAV0, all that extra calculation you have to do. What are these numbers? These are copy paste of that question which we are discussing. From there, I've directly taken the final numbers. Final numbers and put it as an example here. Add all the 3 capital gains or add all the 3 what I get back. Add all the 3 what I give divided by what I give into 100, no 12 by M because all are at different points of time. All are at different points of time. Any doubts till this? Can we proceed? Any doubts on this? 3 funds you have to put a total. I don't want any solving. Next thing you are going to solve. Now write. Next thing you write. Write in your notebook. Question 21. Question 21. Exit strategy. Question 21. Exit strategy. Exit strategy. What is this? You'll understand when I do the question. Scheme X. Scheme X, Scheme X 9.733% and 300 days. What is the use and all? I'll explain. Scheme Y negative 11.18%, 124 days. Live online guys, is the screen blurred? Can others confirm? I don't see screen being blurred. Can others confirm? Is there an issue with the screen? Scheme Z, okay. Scheme Z, uh, right, 15% and 195 days. How will you get all this? By doing calculation. I don't want to repeat the calculation for individual. Now a question may say, whatever happened in the past will continue in future. What is the exit strategy? Second question will say, what happened in the past will continue in future, but for exit, there is a exit load of some percentage. There is a exit load of some percentage. Two questions can happen in the practical world. One is you exit without exit load. Without exit load, sell X fully, sell Y fully, put in Z. No exit load, sell X fully. Past, repeat in future. Past is repeating in future. Very simple advice. Please remove X fully, remove Y fully, put money in Z. Remove X fully, remove Y fully. We will write in a minute, okay? No exit load. Strategy is very simple. Sell X fully, sell Y fully, put entire money in Z. Underperforming. This is called exit strategy. It's there in the concept book. Later I'll explain, okay? Sell X fully, sell Y fully, put entire money where? In Z. Exit strategy, right? Without exit load. Without exit load. This got tested in MTP, RTP. Exam at what time it will come, I can't say. Exit strategy without exit load. When I say without exit load, nothing is mentioned in the question. Like the previous question, I said what you will do, you will just sell the two funds and put everything in the, if there is no exit load, sell scheme X, sell scheme Y and put money in scheme Z. If you got these numbers, you have to solve. I have just told you to copy paste numbers. You have to do the task of solving these and getting the numbers, okay? This is one part. Sell X fully, Y fully, put the money where? In Z. Exit strategy, exit load of 5%. Exit load of 5% redemption within 1 year. Redemption within 1 year. Redemption, if you do within a year, you will have to pay 5% charge. You wait for a year, you need not pay this 5%. This is the question's requirement. There is a exit strategy. Practical world, do we have exit load? Yes. Will it be this high percentage? No, 1% it can be there. This question which you are seeing there has 5%. Don't look at the question now. Just focus on what is there in the screen. Exit load is how much? 5% if you exit within 1 year. Scheme X, what is the return I will generate? 9.733. Best fund will give me how much return? 15%. So obviously if I wait, I lose money. If I wait, I lose money. But one good thing is, can you wait for another 65 days? Can you wait for another 65 days and save 5%? Can you wait for how many days? Another 65. Why 65? We are already at 300. We are already at 300. Can we wait for how many days? 65 days. If somebody is going to tell there is an exit load, I say it's okay. Let me be with a bad fund. I don't know. I'm just going to do the analysis and decide. I'm okay with a bad fund for another 65 days. In this 65 days, I may lose proportionately 2-3% and save 5%. I'm happy. I am happy to lose 2-3% and save what? 5%. Proportionate losses 10% and saving is 5%. Immediate exit. Immediate exit. I don't know. I'll have to do the analysis. What is the analysis? Exit load is how much? 5% if you exit within 1 year. Already 300 days we have gone. Another 65 days, if you wait, you will lose 15 minus 9.733 for a year. This is yearly rate. Like 15 is for a year, 9.733 is also for a year. Can I wait for another 65 days? Can I wait for another 65 days and say what? Save exit load. Save exit load. Scheme X analysis. Scheme X analysis. Scheme X analysis. We are going to lose 15 minus 9.733 equal to what is the percentage? 15. What is 15? Best fund. What is 9? My fund. My fund is giving 9. Best is giving how much? 15. How much will I lose? 3 point for a year. If you wait for a year, you will lose this. I'm not telling you to wait for a year. I'm telling you to wait for only few more days. Only few more days. Can I wait? Not wait? I still don't know. I will analyze and then give the answer. Wait only for few more days. Another how many days you have to wait? 65 days. 365 days, loss is 5%. 65 days, loss looks to be around 1-2%. We will do the calculation. Proportionate loss will be on the lower side. I'm okay to lose 1-2% and say what? 5% exit load. Then my strategy will be wait for 65 days and then exit. And then exit. Exit is 100%. But wait for how many days? Another 65 days. Why? Already 300 gone. Let's assume only 10 days have gone. Maybe my strategy is to immediate exit. Maybe my strategy could be immediate exit because I have to wait now for another 355 days, which I may not agree. Next, proportionate loss. Proportionate loss for another 65 days. Can you wait for another 65 days is the story here. Proportionate loss for another 65 days into 65 by 365. Tell me the proportionate loss. Point 994%. I am okay. I am okay to lose 0.94, save exit load, wait for 65 days and exit out of the fund. This is my strategy. It's an underperforming fund, but I'll wait. I'll play a waiting game. I'll play a waiting game here. Wait for how many days? 65 days and then exit. And then exit. In this case, let us wait. Let us wait for another 65 days. Save exit load. Save exit load of 5% and then exit after 65 days to MFZ. We will move to MFZ. Advice is right, but movement will wait for another 65 days. Why? To save the exit load. To save the exit load. If the exit load was 0.5%, incur the exit load. Incur the exit load because loss in return is 0.94. Clear? Able to understand this? Any doubts on this? Any doubts on scheme X analysis? Scheme X we will play a waiting game if there is a exit load. If there is a exit load of how much? 5%. Scheme Z. Scheme Y, not Z. Z is anyway the best scheme. Scheme Y. We are going to lose. 15 is what the best fund gives. 15 is what the best fund gives. What is our fund giving? Minus of minus, negative. We are only generating negative, so huge loss it is going to be. We are generating negative, minus of minus. Minus of minus. Best one is giving 15 and we are generating negative. So loss is going to be very high. Loss is going to be very high. Minus of minus. What is a loss? For a year. I may still play a waiting game if the balance days is some 10 days, 20 days. I don't know how many balance days are there. If the balance period is small, I may still say let us wait, save 5%. Loss is very huge here. What is the loss? 26%. How much time is already over? Another 241 days you have to lose return. Another 241 days. Another 241 days. 124 over another how many days? 241. I don't think so. I'll wait for such a longer period. Proportionate loss for another 241 days. Another 241 days into 241 by 365. 17 point. I'm not going to wait. Immediate exit. Because I can't save 5% and lose 17%. I cannot save 5% and lose what? 17%. Why will I play a waiting game here? If it was another 10 days, maybe I would have waited. I don't know. I'll do the calculation and decide. I have to wait for another how many days? 241 days because only 124 days have got over. Another 8 months, I don't feel I will wait. I will not wait with the bad fund for another 241 days. Any doubts on this? Any doubts on the concept here? Any doubts on the concept? Again, I shouldn't have done it in the question. Exit strategy of underperforming mutual fund. No exit load, exit immediately. Exit load exists. Check proportionate loss. Check proportionate loss. What is proportionate loss? Best fund, worst fund, balance days, 365, and the question which you did is the example here. The question which you did is the MCQ example here. You should have done only this MCQ. And I did only that MCQ. I did only that MCQ. At home, you will practice MCQs. You will practice MCQs at home. This is what is happening in this question. For exit strategy, we are going to compare what? We are going to compare the best fund, participate best fund with the worst fund or our fund. Find out the difference. Find out the proportionate loss for the balance day. Compare with the exit load. Compare with the exit load. Clear? Any doubts on this? Okay. I'll be going back to the next set of question. There is another one set which is 3 questions are there. I'll do that and then end the session. But before that, now I want to revise with the concept book because different places have covered the concept. I'll quickly see it once. Go back there. Any doubts on the concept here? Any doubts on the concept? We first started with NAV. Concept 10 is revised already. I'm not doing that again. What is NAV? Is the participate. NAV is the value per unit of the mutual fund. How do you calculate? All assets minus all liability divided by number of units. Divide by number of units. There's a second formula which is later. No link between unit of a mutual fund and shares of the company. At home, you want to practice the examples. Impact of events on NAV already done at different places. Fresh purchase, no impact. Redemption, no impact. Dividend declaration, NAV will fall by the amount of dividend. Will fall by the amount of dividend. Total yield of investor. What is total yield? Is what I get back for 3 funds together, what I give for 3 funds together, divided by what I give for 3 funds together into 100. No 12 by M. No 12 by M, that is called total yield of investor. Total yield of investor. Exit strategy with the exit load. With the exit load. No exit load is the first question we did. They said brief comment. I said exit everything. Without exit load, exit everything and put it in the best fund. With the exit load, calculate what? Proportionate loss in return. Proportionate loss in return. Compare with the exit load and then decide the strategy. Should you do the question? No, you should do only this example. You should do this example, same numbers. I've copied the same numbers. I don't want to do even new numbers and all. Concept is what you have to revise. You have to revise with only MCQs, most of it. Cash balance computation, able to track the event, calculate the closing cash. Not able to track the event, no need to calculate the closing. What is tracking? Inflow, outflow. Inflow and outflow if you're able to track. Dividend income on the mutual fund on its investment. You invested in some shares, you will get the income on that. You have a bonus or a rights issue. See, when is the dividend declared? When is the bonus and rights issue happening? Bonus happened at the same time dividend is declared. I'm yet to get the new shares. No dividend on the new share. Dividend declared and bonus was declared 3 months earlier. 3 months earlier. In that case, you will get dividend income on both. Dividend income on both. This is yet to be discussed. Dividend equalization. Dividend out of realized earning. If you have any dividend out of realized earning, what is realized earning? Dividends paid, capital gains realized into the percentage. Dividend out of dividend is called D1, if at all you want to know, and dividend out of capital gain is called CG1. Out of capital gain is called CG1. Valuation of equity share. Closing index value divided by index on date of investment. We did in one question. I said 1000 equal to 20 CR, 2300 equal to question mark. Like this, you also have bond valuation, but I don't want to explain the formula now. This is done in security valuation, but in one question I have to follow this formula. That time I'll not explain. I'll say just copy paste, But later when I go to bond valuation, you will learn this formula. You will learn this formula in bond valuation. And some question may ask us to calculate something called as expense ratio. This also indirectly got tested in that latest exam question. There was some SEBI limit they mentioned on the expense ratio. What does expense ratio is? How much expenses can a mutual fund incur on the investments it is having in hand? I have collected 10,000 crores from you. I can afford to incur only 1 crore on this, 10 crore on this, 100 crore on this. There will be some limit. Who will set the limit? AMFI and SEBI sets the limit. For that, you have to calculate expense ratio. What is expense ratio? Is all expenses divided by opening net asset value or closing net asset value or average net asset value. You can do opening, you can do closing, you can do average. You can do at a per unit level or at a overall level. What is per unit level? All expenses divided by number of units, opening NAV per unit, closing NAV per unit, average NAV per unit. Any of them can be denominated. Why is this calculated? Increase in expense ratio, reduction in your return. Your return will go down if expense ratio goes up. SEBI and AMFI has a lot of limitation on this. They will not allow you to. In fact, every mutual fund will message you saying that I keep getting message that we are revising the expense ratio. Any revision in expense ratio has to be informed in advance. Why is this needed? Every day NAV is calculated, no? Every day that expense ratio will be applied. Every day the expense ratio, 1 day expense. What is 1 day expense? NAV into the expense ratio 1 by 365. Later in the end, they will do adjustment. That is a later story. But everyday expenses will have to be deducted for NAV calculation. How is this calculated? Total expenses. Very simple example. Annual expense 20 lakh. How many units are there? 20 lakh by 1 CR is how much? 0.20. Every unit my expense is 20 paise. This you can divide by opening NAV. You can divide by closing NAV. You can divide by average. Practical world, average is preferable. Clear? These are different concepts. Only one concept which is still pending is dividend equalization, which I will not do today. I'll be doing it in the next session. Any doubts till this first? Any doubts on this? Again, I've revised all the concept again in 5 minutes. 5 minutes is what it takes for me to revise what I do in 3.5 hours of the session. Clear? We will now go back to the questions. I'll now, like I did the previous question, I'll read 24, 25, 26 together. 24, 25 and 26 together, and then we will start doing the questions. Okay, let us read all the three together. These are different variants which have come in exam. Any doubts on the previous set of questions? 4 questions we have seen. Anybody has any doubts in any of those 4 questions? Any doubts on this? Can we proceed? Done? Okay, let us read 24, 25, 26. Okay, I'll give a student wants some time. I'll give you a minute or two. You go through this minute or two. Okay, let us read 3 questions and then we come back. Mr. X on 1/7/2007, during the initial offer of a mutual fund, invested in how many units? 10,000 units with a face value of 10 per unit. On 31/3/2008, dividend given by the mutual fund is 10%, and Mr. X found the annualized yield to be 153.33%. They gave some annualized yield in between. On 31/12, another 20% dividend is paid. On 31/3/2010, last day, he redeemed how much? 11,296. How much did we invest? 10,000. How much are we redeeming? How is this possible? Dividend reinvestment plan. Dividend reinvestment plan. So what we are going to do is we are going to prepare that table. Started with 10,000. Some reinvestment would have happened, and we have reached what? 11,296.11. In the gap, you will get your reinvestment NAV. 2 reinvestment NAV and 1 closing NAV. 2 reinvestment NAV and 1 closing NAV. Clear? Any doubts on this? Okay. Similar question. Mr. X invested 1 lakh. This is November 24 exam at a face value of 10 under which plan? Dividend reinvestment plan. The mutual fund declared a dividend of 10%. Holding period return is 115%. They are saying I am not giving you annualized return. Annualized return means in the formula do 12 by M. Holding period return, don't do 12 by M. Don't do 12 by M. I'm directly giving you the holding period return. Directly giving you the holding period return. Previous question gave the annualized return. This question gave holding period return. Mutual fund declared a dividend of 20%. Mr. X redeemed and calculated the holding period return to be 193.134. 2 NAVs they are asking here. The previous question asked 3 NAV. Here there are 2 NAV requirements. Any doubts on the question? Only difference I see is first question talked about annualized return. This question is talking about holding period return. 1/7/2016, Mr. X invested 50,000 at an initial offer in mutual fund at a face value of 10, dividend of 10%, annualized yield 20%. I wanted this also be discussed. Capital gain distribution is 0.60. Capital gain is also dividend only. Capital gain is also dividend only. How much is given? 0.60 per unit. On 31/3/2019, he redeemed everything. Only difference is first question has holding period annualized return. This question also has annualized return. This question has capital gain distribution. Has capital gain distribution. Previous question doesn't have capital gain distribution, and this interim question has holding period return. Has holding period return. I think only 3 variants have added. Yes, 3 variants are added. Again, this has been tested in different forms at different places. Okay, ICI has not stopped with this only. They have ended up testing this in different ways. Clear? Let's start with 24. I may go back to 26. I may come back to 25. I may do the full question. are part of the question. As we proceed, we will understand. Clear? Let's now get to 24. Any doubts first on the three question? 24 has used the word annualized yield. 25 has used the word holding period. 26 has used the word annualized yield with a capital gain distribution. With the capital gain distribution, small play in different questions by ICI. Let's start. Working note 1, question 24. Question 24. Question 24. Dividend reinvestment plan. Dividend reinvestment plan. Open our table which we open. Date, 7 columns. Date, opening units, dividend percentage, dividend in rupees, reinvestment NAV, closing units, units allotted, closing units. Clear? In this question, mutual fund is declaring 2 times dividend. There is one dividend on 31/3/2008, another dividend on 31/12/2009, and redemption on 31/3/2010. We start with the first dividend. When is the first dividend? 31/3/2000. 31/3/2008. This is the starting date. How much we have invested here? 10,000 at the rate of 10, directly 10,000 units. 10,000 units. Any dividend percentage given? 10% on face value. 10% on face value. On face value. Other variants, I will see if we have to solve or discuss. We will see 10,000 into 10% into 10. What's the value? 10,000. I don't know this. I don't know this. I don't know this. This is what I have to calculate. They want what is the NAV on 31/3/2008. One thing they have done is they have told me on 31/3/2008, on 31/3/2008 dividend is paid, and Mr. X found that is annualized yield is how much? 153.33%. They have given the annualized yield on which day? 31/3/2008. When did we invest? 1/7/2007. Below the table, NAV on 31/3/2008. Annual yield is equal to closing value minus opening value divided by opening value 12 by M into 100. Same formula, next question, but without 12 by M. Without 12 by M, because there they have used the word holding period. Here they have used the word annualized yield. There they have used the word holding period. What is the annual yield given for 31/3/2008? 153.33. Closing value balancing figure. What is the investment we made? 1 lakh. Dividend will not form part of my income and all. Dividend is not going to form part of my income. Dividend will not form part of my income. Divided by 1 lakh. 12 by how many months? 9 months into 100. Please tell me the closing value. Get the closing value. For classroom discussion, you write the value. I don't want to waste time. 2,15,000. I know the answer. 2,15,000. You write the value. Later at home, you can do the calculation if you are interested. Closing value is 2,15,000. I don't want you to spend time on getting the value. Okay. Now listen. 31/3/2008. Two things will happen. My value is 2,15,000. My value is 2,15,000. What is this 2,15,000 is? 10,000 into 21.5. What is 2,15,000 is? 10,000 units into what rate? 21.5. If dividend is paid, it will become 20.5. Why will it become 20.5? NAV will fall by the amount of dividend. Value will remain same 215. Number of units will go up. Number of units will go up. So this you write on 31/3. What is happening? 2,15,000. What is the breakup? 10,000 into 21.5. On 31/3, I give you two answers. One is NAV before dividend. One is NAV after dividend. NAV before dividend. NAV after dividend. I'll repeat again. 2,15,000 value you told me, which is nothing but 10,000 units into 21.5. What is 21.5? Balancing figure. This 21.5 will go down by the amount of dividend. Will go down by the amount of dividend. What will happen? Units will go up, and then you will see this in the table in some time. How does units go up? We will see in the table. But you do this calculation and tell me the units also. 2 NAV for 31/3. One is before dividend, one is after dividend. I'll repeat again. One is before dividend, one is after dividend. How you got 215? I told you to directly write the number. You do calculation, you'll get 215. Okay. 215 breakup is what? 10,000 into 21.5 RR. Question mark into 20.5. What is the question mark? 10,000. Write this, we go back to the table. We will go back to the table. 10,487.8. Any doubts on this calculation? Two NAVs are there on that day. I can give two answers. One before dividend, one after dividend. One is before, one is after. Dividend as such is an event which is of no use to me. My closing value will be 215. Whether you call it as 10,000 units or you call it as 10,487 units. That is why dividend reinvestment has no utility in the practical world. Reason is very simple. You don't want dividend, go for a growth plan. Go for a growth plan. In the growth plan, 10,000 into 21.5 will continue. In a reinvestment plan, 10,487 into 20.5 will happen. Technically, both are same only. Why do I need a dividend reinvestment plan? Is of no use in the practical world. Any doubts first on this? Can we proceed? 10,000 into 21.5, 10,487 into 20.5. Go back to the table. Reinvestment NAV is 20.5. Listen, understand why 20.5 also. Dividend declared, NAV falls, dividend is reinvested. Dividend declared, NAV has fallen. Now after that, I am giving back my money to the fund. I am giving back my money to the fund. Dividend declared, NAV falls, and then the reinvestment will happen. Then the reinvestment will happen. So number of units is 10,000 divided by 20.5. I'll explain this one more time. I got a value of 2,15,000. Breakup of 2,50,000 is 10,000 units into 21.5. Other way of looking at is 20.5. Other way of looking at is 20.5. Any doubts on this first? Same thing we have to repeat for the other question, where no into 12 by M. No into 12 by M, because they have given holding period return and they have not given the normal. They have not given the normal number. What they have given is the holding period return directly, not the annualized return. Any doubts on this calculation? Can we proceed? When is the next dividend paid? Sorry, 31/12/2009, 10,487.80. Start with 10,487. On this date, have they given any return and all on 31/12? Participate. I know, very tired, but you have to participate. Have they given any return? Yield is given. Return. Dividend is 20%. Any return is given? No. Okay. What is that dividend percentage? 20%. Write this 10,487 into 20% into 10. 10,487 into 20%. How much? This balancing figure. This is balancing figure, but this is known. Last day unit 11,296. This is how you'll get the NAV. NAV is closing units is known. Closing units is known. What is the closing units? 11,296.11 reverse. Now come in the reverse order. Now come in the, where is 11,296 given in the question? Redeemed how many units? 11,296. No extra dividend after this. No extra dividend after this. What happens to the third NAV? I'll explain. Last day what? 11,296.11. 11,296.11 reverse working units allotted. Minus 10,487.8. Reverse working units allotted. No, units first. Tell me the units. 80.1. Please work with two decimals. Please work with two decimal. 808.1. Unless question says no decimal. This is balancing figure. 20. Concept is very simple. Same thing only I'm repeating in different ways. We are seeing this. What's the NAV? 25.95. The role of the table is over. What happens beyond this? Let's see. Any doubts on 25.95? Any doubts on 25.95? This question I'll do it fully. Next question only discussion. Any doubts on first 25.95? Understood the answer? When are we redeeming? 31st March 2010 I redeemed. When the annualized yield is how much? 73.52. One word is missing in the question. Purposefully they have missed. 73.52 for the period of holding. Your return is always for from day 0 till day end. From day 0. When did we invest? 1/7/2007. When are we exiting? How many months are there in between? How many months are there in between? 1/7/2007 to 31/3/2010. 2 years and 9 months. 2 years and 9 months, which is how much? Listen, I'm going to do a very simple calculation. We will repeat the same formula. 30 months formula. Closing value will come. Closing value is 11,296 into closing NAV. Closing value is 11,296 into closing NAV. Closing value is what? Closing units into closing NAV. Which number I'm going to use? I'm going to use the annualized yield given on the last day. On the last day. Let's repeat. NAV on, what is the last day given? 31/3/2010. NAV on 31/3/2010. I'll repeat the explanation again. We started on which day? 1/7/2007. We are exiting on which day? 31/3/2010. What did they say? Annualized yield is how much? 73.52. Listen, 2 minutes. This word they purposefully missed it. That's why I want to always compare over the period of holding. The annualized yield is always for the day 0 till the day end. It is not from the last dividend to this dividend. From day 0 till the last day. From day 0 till the last day, this is your return. This is given in question 26. That word is missed out purposefully in question 24. In that also, I see two questions in ICI study mat. Maybe in one they give, one they don't give. I don't know. I'm not opening the study mat as of now. But over the period of holding, word is missing. Because some students think that 73 is from last year to the next year. No. 73 is from the beginning till the end. From the beginning till the end. Right. Annualized yield. Annual yield is equal to closing value minus opening value divided by opening value into 12 by m into 100. What is the return given? 73 point. Please apply the formula. You do the calculation. 12 by 33. The closing value. Take your time. Take your time. 12 by 33. Take your time and do the calculation. Take your time and do the calculation. $302,180. This is nothing but closing units into closing NAV. Closing units into closing NAV. No two separate calculation, no dividend and all. Closing units into closing. Earlier we did 2,15,000 broken down as 10,000 into 21.5. I gave another answer. It became 20.5 there. It became 20.5. 302,180. Any doubts on 302,180? Any doubts on 302,180? Not the number 302,180. The steps, if you have a doubt, number is max. That's not my worry. Anyway, you should have got 302,180. Number is not my worry. Any doubts on the concept or calculation? NAV as on 31/3. As on 31/3/2010. 302 11,296.11. Get me the NAV. 26 point. This we have done full question. Now next two question, it's just faculty discussion. You need not do anything. You are going to be in lesson mode. I'll take you through the full question, but no writing here. Any doubts on the calculation here? Any doubts on the calculation? Any question you want to practice again at home, you can practice. One thing which I 100% want is that markings, okay? Easy, moderate, difficult marking, 100% not completed during the session. First thing you do after going home and whenever you open the book is marking. Marking is mandatory for you to be done. You don't, if you are using my PDF, in the PDF also end up marking it, because without marking you will end up struggling later on. Any doubts till this? Any doubts on this? I go back to 26. I'll come back to 25 in a minute. 26, what you will do is you will do the normal calculation. In this time, when you do the table, dividend is what? 20% and what? Capital gain is 0.6. So dividend will be units into 20% into face value plus units into 60 paise. Units into 60 paise. No other changes there. I can't discuss the entire question because only one change. Only changes 0.6. Only faculty solving, because I don't think you need to do this question. How will you do? Same table. I have given in different ways, but you can do in the same table. In the same table. When you do it in the same table, it will be like this: 20% plus 0.6. 20% plus 0.60. 0.60 is dividend. What will you do? 20% on the number of units into face value. What is 0.6? Directly into the units. Directly into the units. Will anything else change? No, nothing can change. Nothing can change. My presentation could be little different. Investment, they have given annual return 120%. You apply the same formula. Presentation could be little different. You apply the same formula. 120%. If you apply the formula, you'll get 95,000 closing value. Divide by 5,000 units. NAV 19. Post dividend it is 18. Your units will go up now. Units will go up. Units go up to 5277. On the 5277, you earn 20%, 10 rupees, and extra 0.6. And extra units allotted is balancing figure like the previous table, and NAV is balancing figure. NAV is balancing figure. You do it in the table approach, that is better. I would not have been able to standardize all the answer. Maximum I standardize, but you do it in the table approach, you will get to the answer. Last part, the 71.5 over the period of holding, closing units, closing value minus opening value by opening value into 12 by M into 100 is equal to 71.5. Number of months you write and do. This question, if you want, practice this at home. It is repetition of the earlier question. Repetition of the earlier question. Any doubts on this question? Any doubts? Only difference is 0.60 extra. Only differences, and I had to keep this question only for that purpose. Other question I did not remove because there was a study mat question. Else only this question I wanted to discuss. Any doubts on this? Can we proceed? Coming back to this question. Again, no writing. Mr. X invested 1 lakh at 10 per unit in a dividend reinvestment plan in a mutual fund during the initial. Mutual fund declared a dividend of 10%. Mr. X holding period return is 115%. I'll put the table. I don't want you to write anything. You only tell me the numbers. When is the first dividend declared by the MF? Look at this question and tell me the dividend declared date. 31st March 2023. How many units did we buy? 10,000. What is the dividend percentage? 10%. Dividend is 10,000 into 10% into 10. 10,000. I don't know this. I don't know this. I don't know this. I'll come to this. Only thing is below, do this calculation. NAV as on 31/3/2023. NAV as on 31/3/2023. Only changes holding period return. Only changes holding period return. Ignore 12 by M in the calculation. Ignore 12 by M in the calculation. Everything else remains same. Everything else remains same. I will do it. You just listen more. Only 12 by M is removed from the formula. Only 12 by M is removed from the formula. What is the holding period return given? 115. Closing value I don't know. Opening value 1 lakh divided by 1 lakh into 100. Answer is 2 lakh 15. Same question only, I say I converted. Answer is 2 lakh 15. Same question only. It is the same question. 2 lakh 15 only you will get if you solve it. If you solve the question, you will get same answer, 2 lakh 15,000. I don't want any solving and all. 2 lakh 15,000. This 2 lakh 15 is broken down into two. 10,000 into same 21.5 or 10,487 into 20.5. 1,000 units only, no? Yeah, same numbers. So let's go back here. Reinvestment NAV is 20.5. Reinvestment NAV is 20.5. Number of units is 487.8. 10, 487.8. Same numbers. Replacement is, instead of giving annual yield, I am giving you holding period. I am giving you holding period. Any doubts on this? Then next date is, when is the next dividend? 31st March 2024. We are starting with 10,487.8. Maybe the numbers may match also. It may end up matching also. 10,487.80. Dividend percentages 20%. Units 20. They have not given the closing units here. That is another variant they have done. What they are doing is, on this day also I am giving you the holding period return. On this day also I am giving you the holding period return, you apply the formula, get the closing value, break down the closing value into before dividend, after dividend, before dividend, after dividend. After dividend, units will go up, NAV will go down. Units will go up, NAV will go down. Only two scenario. Only two scenario. They're saying NAV as on 31/3, two answer. One before dividend, second after dividend. One is before, second is after. 31/3/2024, again two answers. One is before dividend, one is after dividend. What is the holding period return they have given? 193. I'll repeat the same formula. Holding period return is equal to 193.134 equal to closing value minus 1 lakh divided by 1 lakh. The closing value will turn out to be 293,140. It will turn out to be 293,140. How would all and all later calculation you want to do, you do at home, okay? 293,140. The breakup of this is 10,487 into the NAV minus the reduced NAV. What is reduced NAV? Dividend. Dividend will reduce the NAV. Dividend will reduce the NAV, increase the number of units. Dividend will reduce the NAV. I'll write the breakup. Breakup is 293, 293, 140. Breakup is 10,487 into something. Tell me what is this into? 10,487 into some number. 293, 140, 10,487.8, 27.95 or 78, 96. Okay, 293, 140 divided by 10,487.8. Okay, 27.95. Once dividend is paid, this will go down by the amount of NAV. Units will go up. Units will go up. Units will go up. This will go down by 2 rupees. Will go down by 2 rupees. Why 2 rupees? Dividend is 2 per unit. This will become, number of units obviously will go up. Number of units obviously will go up. I can show the answers to you now. It goes down to 25 and number of units balancing figure. Okay, number turns out to be same 11,296. It is the same 11,296 varied in November 2024 exam. This is a November 2024 exam question. Same 11,296 question only, but they varied the problem like this. They gave what? Holding period return. They gave holding period return. Able to understand this? Now, we have covered almost the mutual fund. I still have something to be done, which I'll do it in the tomorrow's session. Almost everything is done. I'm not revising now. I'll revise after, that is at the starting of tomorrow's session, or once I'm done with the balance concept. Only thing I want is complete all the concepts again, one time reading, complete all MCQs, mandatory before tomorrow's session. Mandatory means mandatory. Some homework I gave, no, able to do it today, do it. Finding it very difficult to do it, you can do it later also. Homework you can do later, but if you start delaying, you will miss the track, okay? So I'm not given many homework. I think 2 questions are there, 2 or 3 questions there, and any question you want to practice again at home, please practice. How much practice, what to do, all up to you. I will give you this note alone, homework question, faculty solving, all this. Even this homework question I have converted. Any way you solve. Solving is up to you. You just randomly do it and then do. Not proper answer and all. I'm not even bothered about proper answer. I just want you to 100% MCQ. MCQ is to 100%. And when you do MCQ, don't look at the options also. I created with the option just to create MCQ form. Don't even look at the choice. You do. What is those MCQ? Those MCQ are descriptive question moved there. Descriptive question moved at that place. It is not I have created any new MCQ. I don't even want a student to spend what I spent here. Next you have to spend only MCQs. Only MCQs and difficult question. Whatever you mark as difficult. You cannot ask me what is difficult for me, because I will give you a different number. You will end up taking a different number. So whatever you find as difficult, you do. At home you will go back, take rest for some time. Obviously rest is needed. After the rest is done, 2-3 things you have to do. 2-3 things, important things which you have to do is One, marking, if marking is not done during the session. Second, writing key adjustment if that is not done. Third, MCQ solving. Fourth, homework, possible, not possible, I leave it to you. Clear? I'll end with this then. We meet again tomorrow at same 9:30. Sessions will go on till 6 only. You will not see me reducing it unless my throat becomes bad. Clear? We'll end now. Thank you, friends. Good morning, friends. Okay, let's continue with the session. We were doing mutual funds yesterday. I'll revise mutual funds in maybe in half an hour later. I just need to cover one concept. Before that, I'll quickly see what questions I wanted you to do at home, and in case any discussion is needed from my side. One, I told you to ignore. Two, we are done with the class. Three done, four done, five is done, six. I think first segment, almost all questions we did. Question 12, I had told you to do at home. Fairly straightforward question. You just need to multiply, add the, deduct the accrued expenses, deduct the other liability, and that will give you NAV per unit. I don't see any major discussion needed in question 12. Question 13 we did in class. Question 14, same as 13. I had told you even to ignore it. In case somebody has done it, you have first day price, first day share price is there, multiply, divide by number of units. A person is coming in with 30 lakh, you allot him units, buy shares of M Limited, cash is balancing figure, and then for the next NAV, next date, the price is changing, multiply with the new price, and then you get to the answer. Whatever I'm telling now will work only in case you have tried something. This question I did not try. I did not tell you to try, but if you have tried, all these points will be useful. 15 we did in class. 16 I had told you to do at home, but I had said one issue can come or one point can come. If you have attempted, you will see that at the end of the year, equity shares are quoted at 175%. This 175% is on what is not given in the question. It is not very clear in the question. I can argue it is 175% of 160. I can also argue it is 175% of face value. Both obviously will give a different answer. One student has already asked me a doubt on this. I wanted to discuss it in the class itself, provided you have tried yesterday. If you haven't tried, then try later. 175% can be interpreted in two ways. ICI interpretation is 175% of face value. That's the interpretation they have followed. In case same question comes again in exam and you remember this, take it, else it's an assumption based area. Other adjustments were very similar to what we did in the class. 17 we are done in the class, 18 done, 19 is what I'm going to discuss now, and other 20 till 26 everything was done. Let's do 19 now, which is on an area called dividend equalization. I was expecting that ICI at some point of time will remove this from the material. Why they should remove also I'll explain. Now in the practical world, NAV calculation, what happens, let's understand. Mutual fund, does it report daily NAV? I have to see. MF reports daily NAV. If it reports daily NAV, calculate the NAV. For example, a person comes on April 5. I know the April 5 NAV, allot units to him. Person comes on April 10, allot units on April 10 NAV. But question says, no, we are not going to calculate NAV on a daily basis. Practical world, at least India's context, I don't see this option. Other countries also may not have an option like this. If you are not calculating NAV on a daily basis, somebody comes on April 10, you have to give him units. How will you give units to him on April 10? Somebody exits on April 15. How will you give him money? Because he is exiting means you have to give him NAV and tell him to exit. And a person comes in, you have to allow, for the money collected, you have to give him units. For all this purpose, I need NAV on a daily basis. We will see problems where they'll give you NAV of March 31. A person may enter on April 30, exit on May 31. Again, an entry may happen on June 30. For every month end, it's only month end question there. Every month end, I want the NAV. Only one reason, one approach I know to calculate NAV. Add all assets on April 30, deduct all liabilities on April 30, get the NAV. Question is saying, no, you can't do all that. You will have to do some shortcut. Now, what is that shortcut? How are we going to use that shortcut is what the concept of dividend equalization is. In the practical world, this option does not exist, at least from India point of view. And I don't think so any other country also this will be there. The concept of dividend equalization comes into picture if somebody says, I will not calculate NAV on a daily basis. If at all something like that happens, we need certain adjustment. What is this adjustment? Let's understand. Question will give you March 31 NAV. From March 31 till the April end, what is the income I'm earning per unit? What is the income I'm earning per unit? Income post expenses and all. What is the income we are earning per unit? Add that income and get the new NAV. Add that income and get the new NAV. May again you want to calculate, add further May income. June also you want to calculate, add further June income. If you are able to calculate income per day, why per day? Because every day I need. But here per month, because the question is going to talk about monthly calculation. This concept ideally should have been removed from the material. I am a firm believer that they should remove this, but they keep asking this. Even in earlier they used to ask, and in your syllabus they have already asked in May 25 exam. A question on dividend equalization is already there. Calculation fully logical, practical relevance is not there. There is no gap in the calculation. If there's a gap in the calculation, then that's a headache. Logic I can explain, everything logical, but utility is not there in the practical world. Let's read the question. On 1st April, question 19, an open-ended scheme of a mutual fund had 300 lakh units outstanding with NAV being 18.75. The NAV is 18.75 for 300 lakh. At the end of April, it issued 6 lakh units. It issued 6 lakh units at opening NAV plus some 2% load adjusted for dividend equalization. What is this dividend equalization is what we are going to understand. At the end of May, 3 lakh units were repurchased. Repurchase means they bought it back. At what rate? Opening NAV less 2% exit load adjusted for dividend equalization. At the end of June, 70% of available income was distributed, not disturbed, was distributed to the shareholder. Dividend was paid to the shareholder. In respect of April to June, portfolio appreciation 425. Portfolio appreciation is 425.47. This also is wrong. I would want 425 April how much, May how much, June how much, because I have to calculate NAV in this question for April month, May month, June month. They have not given breakup. What happens we will see. April income I know, May income I know, June income I know. You are required to calculate income available for distribution, issue price of April, technically NAV of April, repurchase price of May, like NAV of May, and NAV of June. For NAV calculation, when I started, I said there are two formulae. First formula I explained, second I did not explain. Second will come in this question for 30th June. For 30th June, we will use the second calculation. Let me read the question again. We have 300 lakh units at an NAV of 18.75. Somebody is entering mutual fund in April end. I need NAV of April end. Question is saying, no, you cannot, I'll not give you asset details and all. You do something else and calculate the NAV of April. Somebody is going out in May. Again, I want NAV. Question is saying, no, I will not give you NAV. You do whatever you want to do. I'm not going to give you NAV of May month also. Live online, guys. Is there any lag? Give me a minute. Okay, so May month they have given the income, June month also they have given the income. Somewhere I will do an approximate NAV of April, May and June, April, May and June, and then try to do the calculation. Working note 1, computation of, you will have to do it along with me, computation of income available for distribution. Income available for distribution. Particulars and 4 columns. Particulars, number of units per unit, total. Number of units per unit and total. income available for distribution, number of units, per unit and total. Income of April, how much is the income of April? This is in lakhs, 22.950. How many units are there in April? 300. Why are we doing this calculation? Understand some grip on as we proceed. Per unit, divide and get the per unit number. 0.0765. April month, the MF earned an income of 22.95. Approximately NAV will go up by 8 paise. NAV will go up by 8 paise approximate. We'll do the calculations and all at some time. NAV should go up by 8 paise if that portfolio appreciation breakup was there. That also I could have analyzed and got the NAV increase further. At the end of April, how many people are entering the mutual fund? 6 lakh people are having an entry into the mutual fund. Moment you enter the mutual fund, you will become an owner of this income also. Moment earlier reserves also you enjoy, new reserves also you enjoy. Whenever a person becomes a shareholder, the historical reserves also belong to him, futuristic reserves also belong to him. So what MF will say is, listen, add inflow from unit holders. Listen for a minute. Inflow from unit holder. How many people are coming? 6 lakh. These 6 lakh guy will give NAV and all. That's different. They have to give 7 paise towards their share of past income. Towards their share of past income. Why past income share? Because they will become owner of the past income also. They'll become owner of the past income. So whatever NAV I'm going to charge, in that one addition will be 7 paise. One 7 paise addition I will do in the NAV and tell them to give that money as a share of their past profits. Assuming somebody exits, I will tell them to take away their share of past profit. They can take it out and go out. With the share of their past profits. Multiply this. 6 into 0.0765. 0.490. Revised income of April. E06 now. 0765 will not change because that is not going to change. Why it will not change is it's not an extra income which we have earned. 306 units will go up, total will go up. Per unit if you divide you'll get the same number. Units will go up. Can you tell me the total? 22.95 plus 0.49. 459, no? Okay, sir. 459. 23.409 and this remains same. You need whatever I'm writing in bracket, not mandatory for you to write unless you want explanation. 7 paise. Now, I'm not sure on the accounting angle and all, but what will happen is I will technically pass a journal entry called bank account debit. Money comes in to P&L account 0.459. In the P&L 459 will go and balance sheet equity capital balance will go. Whoever is coming in, a portion will go to P&L, that is their share of past profit. That will go where? Go to P&L and balance will go to balance sheet. Accounting I'm not really sure, but this is what the logical interpretation is. Now income has gone up to 23. Next, income of May. How much income we earned in May month? 4 point. This will be enjoyed by 306 people. 306 people will enjoy 34.425. 34.425 will be enjoyed by how many people? 306. If somebody enters now, he has to give April income, May income. Somebody exits, he will take April income and May income. He will take away April and May and go out. He will take away April, May and go out of the mutual fund. How much is this per unit? Point. Calculation is fully logical. Only thing is I don't see any practical utility. Any doubts on this? Total income of April and May. April and May put together. April and May put together. Divided by, sorry, you can put a total itself. How much? 0.1890. Live online guys, you keep typing it. 1890. 1890. 1890. Any doubts on this? This is the income of April and May put together. What is happening in the May end? How many people are going out? 3 lakh units were repurchased. What is that exit load and all? We'll see later. Whoever is going out will take away their 18 paise and go out. Will take away their share of past profit. You will give them 18 paise towards the share of their past profits, towards the share of their past profit, less outflow to unit holders. Outflow to unit holders minus 3, 18 paise you will have to give them. You have to give them 18 paise. You have to give them 18 paise. 5, 6, 7. They will go out with their share of past profits, and which is very logical. I was their owner in the month of April, May. Whatever you earn, I deserve my share during the April and May month. Just because I'm going out in May and you declare dividend in June, I cannot be said that I will not be given my income. So you have to give me my share of income in the month of May if I'm going out. If I come in, contribute both April and May. Revised amount. Revised amount. E03 per unit remains same. Per unit remains same. 57.267. 267. Clear? Person is going out. Person is going out. He took his income. He took out his income. June, whatever you are earning will be enjoyed by 303 people. Will be enjoyed by 303 people. June month, what is the income? 45.450. 303. 303 people. 0.1500. 0.1500. 1500. Did anybody exit entered in the June month? Any entry exit in June month? No. Total of this is income available for distribution. Every person is deserved to get 34 paise. You can distribute 34 paise to any person who entered in April, before April, and continues till June. If you have entered in May, still you will get this because you have contributed past some money, and now I will give you back 34 paise. How much I am declaring is the next line, but I can give you how much? 34 paise to every unit holder deserves to get 34 paise as the share of their income for April, May and June. What is the overall total? 1071 less dividends paid. We have paid some dividend in this. Percentage they have said dividends. How much the dividends paid? 70%. I'll repeat again. April income was earned. Person came in, he gave a share of past profit. May we earned. April and May together, I gave it to person who exited. Assuming everybody exits, entire money will go out. Entire money will go out. June, no entry, no exit. Put together 34 paise is available. 0.339, which is approximately 34 paise. I can give us dividend. How much dividend we are paying? 70%. Do 70% of this. 339 into 70%. 339 into 70%. 2373. 2373 per unit. 70% we are doing. Balance is called retained earnings. Balance is the retained earnings. Whatever is distributed, NAV will go down by that amount. Whatever is left over will increase the NAV value. Will increase the NAV value. 102.717 into 70%. 719019. Retained earnings. Retained earnings. Balance is the retained earnings. Leftover is the retained earnings. 30.8151. 0.1017. This is part 1 working. Now, approximately, if I want to know the NAV, there is some extra calculation. Approx NAV is, there is some appreciation and all. April NAV is opening NAV plus extra 7 paise. That should be the approximate NAV. Exact and all I can't do. There is some more adjustment. I'll explain the adjustment. May NAV is opening March, 7 paise of April and 11 paise of May. Approximate answer. The NAV should go up by the amount of dividend income per unit. Should go up by the amount of income per unit. Should go up by the amount of income per unit. Any doubts on the calculation till now? Any doubts on the calculation? Next, working note 2. Computation of issue price of April to issue price of April, repurchase price of May. Issue price of April, repurchase price of May. Issue price of April, repurchase price of May. April price and May price. April and May price. NAV as on March 31. NAV as on March 31. NAV would have been given in the question. There's a word called dividend equalization. What is that and all? I'll explain. 18.75. Income per unit of April. Income per unit of April. 0. NAV should go up by the amount of income. Income per unit of April. The technical meaning for this is dividend equalization. Why dividend equalization in some time? Income per unit of April. Income per unit of April. Income per unit of May. Not applicable. Column not applicable because we are doing April calculation. Income per unit of May. How much is the income per unit of May? 1125. Now, point is very simple. Any doubts first on these two numbers? Question says, I am going to 6 lakh unit at opening NAV plus how much? This 2% is an entry load. 2% is a entry load adjusted for dividend equalization. What is dividend equalization is You contribute your share of past profit. Contribute your share of past profit. Contribute dividend equalization. Already some money is there in the P&L. This I have to give to existing people. You are coming in, and then later you will say give dividend to me also. If I enter into the mutual fund and dividend is declared in June, I will also get dividend. So I have to contribute my share of dividend equalization. I have to contribute my share of dividend equalization. So this total is called adjustment for dividend equalization. Whether you are entering or exiting, it is add only. Entry also add, exit also add. When I say add, get the value and then it will become an outflow. In exit, it will become an outflow. In entry, it will become an inflow for the mutual fund. 7 paise I have to pay to the person who is going out, or I will collect from the person who is coming in. Apart from this, entry load is added in the issue price. Exit load is deducted. Exit load is deducted in the, that is a different story. Entry and exit load is a different story. If no entry, no exit load, this is the approximate NAV. Moment you put a total of this, you get the NAV of April, NAV of May. April and May NAV is just this total, that's all. Apart from this, one important point is in redemption price also income is added. In issue price also income is added. Redemption price will ultimately become my outflow. Issue price will ultimately become my inflow. That's a different story. But for calculation purpose, I have to only add. I have to add. Next, entry exit load. Entry load, exit load. Entry load and exit load. Entry load and exit load. What does the question say? Let's see the word. It says issued 6 lakh unit at opening NAV plus what? 2% load. At the end of way, opening NAV less 2% exit load. Entry 2% load, exit 2% load. Entry 18.75 into 2%. This is entry side, other one is exit. 18.75 into 2%. 0.375 minus 0.375. Finally, you will get the issue price or repurchase price. Issue price or repurchase price. Issue price or repurchase price. Whoever is coming in will have to contribute 18.75, his share of past profit and 2% entry load. His share of past profit will go to P&L. That is why we added an income available for distribution. Person who is going out will take April income, May income and go out with that. He will take April and May income. Any doubts on this? Let me know the number. What is the number you get? 19.015. This is the price to be paid by the person entering the mutual fund. What is he paying? Opening NAV, extra 2% and extra 7 paise. What is the other option? Calculate daily NAV. Why should I do all this headache? Calculate daily NAV. On the NAV, you can have 2% load. Load is a different story. Entry, exit load is a different story. That you can do it on anything. But first, you normally calculate NAV. Why all this approx calculation? What is the other answer? Sorry? Entry person 19.2015. Exit person 18.564. Any doubts in this? If load was not there, March NAV, income per unit of April, April NAV, income per unit of May, May NAV, income per unit of June, June NAV. But in June, there is that appreciation and other things. So I have to see what is to be done with all that. Also, there is some entry load, exit load is coming. All that, how does it impact the answer? We will see. Any doubts on this? Any doubts on this? Can we proceed? Clear? Next. Which the 2% exit load? Okay, there's a doubt. Should this 2% be done on 18.75, or should it be done on the number which you after add this, after adding? Ideally, I feel it should be on the number after addition, not on 18.75. It should not be on 18.75. Just for to check the wording, I put this in Chat GPT and they did the calculation not on 18.75. The calculation was done on 18.75, added that 7 paise, added the 11 paise, and that 2% was calculated not on opening 18.75. It was calculated on the first calculate the NAV and then add 2% or deduct 2%. That's the ideal answer. We are following what ICA has done. We are following what ICA has done. Ideal answer is not on 18.75. It should be on 2%. The 2% load should be on first calculate NAV. What is NAV? 18.75 plus 7 paise plus 11 paise. If it is May, then after NAV is calculated, deduct 2%. If it's April, after NAV is calculated, add 2%. Would it lead to a big variation? Not much, but logical, not on 18.75. I am going ahead with whatever our institute has done. Any doubts on this? Clear? Next, working note 3, computation of June NAV. Computation of June NAV. June NAV. June NAV. I'll give the formula then explain. NAV is equal to existing net assets plus, I'll first give you the formula then explain the logic, plus items increasing net assets, items decreasing net assets, opening units plus new minus redemption. I'll explain the logic in a minute. Existing net assets, items increasing net assets, items decreasing net assets, opening plus new minus redemption. Opening plus new minus redemption. This is my formula 2 in NAV. I did not discuss earlier. I was waiting for this question to be done to discuss that formula. Opening plus new units minus redemption. Minus redemption. Listen for 2 minutes and then you write it. When we started in April month, listen for some time. What was the NAV in April month? Starting 18.75. Listen, we started with this story. 300 into 18.75 was the net assets, and 300 units we had. NAV was 18.75. I don't understand all of this. Only thing I understand is if money comes in, net assets go up. If money goes out, net assets go down. This is the only thing I understand. So 6 lakh people came in. Whatever they gave, net assets go up. 6 lakh into whatever they gave. 3 lakh people went out. Minus 3 into whatever they took out. April I earned some income. Net assets go up. May I earned some income. Net assets go up. June I earned some income. Net assets go up. Portfolio appreciates. Net assets go up. Dividends paid. Net assets go down. Dividends paid. Net assets go down. I don't understand anything else. Only thing is, did money come in or money go out? Today I have 300 into 18.75. 6 lakh people came in with whatever dividend equalization, entry load, whatever. They gave some number. Take that number as it is. That includes their share of dividend and all. They came in with their share of money. People went out, they took away their share of money. In April, you earned some income, net assets go up. May, you earned some income, net assets go up. June, you earned some income, net assets go up. Portfolio appreciates, net assets go up. Portfolio depreciates, net assets go down. Portfolio depreciates, net assets go down. Dividends paid, net assets go down. Expenses paid, net assets go down. Income earned, net assets go up. Only thing I understand is, am I getting inflow or is there a outflow? Is my asset value going up or is my asset value going down? I don't want to get into term like dividend equalization. All that is not my worry. In my calculation, I will add now. It's right. 300 into 18.75. 300 into 18.75. Denominator 300, numerator 300 into 18.75. And I'll explain the formula again one more time. Logic is very simple. Existing net assets are net worth. Existing net worth, understand, is net worth. Any P&L credit item increases net worth. P&L debit item decreases net worth. Any balance sheet direct inflow increases net worth. What is direct inflow? Equity infusion, equity redemption. Mutual fund, whatever they are redeeming is like redemption, equity redemption, and whatever is coming in is new issue of equity. How many people came in April? 6 into 19.2015. Denominator add 6. Denominator add 6. 6 into 19.2015. There are something else to be added also. 6 into 19. This 19 includes their share of income and all. We will not separately consider that now. Their share of income is already considered in this. How many people are going out? Minus 3. Minus 3 into 64. Denominator minus 3. Denominator minus 3. Plus April to June, what is the appreciation put together? 425.47. April to June appreciation put together. Appreciation put together they have given. I don't know the breakup. I'm not interested in it. 425 point. This is right formula. This will give you exact NAV. There's nothing wrong in this formula. Only problem is I could have done this even in April. If you had given me the breakup of appreciation till April. Till April, if you had given the breakup, I would have done April calculation. 425. How much is April month? 22.95. May month 4.45. June month 35.45, and one outflow is there, dividends paid. One outflow is there, dividends paid. Items increasing net assets, items decreasing net assets, increasing net assets, decreasing net assets, items increasing net assets, decreasing net asset. One outflow is there. Outflow is what? I paid dividends to my unit holder. And this is the logic for NAV falling by the amount of dividend. How much dividend did we pay? 71.9019. 71.9019. You can do the calculation. It's a lengthy calculation. Finally, you will get the NAV. Finally, you will get the NAV. This is accurate NAV. This NAV which you are calculating is accurate. Earlier one is not accurate. April, May was not accurate NAV. This is right formula. Existing net assets, increasing net assets, decreasing net assets, increasing net assets and decreasing net assets. I'll give you the answer directly. Write it. Let's not spend time on this. 20.2670. Answer is 20.2670. Let's not spend time on calculation. Is there a doubt? Correct. We have added. Which income we are adding here? This 22.95 is for 300 people. It's for 300 people. In this 19.20, you added the income of only 6 lakh people. You added the income of only 6 lakh people. Income is sitting in 19.2015. What are we adding is 6 lakh people. 19.2015 is what? 6 into 19.2015. Apart from that, I earned 22.95 for how many people? 300 lakh people. That also will add to my net assets. I am not adding separately this 459 also. This 459 I am not adding, because this 459 is part of the 22.9015. If I add 459, then it is double counting. Any doubts in this? Final number, let's not worry about it. 20.2670. Calculation later at home you can check. Any doubts on the concept? I'm more interested on the concept level understanding. Practical world, no use. Exam 100%, it may again come back because already tested multiple times. Earlier also they were testing, now also they continue to test. The word dividend equalization is because you equalize the dividend by contributing your share of past dividend or taking away your share of past dividend on exit. and when the later dividends are paid, automatically amount goes down, automatically amount goes up, amount goes down or amount goes up. Clear? Any doubts in this? Any doubts in this part? Able to understand this? Clear? So here what has happened is NAV has gone down to what? Our NAV has become 20.2670. Any doubts in this? Clear? Ignore the number calculation. Concept level have clarity. What is concept is existing net assets. Existing net assets. Items increasing net assets. Items decreasing net asset. If you speak to a businessman or speak to your parents, they will only understand this. Okay, we had so much net worth. Net worth goes up. Net worth goes down. I don't understand profits. I don't understand dividend equalization. I don't understand anything. Only thing I understand, money came in, money went out. Money came in, money went out. Money comes in, net assets go up. Money goes out, net assets go down. Everything else is of no use to me. If expenses paid, reduce it. Income earned, increase it. Dividends paid, deduct it. Dividend earned, increase it. Interest earned, increase it. So all of addition for any item which leads to cash inflow or increase in directly the asset value, which is appreciation. Direct increase is called appreciation and real income is called your cash increase. Any doubts on this part? Any doubts on this? Clear? Can we proceed? Okay, I have one more question which I'm not doing now. It is question number 27. This will need some understanding of a formula called current yield. I will be doing security valuation. After that, if time permits, I'll come back to this, or after security valuation is done, you can try this question later at home. Question 27. I wanted to do it in the class, but better to do it after doing security valuation. With this, segment 1 and 2 of mutual fund is over. There are 3 segments in my material. The third segment, we will come back after doing portfolio chapter. I have to be solved in class, but after portfolio chapter, we will come back after doing portfolio chapter, because there you will learn an item called as Sharpe ratio, Traynor ratio, beta, standard deviation. All that some of you have already done AFM, you may understand it, but some of you are fresh learner, you may not understand if I do it now. So I have a practice of doing this later. We will come back maybe after 5-6 classes once portfolio is done. Clear? I will now revise entire mutual from the beginning, concept 1 to 21, concept 1 to 21. And if some of you have tried at home yesterday, you would have got a comfort saying that okay, just going through the concept book itself will help me in revising everything. Somebody still wants to do with the problems, then your extra notes will tell you that okay, read concept, read that extra note of every question. Note is your own notes, your own notes. If you make your own notes, I do concept 1, go to question 1, question 2, whichever question, I read the note. Note is clear to me, I don't solve the problem. Note is not clear to me during revision phase, let me try solving that problem. Let me try solving the problem only if it is possible for you to. Ideally, I should only be doing concept and tell you this is the adjustment and leave it. But if I do that way, many may not get grip. So in class we are doing. Later you cannot do all problems. You will not have the time to do question. Let's now come to revision. We are starting at 10:13. Maximum 10 to 15 minutes it will take for me to revise this. We start with mutual funds chapter. We initially learned that mutual fund is basically an instrument which is going to collect money from lot of investor, participate, invest money as per the investment objective, earn returns for the investor after recovering their expenses. Because there is a recovery of expense comes our first concept. MF return has to be more than the return which an investor wants. So MF return is equal to own return divided by 1 minus initial expense ratio plus annual expense ratio. When I'm explaining, you will not look at that screen. Even student who watch it in recorded mode, you only should see me. I'll be in the side, you only see me. Don't look at the screen. I'll keep moving. I'm not looking at the screen and explaining. You also need to have that grip. Other option is if it's with opportunity cost. With opportunity cost, we do what? Cost benefit analysis. Benefit is if you do mutual fund investing, you can increase your professional income. Cost is reduction in the income. Your income could be on the which income? The investment income could be on the lower side. Second concept, holding period return and annual return. Holding period return, what I get back minus what I give divided by what I give into 100. What I get back? NAV1, D1, CG1. What I give? NAV0 divided by NAV0 into 100. If it's the annual return, you just need to do into 12 by M in the formula, into 12 by M in the formula. This can also help me in calculating the holding period, which we saw in many questions. Annual return is equal to holding period return into 12 by M. M is the balancing figure, or 365 by D. D is the balancing figure. Any question specifies 1 year consists of 360 or 365 days. Please do the calculation in days. But when you do in days, one headache is, should you consider March 1 to March 31 as 31 days, 30 days, 29 days? I don't have a straightforward answer. I feel one day ignore, one day consider, but that also did not work in one question which we solved. Dividend payout plan means dividends are regularly paid to the unit holder. Our formula is usual: NAV1, NAV0, D1, CG1 divided by NAV0 into 12 by M. Without 12 by M, that's our wish. Dividend reinvestment means extra units are allotted. Closing value minus opening value divided by opening value. What is closing value? Closing units into closing NAV. Opening value, opening units into opening NAV. What I get back minus what I give. What I get back minus what I give divided by what I give into 100. Dividend rate is to be applied on face value. Dividend yield is on opening NAV or closing NAV. Opening NAV means your investment value. Opening NAV is technically your investment value. 4 types of plan: growth plan, no change in number of units; bonus plan, units will change. What do we do? Date, opening units, bonus ratio, units allotted, closing units. Other option is dividend reinvestment plan. Under dividend reinvestment plan, date, opening units, percentage, dividend in rupees, reinvestment NAV, dividend in units, closing units. This reinvestment NAV is the post dividend NAV. What is post dividend is NAV will fall by the amount of dividend once dividends are paid. NAV will fall by the amount of dividend. Return for close-ended scheme, NAV1, NAV0 is replaced with P1 and P0, which P1 can be more than NAV1, less than. At premium means it is more, at discount means it is lower. One example was there. Ideally, you should have done that example at home. Taxation impact, cost of acquisition of bonus unit is taken as 0. STT is not a tax deductible expense. Effective yield, ideally we do under the formula 12 by M. But that is not logical because time value of money is ignored. Other option is to IRR approach. For IRR, one positive, one negative NPV, calculate the IRR, and whatever IRR we are calculating, that is called as effective yield of the investor. Front end load is an extra load on the entry of the investor. The percentage can be calculated as public offer price minus the NAV, divide by either of the two numbers. Divide by A or divide by B. A minus B divided by A or divided by B. Exit load, NAV minus redemption price divided by, I feel NAV, I say either of them, NAV or redemption price. NAV calculation, one formula is market value of all assets minus value of all liability divided by number of units. The second formula which I discussed just now, opening net worth, items increasing net worth, items decreasing net worth divided by opening units, new units, redemption. Note for formula 2, net assets will increase due to portfolio appreciation, dividend received, income earned, fresh inflow will decrease due to portfolio depreciation, expenses paid, redemption, dividends paid. All this will reduce the value. No link between NAV units and number of shares of mutual fund. Impact of events on NAV. NAV will not go up, will not go down just because a person is entering or a person is exiting. NAV will fall by the amount of dividend. Any reinvestment of dividend will happen at revised NAV post fall. Revised, every small word will have implication. Okay, even you can't even miss out on one word. I may not be able to explain everything when I explain first time. Now I can explain everything. Revised NAV post fall. This is because dividends are declared, NAV falls, and post that reinvestment happen. Total yield is what I get back for 3 funds put together, what I give for 3 funds put together, divided by what I give, divided by what I give into 100, no 12 by M, because holding period can't be calculated unless everything is invested on exact same day possible. Then exit strategy, if there is no exit load, sell all your underperforming funds and put everything in the overperforming fund. In case there is an exit load, calculate proportionate loss in return, compare with the exit load. What is proportionate loss in return? Return of the best fund minus return of my fund into balance days by 365. Balance days by 365. Cash balance computation, able to track inflows and outflows, calculate the cash balance. Not able to track it, don't need to calculate. How will you calculate cash balance? Record your all transaction, get the closing cash and record it as one of the asset in the balance sheet. Dividend income on equity share. On my investments, the income which I get will be on original shares. Extra bonus are this, if they allot, the allotment should happen before dividend declaration. I can get dividend even on those. If it's happening afterwards, I will not get it. Afterwards, if it's happening, I will not get. Dividend is declared and then shares are getting allotted. Dividend equalization. Dividend equalization is your purchase NAV is opening NAV plus entry load plus dividend equalization. Redemption NAV, opening NAV minus exit load plus dividend equalization plus dividend equalization. What is dividend equalization? Income per unit of April, income per unit of May, income per unit of June. And this is the format we follow. Income of month 1, add the inflow, total income, income of month 2, revised income, deduct whoever is going out. Same format I've copy pasted here. Revised income till month 2, income of month 3, income available for distribution, dividend distributed. Dividend out of realized earning. The term realized earning means dividends earned and realized capital gain. Dividend paid out of dividend is called D1. Dividend paid out of realized capital gain is called CG1. Is called CG1. Valuation of equity share. Simple concept. On my entry date, what is the index value? On the valuation date, what is the index value? Cost into closing index value divided by index on date of investment. Other one, bonds valuation. We'll do current yield and then you can practice that question 27, or if I come back, I'll see later that. Expense ratios, basically question 27 also has an adjustment on expense ratio. Expense ratios, calculate expense per unit, and once you calculate per unit, divide by opening NAV, divide by closing NAV, divide by average NAV. We have taken exactly 9 minutes to revise this, and this much time will only take for me to revise any chapter. Any doubts on this? With this, mutual funds is over. I'll be moving to next chapter. Anybody has any doubts on mutual funds? Clear? Let's proceed then.